Oh, maybe I am starting the boot camp. What's up?
What's going on, Sune? Good morning. I
Good
didn't know.
morning.
We call that a cold open, right?
Well, yes. A heads up of a cold opening would have been great for whoever in the background put me in. I don't know if it was you or Rohan or
It
Elise.
was not me.
Whoever it was, hello. Good morning to you. But what's up, Brian?
Not much, man. Good morning. Happy Wednesday here. Glad we can be part of the boot camp for today.
Yeah, should be a lot of fun. And yes, a culprit has apologized for their mistake. That's okay. It's all right. But let's go ahead and, as a matter of fact, I'm going to need to start sharing my charts here on my end. Hopefully, you had a good afternoon trading session. You want to go first? Or you want me to go first?
You can go first if you're ready.
I am ready. All right, here we go. If I could have my charts shared, please. I might have to get a code
I
to
got
go
you.
ahead and make this easier.
I got you.
Thank you. All right. Yesterday, you guys know I'm a degenerate, and you guys know I was having a lot of fun with the future. So yesterday, I went ahead right before bed. I was like, oh yeah, $4,000 level. I'm gonna go long a contract. So instead of one, I went long two contracts, and then I put my stop losses, for my stop loss and also my take profit here, 8 points above. So it was cool because I went to bed around like midnight, and then I guess at like 1 o'clock in the morning, I went ahead and took profits in my sleep, like Bill Gates. We both make money while we're knocked out. But here's where things got interesting. Apparently, I also went short two contracts. I didn't know that. I didn't know I did that.
You went
While I
short without knowing it.
swear to God, hand to God, because I went to
That concerns me, Sune.
I agree because it could have been really bad. Thankfully, these are micros, right? So it's whatever. But yeah, I went long two, sold two, and then the same exact spot I went short to, like I'm a god of trading, which is interesting because if I was awake, that's a nice little short for 7 points. And then as you can see, while I'm in my sleep at 2:30, I'm in the negative and I don't even know it, right? Then I come back down to profit, come back to negative, and I don't even know it. I wake up this morning to see if my profit hit, my limit hit, or my stop hit, and they're like, "Oh, you made money, but like you still have unrealized gains." And I'm like, what do you mean I have unrealized gains? And then I just woke up and covered here, as you can see, at 7:30 in the morning. So it was a fun little experience in the futures. Just thought you guys would enjoy how dangerous things almost got. But anyway, now that we're here, I'm looking to possibly go ahead and go long if we get all the way to 39.50s. I'm going to keep an eye on like these trend lines and different things like that in the future. So let me go ahead and get my execution labels out here and that as well to make it a little prettier. I'm going to kind of keep an eye. I think I like the 1 minute at the moment just for that quick action. And you can see yesterday, I want to talk about support turning into resistance. So you can see the whole day thus far till up until about 12:15 p.m. Eastern. You had this 40-10 that held as support. Then it finally went ahead and cracked. And you can see a crack here at 12:15 and the retest at approximately 12:17. Tested it, couldn't get through, and then we just bled to the downside. Then later on, I was busy doing other stuff, but this was beautiful. Comes back to 40-10, and the VWAP is there. Can't get through, and you're starting to make lower highs here, and it just continues to the downside. So we'll keep an eye and see how things work out. But now, obviously, again, broke through, retested it, held, broke down, support, and now my computer is just... Can you guys still hear me or no?
Yeah, I can still hear you. You did lag a little bit there, like you were going to drop. So
yeah, why don't you, let me see. Hang on a second. All right, we're good. That was weird. My monitors all just blacked out and came back. I don't know where things are. But anyway, and you can see that's still continuing to be an area of resistance. So, but for me, I want to go ahead and wait till the 39.50s. I need to definitely start and refix my computer stuff here real quick. But let's go ahead and head to the SPY here. That definitely threw me off. Not all my monitors are black except this one here in front of me. Let me see here.
You want? I can take over if you want to restart real quick.
Let me just go through these real quick, and then I'll go ahead and have you hand it off to you. But here we go on the SPY. You had the 400 level that just was a pain to break cleanly, but once it did and it retested it, we just kind of bled all the way down. And of course, the previous close is an area that can act as support or resistance, and that's where you kind of found some support along with the 395 area. And to the upside, we went once again. So now I'm going to kind of keep an eye on it. This 393.66, I do expect that to be an area of a balance. You can see that's what happened on Friday in the morning session, but that we will continue to see. If you like the upside and if that's where you believe it's going, A crack of 400 and then a retest might be the move for you on SPY. Let's go ahead and take a look at Apple. Apple just never gave us a fill at that 150 level yesterday. It just kept going up, and then it finally came down, but then it was a little too late for that bounce that we were trying to get itself on Apple. So now we kind of keep it in check, see where it wants to go. I don't really have a clean level in terms of a bounce. Maybe you can go ahead and try the 148.50 area. That could be somewhere near there where you can find some support, but to me, it's not the cleanest, but definitely something to keep an eye on. Coming back to here, Netflix, I mean, it was just kind of consolidating, and then finally broke through the wedge to the downside here. We can kind of keep an eye on the 300s to see if it wants to go ahead and test it. Obviously, we're $9 above, but if you believe in the long side of things, 312 break can be interesting to the upside on Netflix. And then let me go ahead and quickly bring up DWAC because obviously, well, Ryan, you are a psychic because you talked about how it could very well be a sell the news type event. And you had President Donald Trump file for and announce his, running again and things like that. And here we go. You got that move to the downside on DWAC. So for me, the only place I'd go to try to buy this would be maybe like the $20 level, but I don't see DWAC having any catalyst to run on up to the upside on that one there. And then let me just quickly talk about Tesla. That $200 level was just a pain, especially the 201. It didn't exactly bounce off of 200. It was kind of like a 201 where it rejected, and then we finally made a move to the downside. And downside we came to about the, 192s, I believe is where we bounced off of. As in now, obviously pre-market, we are well below those levels. So for me, the next area is about 189 right over here is an area that I expect Tesla to get a little bit of a bounce. And then from there, you can take a look at 186 or so.
Your futures chart, by the way.
Oh, wow. Okay. Well, that was fun. Sorry, chat. Two of my screens are blacked out. I did not know that. Hopefully, those of you that are audio learners went ahead and listened to what I was saying. But just quickly, 189 here on Tesla, I expect to be a little bit of a support area simply because it bounced there on Monday. Around 11 o'clock, we can come back and test it. The 200s were a resistance area right here on Tesla. And you saw the reject right over there. And then it's hopefully on the SPY. You guys caught the fact that I was talking about the 400. It dropped 393.66 is an area that I expect for a little bit of a bounce. I'm going to go fix my life and get my together, and I will be back.
Okay, sounds good. I will go ahead and take over here. I'm going to take over where you left off at DWAC here. We talked about this yesterday. We talked about this being a potential sell the news event. A lot of the times when you get the kind of hype that we had about this potential announcement, we had, of course, a teaser about the announcement coming at some point in the future. There was obviously some ambiguity about what that announcement might be. And now we actually know. In this case, like I was saying yesterday, DWAC has proved to be a decent trading vehicle for intraday trading. And the way that we've handled that is we've tried to use support and resistance coupled with some other fairly tried and true methods like using a VWAP indicator or looking to the left and finding out, where it has some key levels and then trying to trade it between those levels. Holding it overnight exposes you to an entirely different amount of risk. And this is what it is. So what this means, first of all, right when we got the announcement, right when the pre-market session opened, this stock obviously spiked to 31, but that spike was short-lived. In fact, it didn't even really last 2 minutes and came right back in. And now that the news is being digested, we're actually taking the next leg lower here. So what does this mean when the market actually opens? Well, this can still go either way. I wouldn't be surprised if this had some bounces today. I also wouldn't be surprised if you got trading opportunities out of this today. But for all of those people that were buying yesterday intraday, hoping to sell at a bigger gain here today, they might be disappointed. And one of the things that I would be looking for is a wave of selling because the thesis for this which was in fact the announcement, didn't really play out to the long side here. Now, obviously, the opposite is true if you shorted it. And in this particular stock, seems to be one of those stocks that conjures up emotions with people, right? People don't necessarily like this person or what the company does, and as a result, that can lead to some pretty significant selling. So, in any case, this might be in play today. One of the things that I want to look at is how does it actually behave after the opening print? Does it just feel like massive sell waves over and over and over again? Does it find a bottom? Does it give you a tradable level to actually go off of? That's yet to be seen, but we'll take a look at it here during the open. Mitch, glad of you to join us.
Yeah, what's up, man? Ready to get into the market action. Just setting up my screens here, so I'll be
No
able
problem.
to share some screens in a second, but
No
it's
problem.
a
And
wild day.
Zunaid is restarting his computer. So he should be right back and should be able to join us.
Restarting, or did he buy a new one? Because I heard that there was one that flew out the window yesterday, but that's just what I heard out there.
Okay, well, he did not go into details about a computer being ejected from his home. We'll have to ask him when he comes back.
Joking.
That could be a funny story, Mitch. That could be a really funny story.
Definitely. It would be. Honestly, I one day just want to, like, we're gonna definitely make sure it's safe. But one day, I think we just need to chuck a PC out of a window and see what people's reactions are on the ground. I would love to see people just be like, "Whoa!"
Do me a favor and don't
Did you
hit
just
any
see a
of those
computer
people.
just fly?
Don't hit any of those.
Yes, that's why I said
people
we're going to be
because you
safe
might have
about
trouble.
it. We're going to be safe about it. Yeah,
Okay, cool.
we'll definitely take out an insurance policy that day. But
Okay, and you have some a little bit of lag here, obviously, with your video,
little lag
with your video and your audio. Yeah, you're hearing me late.
Oh, I know what happened there. I was opening OBS, so OBS has a tendency of taking up my computer processing. So you might have got a little lag there in between.
Mitch, I think one of the things that Zunaid and I didn't have handy is going to be the agenda for the boot camp today. So I think if you have that handy, if you could run through that, Voodoo, we'll go ahead and get you those boot camp speakers here today. I'll have Mitch run through the agenda, and then we'll pick up with some of these stocks.
Yeah, I got you. Let's go ahead. Let's run through some of the agenda, some of the learning that we'll have today on the stream. And definitely, guys, there's 361 of you guys. If you guys enjoy getting stuff for free, hit the like button. There's too many times where in financial education, you'd be paying for a boot camp like this. Just kind of stating that right off the back. But let's take a look at the agenda today. There's a lot to talk about, right? Well, chapter 1, Benzinga live trading. You guys know where you guys are at. Definitely smash the like button for that. But after that, what do we got after that? We got Seasonax, right? We'll be getting into conversations on seasonality. Definitely take a look there. Dextron, we'll be talking with Gian DePochi. Of course, that's going to be fun, talking about different areas, whether it be like commodities. You can talk to everything on Gianni. I love talking to Gianni. And one of the things that I like about him is he really follows kind of the relative strength and looking for what areas and industries are making moves. Chapter 4 brings you to Capital Markets Laboratory, and you don't want to miss that. That's going to start at 11:50. And then, of course, the CME group. You guys know the CME group. We have them on all the time in pre-market prep with Blue Putnam. Well, we'll have somebody else joining us from CME group. But, of course, you guys can get insights from CME group all the time. We'll put up a link while they're up, and that's going to be Chapter 5 at 12:55. Then we'll go into some options with Robert Roy. I definitely like Robert Roy. He's definitely one of the best out there. And what I like about him is that he keeps it simple. You guys will see he'll be sharing some charts. You guys will follow along with his charts and get all the action from Robert Roy. Then we'll be getting into Chapter 7, where we have a sponsor, and we'll let you guys in on a little secret a little later today. So we're keeping you out on that right now, but we'll let you know a little bit later today. And then Chapter 8, what's the deal with the US dollar? Don't miss that. You guys want to find out what's going on in the US dollar. Definitely going to be affecting what's going on also in the markets. It seems like the dollar has been in the headlines more than before. And maybe you're a Forex trader or thinking about Forex. Well, you don't want to miss Chapter 8. Of course, the US dollar, multi-decades high. What are the risks, the benefits? What does well with the dollar up? What doesn't? Find out. Chapter 8 all on today's boot camp agenda for November 16. Right here, Benzinga. Smash the like button, team. Let's get a little learning action today. And guess what? We got our man Zunaid in the house, so definitely smash that like, hit the sounds. Let's get it going. Sound the alarm. It's time to get towards some live trading action. And like always, team, one of the things that we try to teach here with live trading is process, right? Because there's too many out there where you'll see different streams. And trust me, there's plenty out there. I'm sure you probably have seen some of these streams before where they're all about the money made, but not the process. That's not going to benefit anybody, right? Because at the end of the day, I'm not sharing my money. I don't think Zunaid's sharing his money, and I don't think Ryan is either. But one thing we can teach you is from our experience, and that's what we do right here on this show. Win, lose, well, we can't guarantee that it's going to be on one side of the stick, right? But one thing that we can do is show you how we bounce back from losses, how we go ahead and attack different strategies. Do we have different tools in our belt? That's the important thing. Take a lesson. Like I always talk about SWOT, strength, weaknesses, opportunities, and targets, right? What are you trying to learn? Same thing. Learn from us. Zunaid's strength, weakness, Ryan's strength, weakness, myself. What is my strength and weakness? These are all important lessons that you can take to your own trading and definitely get that up move. Now let's get right towards the action. I'll get towards the stock. Who wants first here? I'll let you guys start taking control on the stocks.
I do real quick because I just kind of want to run. I don't have much. I want to run through it. Zunaid,
Of course,
I think
my
we should
friend.
go again because we started a little bit early and we had a monitor issue. The one thing that I did want to say about that schedule, though, someone please, I'm going to be tied up around 1:30. Someone please ask Robert Roy if he likes the Rob Roy drink. It's one of my favorites. It's a Manhattan made with scotch instead of bourbon. It's absolutely delicious.
That sounds delicious.
And I've never actually met someone named Rob Roy, and I've drank and served plenty of those. So someone please ask him if he likes that cocktail. Now let's get down to brass tacks here. I was just talking about DWAC a little bit, so I just want to quickly summarize it before I move on here. We said yesterday during live trading that DWAC might be a sell the news event, and be careful with it. It looks in the pre-market here, at least, that's exactly what happened, right? Of course, Trump threw his hat into the ring last night for a presidential run in 2024. That was the thesis behind the trade for DWAC here. We're seeing DWAC sell off here this morning. So it does look like this was a sell the news event. Now, the one thing that I did say also here this morning is that just because it's sold off doesn't mean that there's not going to be trading opportunities in this. However, keep in mind what your technical levels are, keep in mind support and resistance, and keep yourself protected, because we've seen in the past this stock likes to swing wildly, and in some cases some of those swings don't make a lot of sense. So okay to trade it, but just really be careful. The first thing that I want to see here is how does the opening print treat it, right? I actually expect it to come in a little bit. Question is going to be, where does it actually find its footing and possibly reverse? So we're going to watch for some of those things. The other thing to keep in mind here is that we actually got the retail sales number. The month-over-month retail sales for October came in at 1.3% versus a 0.4% estimate. So this number came in hot. I believe that the percentage for a 50 bips raise in December went down 5% just after the release of this number. It's going to be harder for the Fed to reach their 2% target with retail sales remaining hot. So keep that in mind. We got that piece of news here this morning, and that might affect the broader market throughout the course of the day. With that being said, we should be able to have trading opportunities on some of those ETFs that we've talked about, like SQQQ, TQQQ, even some of the microchip levered ETFs like SOXL and SOXS. So we're going to keep those on watch today. Those are going to be very liquid and able to execute day trades, and we'll monitor those along with the broader market here. Also worth noting, Bitcoin selling off here a little bit, down at 16,200 on the Bitcoin futures. Now, as far as the movers tool go, we're actually quite light here with some of these plays. Remember, I have this to filter out stocks that are under $1. So to the long side here, we've got a couple. Grab is going to be the first one here. Now, Grab reported earnings last night, which is why this is up, right? Grab holding shares are trading higher if the company reported better than expected Q3 results and raised its 2022 revenue guidance. So we popped here. We went as high as 368, and then we really kind of fell back into this support area between 353 and 357. We've actually broken beneath that here. So again, the same thing. We're up 12% here in the pre-market session. We want to wait for this to find footing. The last thing that I want to do is be undisciplined and chase trades that are immediately going to pull back as soon as I buy them. So I do have one of these other levels marked off here at 336. We'll see if we get all the way in there. We're currently under VWAP now. One of the things that I want to wait for on Grab is a high probability setup or a higher probability setup than where we sit right now. So we're going to be watching that out of the open as well. Next one here on the list is going to be Zim. This is Zim Integrated Shipping. They're up 8% here in the pre-market. Zim Integrated Shipping Services are trading higher after the company reported better than expected Q3 EPS and sales results. So it looks like we did just briefly trade above that 28.50 level. Looks like we had a pre-market high here of about 28.78. Still seems strong. Same deal, though, out of the open here. I don't feel great about this in terms of a continuation, so I wouldn't be trying to execute any type of gap and go or any strategy like that. What I do want to see is, again, same thing with all of these stocks here today. It's going to be a common theme. Can we get these to come into any type of support level? Can we minimize our risk on the entry and try to capture any type of reversal? Any trades that get taken today, if we do find setups, are not going to be held overnight. So know that going in. We are just trading these things intraday. We're just flipping them back and forth. One more thing to keep in mind here is going to be Target. We had Target report earnings today. Target is down 15.8% here this morning. Nasty day here for Target. A couple of things that they were saying there was theft and inventory. So they said that I think it was like 400 million. Let me go to the news feed here and get you that actual number here. The one thing about Target, let me go ahead and change that back to Target. Sorry about that. One thing here about Target is that, again, we may bounce here, but that's not a given. So we want to see how this stock actually trades, and we want to see if this has a larger effect on the market or perhaps other retailers. So just running through the things here. Target shares are trading lower after the company lowered its Q4 expectations, citing the increasingly challenging environment. Remember, we heard from Walmart yesterday that said the consumer's pocketbook was stretched. Mitch gave you that quote in the morning. Looks like we're seeing some similar stuff here at Target. So we'll keep that on mind, and we'll also watch to see what other stocks this affects. Now, Zunaid, are you ready to go here? I think you should just go from the top. How's the computer holding up?
It is looking pretty, and all four are good to go. So let's go ahead and turn it over to me. And yeah, it's a new hoodie. Thank you. It's a new hoodie, chat. They said it looked like a wizard. It goes up a little more, but then I'm scared I might I don't know, choke myself. Not into that. But
real quick, Zunaid, I just want to address this comment here from Lisa Lee because she's spot on. Great job, Ryan, about keeping the politics out, only about trading DWAC.
Oh, absolutely.
That's what we're all here for. We're here to trade. We trade stocks for companies that we don't like. We trade stocks for companies that we don't really know about because there's a trade setup, and we trade stocks that have political leanings. But the reality is that we're all after the same thing. Whether our opinions differ, we're all after profit. So for me, bringing the layer of politics into the trade doesn't do anything but cloud the trade. I'm going to try to keep it as tactical as possible. Trading a stock does not mean I endorse that stock by any means at all, or vice versa. Not trading something doesn't mean I don't endorse it either. This is about process. This is about being tactical. And at the end of the day, it's going to be about profits. I'll trade anything that I think I can make a profit on, but I will also try to keep myself safe and try to understand some of the larger levers that are affecting this particular trade. I appreciate you saying that, and I appreciate you recognizing that. We always try to do that. We always try to be as straight down the middle as we can.
Got it. So what you're saying is if you go long DWAC, you're voting for it. And if you go short, you're not. Got it. Understood. I appreciate the clarity.
Way to ruin it.
Do you expect anything else from me?
No, at this point, no.
Let's go ahead and check out Netflix here. If it goes ahead and pops above 313, which was yesterday's session high, I'd be interested in going along, keeping an eye on this 305, 304 break, possibly get a retest of that 100. Gonna have a really dumb trade coming up here on Target. Since you mentioned it, that 150 level, let's just see if I can get a fill at 150. Let me go ahead and actually move this. There you go. and we'll risk about 50 cents or so. It'll be a quick $30 miss or hit type of trade on target. Is just calling it out for transparency purposes. Let's go to Tesla, though. That $200 level continuously getting rejected, especially that 201. Now, obviously, we're below yesterday's high, or excuse me, yesterday's low as well, around that 192 area. And then if we go ahead and come on down to this 189, I'd be interested in going long on Tesla just to get a little bit of a scalp. And then, of course, the next area after that would be about the 186s on TSL. On SPY, and again, we're just going over it one more time here. On SPY, if it goes ahead and cracks above 400 and holds, I'd be interested in going long. If it goes ahead and comes back down to around this 394, 395 area, I'd be interested in possibly looking for a scalp, but probably not. We'll keep an eye on it, see how things react and how the market wants to behave itself. We've got about 4 minutes left to go, so we've got a few more tickers to talk about.
I do want to address one
What's
question, if that's okay. It won't take me long at all. Janine is asking, Ryan, will the dividend announcement for Zim sustain some of that price increase until the ex-dividend day? So basically what you're asking, they declared a $2.95 dividend. And the question here that you're asking, is that going to keep the price elevated into the ex-dividend day? Unfortunately, there's no way for me to say that for sure. One of the things that I will say is that it's definitely a great thing that they announced a dividend, or declared a dividend. How many people are actually going to buy and hold this, and what effect that's going to have on the price is something that is yet to be known. Keep in mind, we're up 7% here. So even after that, it's possible that this comes back in a little bit. Maybe some of the people that are trading it don't necessarily have a dividend capture strategy or aren't looking for the dividend anyway. And the fact that the stock is popping is enough for them to exit. So I take that as good news, but I can't say for certain if that's going to keep the price elevated. Nonetheless, great question, because you're asking a question about the news and how that's actually going to affect the stock. Let's watch this and remember what we see here for the price action. Great question.
Hendricks asking, whatever happened with futures? Well, we're still trading it, even in my sleep. Even if I don't know I have a position as I sleep. I mean, I still can't believe that happened. I woke up and I was like, I'm happy to be profitable, but this could have been really bad. Imagine if I was short, which I was, and it was like the CPI number that came out. And ripped. Oh my God, that would have just been ugly. Would have lost 10% of my count just like that. Anyway, on the futures, though, we talked about the 40-10 level and how crucial that's been in trading, not just, today, but just yesterday. You can see so many resistance and bounces and support and all that good stuff. But for me, I'm waiting for approximately the 39.50 area to go long, risking about 5 points to the downside and trying to get some profits on the 10. Let me see if those orders are still good here. If I switch accounts, it should show you. There it is. So excuse me. First, I'm looking to go along 39.60s while risking about 5 points and looking to get 10 points. Then if that fails, I'm going to look to go along 39.51. Same situation, risking 5, looking to profit 10. So always looking for that 2-to-1 profit on the futures. And again, for the folks that are just joining us for the first time, this is my first time trading, or second day now trading on TradeStation futures. So, I'm just exploring with it, having fun with it. It is real money, so it's not like it's play money. So I still have emotions if I lose money, and I still feel like a god if I make money. So just full transparency on that one. But I'm playing the micros, so just taking a contract at a time and trying to build up the account, trying to build up my mistakes so that I can learn from them. We're about less than a minute away from the open, and the main ticker that I'm keeping an eye on is just going to be Target, simply because of that 150 level that I'm looking to get filled on. And then let me go back to this. This part does get annoying, but here we go. Less than a minute away from the open. Probably going to take an L on this trade real quick, but we'll see how things play out. Are the futures quotes lives? They should be. I can check and see if they're not.
And real quick, while we're waiting for the market to open here, one more thing to keep in mind. Jay Rice, spot on as usual. Good morning, Jay. Thanks for joining us again. Saying that the MU news is hitting semis hard. Just for some clarity here, Micron announced today that in response to market conditions, the company is reducing DRAM and NAND wafer starts by approximately 20%. Versus the fiscal quarter 2022, fourth quarter 2022. So this is the news that's affecting it. SMH, SOXS, SOXL will be affected by that. Great call there.
Target had just been way below the 150, so I had to go in and cancel it because that trade just would not have made sense. How are the charts on TradeStation? I don't really use them. I use TradingView. I'm not quite sure. Trading view is delayed for me. Maybe it's because you didn't pay for live data. I don't know. But regardless, we'll check it out. Let's see what's going on with Apple here. Oh, hell yeah. I'm going to look to go short Apple here on at around 149.97 with a stop loss of 50 cents to the upside. So I'm going to give it about risking $60, and we will look to gain $60 as well. Maybe a little less. There we go. But yeah, looking to go short Apple at the 149.97 area. Let me go ahead and make sure my E-Trade's open. It is. So I got to open up everything else too. Try the ES, not the micro. Yeah, that's when I lose the back of my shirt. Or the shirt on my back. All right, let's go ahead and take a look at the SPY. SPY currently going nowhere, obviously, just in a minute, since it's only been a minute since the open. Tesla testing that 190 level to see if it can find some support there. I'm expecting a crack, which means you should go ahead and go long. Checking out Google. Google, by the way, $100 rejection. Beautiful yesterday. Gave you about, what, 13 cents or 17 cents of a drawdown? And then it just beautiful, beautiful move to the downside on that one. So if you're looking to go long anything in terms of Google, take a look at the $100 level. If it cracks above and holds, you should be looking pretty on that one. And then let's see, there's another ticker I wanted to talk about. Oh, let's check out Amazon. Oh, yes, I do have contracts of TSM still. Let's see what those contracts are doing. Ooh, they are down 14%. Here's TSM. All right, let's see if that 80 holds. It said no for now, poked below. Let's see if it kind of finds support in that area.
Remember, it was that 82.50 level yesterday. In the pre-market here, TSM was a bit higher. Didn't quite reach that 82.50 level. I think it topped out at about 82.30 something or other. But that level to the upside seems to be important. Looks like we're in free fall here.
When you said there should be a huge green candle, what did you see and what made you want to short it? Mandy, great question, but what exactly are you referencing and who made that comment to help us out? Because I don't remember doing it.
DWAC here, just because we just finished talking about it being a potential trading vehicle. One of the things here, one of the first steps here that I want to see is the range here between 23.42 and 24.50. Let's call it 23.50 to 24.50. So that $1 range looks like we're actually breaking above that 24.50 here. Next stop would be if we can get around this 26 handle. I would say probably 26 to 26.50. We might actually try to test 27.51. We're 20 cents above the 24.50 area that we've kind of marked here. I have no position in this, just kind of watching to see how it trades. Would like to see some increased volume here for a potential long side move, but we're just not getting that here. Now a yank back to that 24.50 level.
Let's keep the politics out of it, chat. Okay, I see what you're saying. I don't remember saying there should be a huge green candle. I believe what I said, let me go ahead and share my charts here, is that if it comes up to the 149.97, I would look to go short, which I am. You can see I'm looking to sell equity here, and my stop loss is 150.55, and I'm looking to take profits around 149.51. And the reason for that for me is simply because the 150 level has been kind of resistance in the past, and you've also got the previous close at around 140.04. So I was looking to get a move to the upside, get me filled, and then let's come on back down.
And as far as grab goes, good shout there. Good shout there, Beck. Becca, sorry. Grab here, we were up on earnings. What's the interesting part here is that Grab immediately sold off out of the gate. We did bounce off this 336, so we actually traded down to 330, but we're bouncing pretty good here. Volume looks good and a lot of buying interest here. What I would really like to see is if that continues and we can actually take out 368. We're about 15 cents away from that here, maybe 13 cents away from that here. So we'll see if this can materialize. Strong bounce here and Grab again. No position in this. That happened quickly.
Moo,
that was right at the level we identified.
Moo, you've got free speech, no question about it, but I'm also power hungry, so here's a timeout. Enjoy it.
Sinead.
Let's see what else we've got. Taking a look at Netflix, rejecting from VWAP at the moment. I would love to try to go long Netflix, but currently in that range. Shelly says free buddy.
Yeah, he's freed. He actually was playful this morning. We threw his toys around and he ran up and down the hall and chased it, so that was fun.
That's
He's
cute.
probably napping now.
This might be the first time I've gone so long without a trade. This feels kind of different.
Yeah, it does.
Let's see. You've got Meta here, the 116 is the high a day, about 114.50. Timeout time. Yeah, go ahead and stare at the wall in the corner.
SOXS, strong move here out of the gate. Really, before I trade these, though, would love to see more of a more of like a tradable area. Right now, I want to see it settle. It's kind of back and forth right now, but I think that these might actually give us some decent opportunity here today. SOXS going back for the highs. We'll watch that. Keep watching it.
Dun, 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 dun.
What's up, guys?
What up?
Hey, Mitch.
What up? What up?
That's what we call discipline. Hey, look, I mean, I can't find a trade, so I gotta click some buttons, right?
Right.
And so we'll
If
put
you
in a
don't have a
user in timeout.
If
What?
you don't have a trade, preparing some of your other charts for it, not a bad idea.
Yeah. SPY though couldn't come up to the 398 level. It's coming right back down. Apple could not get to. We missed our entry on Apple by approximately 9 cents on the short, but the thesis worked out. Unfortunately, the fills we could not get to profit from that thesis. As Apple's coming to the downside here. XOXS. Make sure I don't spell anything else.
Man, I should
Sure.
I'm just
I
saying.
wanted to short TSM overnight. I should have done it.
We were just
What
saying
good
that
is shit?
TSM kind of ran towards that 8250 level that we identified yesterday. Didn't quite get there, but really just broke down from that once we got the retail sales number.
Yeah, I think people were chasing yesterday getting into this one. Had no business being up that high off of a Warren Buffett buy.
I'll be honest, dude. I agree with you. I don't know what idiot was chasing it. Speaking of which, I'm going to cut my TSM calls for an 18% loss here.
I was going to say, Sinead, is that a joke there? Clever. Nicely done. I caught it.
The big thing there is just whenever Warren does these buys, it usually doesn't push that day. It pushes usually like a week or something afterwards. And
yeah,
so,
and in fact, I believe yesterday or the day before was the deadline for those filings, and it could have happened, I think, up to 45 days prior to that. I'm with you there, Mitch. It's not as if
just like another easy short today, Para, it jumped like 9-10% yesterday off of the Warren Buffett ad, and now look where that is. It's nowhere. You know what I mean? Nowhere where it was. And so it was probably only Warren buying this yesterday. So I'll show you guys that here on the left-hand side. Para down straight from the open.
What date did he buy it?
Yesterday. Well, not specifically
it was
yesterday. It was announced yesterday with the 13Fs. So it pops up there to the 20. And that was an easy short opportunity. Easy short opportunity. This is where I think people get lost in the sauce with Warren. They're just like, oh, Warren bought it, I want it. Well, I mean, that's okay, but you got to do it at the same levels that Warren's getting it at. Warren's telling you 2 days, 3 days afterwards, right? Well, where do you think he got Para? Probably down at 1670s while you're buying it up at $20. And then he's going to let it come back to his entry and buy some more. So you just give him some money, really. I mean, that's just how it works at a lot of the time. So you got to be smart with those things, especially when you're hearing like Para. Definitely, these are stocks that don't have any growth story. So I don't know what he sees in Para, but he likes it. Apple's another one that it's kind of interesting there. If you expect TSM to go back into the green, then maybe Apple goes into the green. But if TSM goes, I think, to the red, you'll probably see Apple drag down with it.
You've got INM. I'm keeping an eye on INM as that one's coming up. Broke 4 approximately about 422 or so. I'd be interested in buying it around 362, give or take. I'm not chasing all the way up here. I'm not going to do that. But yeah, if it comes back down to about the 362 level, I'd be interested in going along this one. But for now, it's just making that move. Here is Google consolidating above VWAP here. So if you like it to the long side, risk reward isn't bad. You're risking about 50 cents or so. Let's see what the market's doing. Currently to the downside below VWAP here, below the 398 level. Hasn't broken low of day of 396.50s just yet. Let's come on back to Google and see how that's behaving. You've got Amazon here looking to possibly test 95. Could be interesting to see if they go ahead and bounce it off of the whole number there. Let's see what Netflix wants to do. AMD rejecting that 7470 crayon drawing that we've got. Coming to the downside, it's also looking to close below VWAP. About 3 minutes left on this 5-minute candle here. Tesla making the lows a day. Let's see what we got. What we got.
MU trying to hold its lows here after what we were just talking about. See if it can hold 60.
Let's take DWAC out of it. Let me pull up the futures here on my end as well. 85s. 85s. Yeah, comparing it to, I think it was Paul that asked this question. Comparing it to what I'm seeing on Thinkorswim on the quotes, it does look live to me. But I'll have to check and see what data is going on. Good morning. Good morning. Might have to cancel this. Yeah, I don't know if I'm going to get filled on this 150 level on Apple, so I'm just going to go ahead and cancel it. You've got Google. We talked about if you believe it to the long side, not a bad risk reward. Keep an eye on that $100 level, though, because that should end up being resistance if you can clear 99, especially there. Netflix.
Yeah, Dan, good call here by Dan, as always, by the way. Grab couldn't get to the 363 line. Way too big a float. 363, I have it marked as 368. Those are pretty much the same thing. Unable to show that strength, and then immediately reversing, and then the support that we've laid out here didn't really hold. So it looks like we're challenging the next support, which is going to be right down here. Let me go ahead and mark that off. We'll see if this holds up. For me, in terms of a long side trade here, this is really going to have to turn around and show a change of momentum before we take this long here. So I'm not trying to buy any falling knife, even with the catalyst for earnings. Definitely want this to shake out. Great spot there, though, Dan.
All right, SPY looking to make a move above. Got a little bit of a wick, but still hasn't gotten above the VWAP at the moment.
All right, just made my first purchase in the wealth-based fantasy trading to try to beat my man AB. Of course, this is just a competition that you guys have been probably following along with AB on his Benzinga Live, but this is just kind of a fantasy trading competition here. And I took BJ today. Why do I?
So Mitch, do you pick a new stock every day, or like a team of stocks, if you will?
For the competition?
Yeah, for the competition that you're talking about.
No, it's just literally like a portfolio challenge. So you can go, and what I like about it is you can actually go short on certain stocks. Not every stock, but some stocks you can go short on. So there you guys see it. And I said I'm bullish on BJ's because I feel like the earnings are expected to be good in wholesale clubs versus, let's say, like Target today. Even though Target kind of disappointed, we saw how Walmart got the jump on their earnings. I think BJ gets the jump on their earnings tomorrow before the open. But that's why I'm taking my shot there. Just took the starter. I can always add to the position, but just starting to get some of that exposure there into the markets here. I'm going to try to build up a little portfolio here to try to compete.
think one of our viewers, Jeff Dees, who shows up here from time to time, is doing pretty good in that challenge. I think he posted a screenshot. I'm pretty sure we're talking about the same challenge. Saw it here this morning. So love to see people from our group going out there and killing it. That makes me happy.
Someone asked about that other competition that I was doing. I honestly never saw where it ended up. So I'll check in there on that. But I stopped trading that comp. So it looks like I ended up towards 101,850. And position wise, I'll tell you guys that right now. Just give me 1 second. I'm trying to take
okay. I thought that was your ranking. I was like,
53rd. Not too bad. Out of, I think there was like 60,000 people in this.
Yeah, that's not bad at all. Especially with some of the issues that you had with the actual software itself.
Dude, you guys know how it is. I can share my screen so you guys can take a look at that here. So you guys can see it, and I'll do it right now. Just give me 1 second here. I know that you guys are taking trades, so if you guys have any trade, definitely you guys can talk about it. But here you guys see it, 53rd. You guys see the equity curve there. Got a spike, pulled back, then got another spike into it. Wasn't able to get past the high there, but 53rd, not too bad on the account. And you guys can see, but I stopped trading it too. So it was too much of a battle there. But the next one that I'm doing, we're doing this one right now, the wealth-based one. So I just did that, and I just got a little bit of that BJ there. So if you guys want to join this one also, Benzinga Fantasy Trading Challenge, you guys can join also. I'll share this link here so you guys can go ahead and join in here. But if you guys want to join in, it's just a paper account. Like always, this is just for fantasy trading competition. I'll let you guys know how you guys can join in on this also.
On Meta, I'm going to see if I can go short here, Meta. I'm going to take just a couple of contracts here. The 114 puts expiring this week. If this gets back above 115, I'll be out. I'm looking for approximately 113 or so on this one if I can go ahead and get it. Again, I got into the 114 puts expiring this week on Meta. My fill is 216 and 218. So my average is 217 as Meta continuing to flush to the downside. You can go ahead and look to the left here. Yesterday, you saw that 114.50 hold as support, held as support twice here in the first 15 minutes or so. Then we get to finally crack down above. Would not be surprised if we come back and test it. But as long as we don't break 115 to the upside, I will go ahead and stay in this trade on META. And we're up a solid 9%. Call your grandma, tell her you made it. But make sure if you did follow the trade, have your own game plan of profit, loss, and everything.
Tell her you made it.
Tell her you made it, baby. Thank you, thank you, thank you. Let's go ahead and check out Netflix.
One sec here, Zune. Jay shouting out, AB has TBLT in his fantasy. It's a tough day. TBLT, of course, had an offering. This, again, serves as a warning on why we really don't want to hold these stocks overnight. If you're going to take something for an intraday trade, especially if it's a huge runner, possibility of an offering on the other end of that, and you're seeing the devastation from that. So it's a tough day, but I believe in AB, and I believe that he can come back.
Let's see what else we've got here.
Nice job on Meta, Zunid.
Thank you, thank you, thank you. Hopefully we continue cracking to the downside. Kind of want to go short Netflix here as well, but I don't have the most confidence in it.
Market feels heavy here. We're rolling over to the downside.
Yeah.
VIX is down too, but market at the lows here. So be careful with whatever you take.
All right, we'll take a lotto here on Netflix because that's the only way I feel comfortable trading it, surprisingly. Let's see if we have any liquid options or not.
All right, guys. I took another one in that comp. I went short on ExxonMobil. Reason why I'm short on ExxonMobil is I'm starting to see WTI drop fast here in the pre-market and now into the open here. 84.94 pre-market low was around 84.70s, and it looks like oil dropping fast today. And of course, the Poland news didn't really hit the way that some people expected it to hit. It wasn't really Russia. So I think that you're starting to see some decline in some energy trades. I see energy down on the day. I'm taking a little shot there. But let's go ahead. We'll bring on AB. We're going to start wrapping up here. Anything you guys want to leave off with, we'll bring on AB in a quick second.
Go ahead, Ryan.
But no, I was going to say, go ahead, Zunaid.
So just a quick lesson on market orders. I looked to go long via puts, or short via puts on Netflix, and the bid and ask is 415, 430 on the 305 puts expiring this week. I hit the market order and I got filled at 583. So I paid about $1.50 more than what the bid and ask was. So let that be a lesson with market orders that we continuously tell you guys about. That's just really weird. So I'm going to call E-Trade and cry like a 2-year-old and see if I can get my money back.
Cry like a 2-year-old. Sorry about that, Zunaid.
That's all right.
One of the things that I'll be watching here today, Mitch, especially with the market behaving like it is I'm gonna keep watching these ETFs, right? Because no matter what direction the market actually moves, we should be able to capture some of that movement by going long. Don't even really need to go short in order to capture downside movement. So I'm going to be watching those ETFs here today. I'm going to be watching some of the news flow, and then I want to see how Lowe's and Target finish up throughout the course of the day. So those are going to be some of the things that I'm watching.
All right, we'll see what happens today. Like always, we're going to get AB on in just a few seconds. He's getting his camera ready here, and I'm trying to do another trade here. So we'll see what happens there. Trying to get some short here on, and I'm going to lower down the size here. There we go. Can I get it in here? There, I got it in there. GS, I'm short Goldman Sachs there in the comp. So these are all comps. These are all papers. Just want to make sure everybody understands. And that's why I didn't start mixing in my real trades there. But I'm bearish GS because you can see the banks have been topping out. Citi called out Bank of America and that they couldn't keep going on their last downgrade of Bank of America. So I'm thinking Goldman tops out here. I like the daily resistance outlook that I can risk towards, let's say, like 388 or maybe even 390 for this to come back towards at least 370. We'll see what happens there.
Couple of updates here. Looks like I did not get a bad fill. It was just the quotes are frozen. So if anyone looks at their 305 puts on Netflix, let me know what bid and ask you're seeing, because the bid and ask there compared to the 302.50 puts are just 10 cents off, which doesn't make any sense. So it looks like it was just bad quote, which is lovely because I can definitely go ahead and call E-Trade and complain. And I agree with you. I have a customer rep that helps me out every single time. So I do disagree with the E-Trade not having great service. And it looks like AB is ready to go. All right,
what's up, guys?
Good.
Nice
10% on those puts. I'm getting out.
What'd you say, Ryan?
Nice color choice on the shirt here.
Oh, you as well. I thought you said nice coat. I was going to say, how'd you know I wore a coat to the office today? Because people were making fun of me that I wasn't wearing a coat, even though it's starting to get cold here. So today I finally folded and wore a coat.
Look at these two guys.
I do have one more important question for AB.
Okay.
AB, the ice rink that they build behind you.
Yes.
Are you, when the next time that I come to the office, I am bringing my ice skates. Are you going to be willing to go out there and hit the rink with me?
I will, but that intimidates me, Ryan, that you're going to bring your own skates, because that means I can already tell you're kind of one step above me. I'm just going to go there and give me the dole, whatever size they have, and I'm just going to go. I can only do one thing. I can go, I can stay up, I can't stop, I can't, I'm like the guy that has to run into the wall to stop. But I'll go with you. I think it'll be fun.
Yeah, it'll be fun. It's not a competition, so don't worry about that. And I think I can teach you how to stop. We can do lessons on that. It'll be fun.
Let's do it. I can ski, and people have told me if you can ski, you can hockey stop on the skates. So I don't know, but my thing is,
opposite. I can skate, but I'm going to be learning to ski pretty soon. So
awesome.
We'll trade secrets.
We'll teach each other. All right, Ryan. Well, I'm looking forward to it. Looking forward to you coming to Detroit soon.
Yeah. Take care of yourself. Have a great day, man.
Will do. All right, guys. Welcome to the Benzinga November Boot Camp. I'm excited today. We've got a really good lineup. We have a couple spots throughout the day, too, where we'll be kind of just hanging out. I'll hop back on, and we'll have 30, 45 minutes where we'll go through some trades. We'll do some of that, but let's take a second here and go through the agenda. So coming on here in a couple minutes will be Christoph from Seasonax. Excited to see what Christoph is going to talk to us about. And then Chapter 3, we're going to have Direxion on with Gianni DePoci. Chapter 4, Capital Markets Laboratories. Chapter 5, I think CME may have been a last-minute cancellation, so I think that might be a 30-minute window right there from about 1 to 1:30 where we can kind of just go through some trades, take some stocks from the chat, look at some charts, take a look at the top headlines of the day, and then we'll get right back into the educational content at 1:30 with Chapter 6. Rob Roy will be talking about some options and some option spreads. Chapter 7, I think, will be another little window where we'll be, hanging out, doing our thing. And then at Chapter 8, we'll be talking with Nasdaq. Kevin Davitt, excited to bring on Kevin at 3:10 p.m. Eastern. Again, guys, smash the like before we get started. Without further ado, let's go ahead and bring Christoph on the stream. Christoph, how are you doing today?
Good so far. Greetings from Vienna, Austria.
Greetings from Vienna, Austria. Wow. So what time is it there? It's about 10 a.m. Eastern here.
No, it's 4 p.m. in Austria right now.
Oh, so you've already had a whole day. How's the future? What happens in the next 8 hours?
I'll try to give you an outlook on that, if possible.
Okay. All right. Well, I'm going to go ahead and pop your slides up, Christoph. Then you want to go ahead and give us just kind of a quick preview of what you're going to be talking about today?
Sure. Like we'll dig into seasonality. Like the last session had lots of action. Like I try to lay back a little bit, give you an introduction of seasonality in general, and like go around how it works, where it comes from, maybe it's a little bit more theoretically, and then we'll move on to dig a little bit deeper, go into the market and show you how you can maybe use seasonality for your trading in the future, for example.
Awesome. I'm excited about that because, I mean, right now we're kind of starting, a lot of people are starting to talk about, maybe this Santa Claus rally. We're getting to the holiday season. And after that, we're looking into the new year, 2023, the spring. So perfect time to be talking about this. Christoph, I'm going to go ahead and turn it over to you. I'm going to be hanging out backstage. If there's anything you need, I'll be right here. Just give me a holler.
Sure. I would say let's start with the session. And as I said, there's an agenda from my end. Of course, the first step, I will show you what is seasonality in general. Then we will switch over to a seasonal chart, to let you read the seasonal chart, which isn't that easy maybe for some of you. Then we'll dig a little bit deeper into the seasonality in the market. And then we'll go around not only annual seasonality, but monthly seasonality and event studies. And to move forward, we'll switch into a live demo showing you how to apply seasonality to your trading, because I know everybody of you is having a different trading approach. And I think seasonality in general is great to use as an overlay, as a single decision, whatever is up to you. So let's jump into the current presentation, starting off with what is seasonality in general. And it refers to predictable changes that occur over a 1-year period, which means we're talking about recurring patterns. Like our seasonality is recurring patterns, and I want you to help using those for your trading. Now, as you may know, there are different kinds of seasonalities, and they occur in indices, most known there. They are also seen in single stocks. They are in currencies, commodities, or even bonds. And there are different periods and recurring events where you can see those seasonalities. We will mainly talk about annual seasonalities, and that's why it makes sense to talk about the Christmas rally, which is really starting right now and giving us excitement days or weeks to the end of the year. But of course, there are still monthly, weekly, or intraday seasonalities, which are interesting too, but won't be part of the webinar today. And maybe as an add-on, there are recurring events, which are not bound to, let's say, events during the year directly. Most of you may know the saying, sell in May and go away. There are people telling me that seasonalities will not exist anymore because as soon as they are known, they will probably disappear. This is not true. In that case, for example, we go for the DJI, the Dow Jones. In the diagram, what you see here is if you were invested from November to April compared to May to October, you would have a cumulative performance difference of 3,000%. Knowing that number sounds weird, and we're talking from 1960s to today. So just make sure if you are investing in the Dow Jones, for example, it makes sense to focus on the DJI from November to April, not May to October, because there's mainly no chance to gain any profits for you. If we dig into the German market, for example, and it's more or less the same statistics. If you would go for investing in the DAX from November to April, it would deliver a better performance than continuously investing into the DAX directly. Because same saying here, selling may go away. Start investing in the DAX in November, and if you want to sell, do it in April. Don't do so somewhere in between. I'm probably a little bit too quick for you, because like my colleagues are telling me, slow down, Christoph. Sorry for that. This slide more or less describes what seasonality is and how you can gain profits out of it. Because there is a long-term study out there which examined 24 global factors of premiums, which tried to figure out which investment strategy pays off best, more or less. And seasonality was pretty good in that. And the result was seasonality was actually the best investment strategy. But as I said in the beginning, everybody of you has a different trading approach, as I guess. But I would suggest add seasonality whatever you're doing, because it's there for a while. It's been there for a while. You can apply it pretty easy. And I think there's a great benefit for you applying it to your tactics. When we're talking about seasonal charts in general, like if you are good at Excel, for example, you can do those charts on your own. It's pretty easy and simple, but there are still issues which some competitors maybe had, and maybe you had those issues too, because creating a seasonal chart has issues like there could be charts which do not have real price information. Like they show you how a stock would perform, but they wouldn't give you price information. The second graphic on the right-hand side would have no details. They would show you the return maybe in a single month, but they wouldn't show you how the stock performed on a single day. It's really hard to get a chart, like putting all that together. And that's an issue most of our competitors had in the past. And this was something why we came up with our seasonal chart. And the fact behind a seasonal chart is simple. It's historical data. Like, so every historical seasonal chart is based on historical data. Let's say we pick the last 15 years of end of day data and we try to pick that together into a single chart. That would be our seasonal chart. And a seasonal chart can be read like this. What you're seeing here on the left-hand side, a seasonal chart in our case always starts at 100%. And it shows you how a stock performs over a year, which means on the left-hand side, you're seeing a scale in percent. And on the vertical axis, you see a monthly scale, which is showing you a year from January 1st to 31st of December. The chart you're seeing here would be a seasonal chart, and you would see it starts at 100%. And for some reason, in that case, there are frequent earning surprises, which makes, on average, the stock rise until maybe May, then fall off again. And the interesting period here again would be October to December, like the year-end rally, or as heard before, the Christmas rally. So never forget, a seasonal chart in our case starts at 100%. The price progression is averaged over the course of the certain time, and it gives you a visual highlight of interesting investment periods. Like it gives you an information based on historical data, which you can then apply to your trading strategy, for example. Now, if we try to move over to relevant examples, this would be the S&P 500 over the last 25 years. On average, again, you would see it would start off at 100%, go sideways more or less. Then you have a strong period from March to end of April. You can forget summer, to be honest. Then you have a little drop, and from October to December, we again see the so-called Christmas rallies. Like the S&P 500 is really interesting from October to end of December. We are mid of November right now. Totally makes sense to go for that at the moment too. And it has a really, really strong fall rally. Now, this data range here is based on 25 years. So the chart itself displays the seasonal chart of the S&P 500 averaged over the last 25 years. And take care, you don't see price information here. You see percentual movements of the S&P 500. Now, most interesting parts, of course, as mentioned before, would be March or maybe September, October. The rest of the year, to be honest, you can decide if you want to be invested all day long, or if you become a swing trader and just invest maybe from October to December, sell and start in March again and drop out in May. What makes that happen? You outperform the S&P 500 directly by just being invested in interesting periods, for example. Now, the interesting part about seasonality is it appears not only in indices or in stocks, it appears in currencies, for example, too. And what you're seeing here is the euro to US dollar seasonal chart. And the interesting part here is the euro to the US dollar, it would be inverted for the US, of course, is really strong starting at the early in this year until late February, and it falls off from November to December. Interesting, like directly turn of the year, the money flows out of the dollar area and gets back again to the, because of tax reasons. US industries push over investments into Europe and then get them back directly a day later. And that's directly what this seasonal chart shows you, like a weakness of the euro at the end of the year and coming out strong January to February. As mentioned before, we got stocks, we got indices, we got currencies, commodities, soybean futures, for example. This would be a seasonal chart for 31 years in that case. And as you would see, like there's a peak in June for soybeans, but if you would go for that, and you could, depends on if you're able to have that trade, you should be starting investing in soybeans, like on the statistical side, end of September, because that's where low, like that's a low early in October. It's the lowest rate where you could start investing in that direction. Commodities, I know maybe not that interesting for most of you, but I just want to give you an overview on seasonality in all of the sections. And this, for example, goes for soybeans. Another interesting approach is a little bit different. We're not talking about the intra-year seasonality, but the monthly cycles, because seasonalities can happen, as mentioned before, not on a yearly base only, but maybe on a monthly base too. And what you're seeing here would be a monthly circle of the S&P 500. And what you see here in the middle of the chart at the zero would be the middle of the month. So what you're seeing here is, as it seems, like on the left-hand side, strong increase at the beginning of the month, then it's more or less flat, and then an increase end of the month again, which means there is a turn of the month effect. Investing into the S&P 500 at the end of the month makes more sense than investing in the middle of the month, for example. Now, visualizing that, if you, for example, would be invested like on the blue line in the S&P 500 from the 26th of a month to the 5th of the following month, and just skipping the rest, you would create, by the turn of the month effect, a really great outperformance to the rest, which means if you are applying only the turn of the month effect on the S&P 500, you can outperform the S&P 500. Red, as you can see here, rest of the time, there's no movement at all. So like, why would you be invested in the S&P 500 at the middle of the month, for example? And saying that, we're always talking about averages based on historical data. So this is just like back testing more or less, in our case in real time, giving you maybe an extra edge on how you can optimize your trades, for example. Like the monthly cycles, when you watch the international side, not only work for the US markets, they also work for indices in different countries. Like this, this displays, for example, a calculation from the 70s to 2018, and you see Canada, China, France, Germany, with all of their indices showing the return of the turn of the month effect if you would trade mid of the month or the turn of the month. And on average, or the difference between the trades would be around 7%, just applying one effect, turn of the month, to, for example, those indices, depending on the country which you are focusing on. So which tells me, or should tell you, monthly seasonal charts can be applied to indices too, which is an interesting part you can apply to whatever you do in your strategy too. And one more thing we should talk about is event studies. Now, monthly, like we have annual seasonalities, we have monthly seasonalities, intraday seasonalities, but event studies are a little bit different, which can be, for example, macroeconomic events like elections. It could be the FOMC meetings, for example. It could be expirations of contracts or holidays. Those events don't happen every year at the same time, but on different times, which means you have to approach that trades differently. An example here, which I'm showing you, is the German elections. This chart, honestly, is a little bit old already, but what is seeing here in the center of the chart would be the election day, 0. And as you can see, like a day before the election day, for example, on average, there is a movement in the DAX, in the German main index. So what we're seeing here is that event studies, in that case, elections, for example, do trigger the market before they happen, not after, which means in that case, one day before the election day, for example, on average over the last, let's say, in that case, 50 years, you would have the opportunity to go into the DAX and then drop out on the election day to avoid losses afterwards. Applying event studies to the S&P 500, for example, with the FOMC meetings gives you a different approach. What you're seeing here is the same chart, like the FOMC announcement is centered in the middle at the 0, and the most interesting investment part in that case is 2 days before the FOMC meeting. Again, so everybody's like watching the FOMC meeting, but from my perspective or from our perspective, if you're going for the S&P 500, for example, the most interesting time is 2 days before the S&P 500 meeting. The FOMC meeting. And that chart, for example, is based on the last 20 years, which means the FOMC meetings are 8 times a year, 160 events. And you're seeing here like the S&P 500 going up by 0.4%, which is a gain you can, of course, use for you. From my end, like when it comes to just the strategies or what you should know about seasonality, they deliver best results if you find patterns which really occur based on reason. There shouldn't be like patterns which just pop out. You have to find a reason where they come from. And it can be, for example, weather. As mentioned before, it could be harvest seasons, earning surprises, or it could be event studies. And the thing here is, how can you apply seasonalities to your trading? Sorry, I'm talking so much. I have to drink a little bit. Now, knowing that you don't have unlimited time, knowing that we're talking about historical data, I have to tell you that seasonality is no crystal ball which will show you the future, but it will give you a statistical advantage to your standard trading. So, as mentioned before, maybe, seasonality is based on historical data. It's not like not every year is following seasonality, to be honest, but seasonality helps you to estimate the development of a financial instrument over time. And of course, seasonality is a relevant factor in every single decision of a trade. And this is, from my perspective, how you can apply seasonality to your very personal trading. Sorry, I got the flu 2 days ago, and it's hard to speak for 1 hour straight. So 5 things you can do. You can do like use seasonalities as your single source of knowledge. I wouldn't suggest it, but some people do that. You could optimize your timing. You could try to figure out if an instrument you're interested currently has a strong seasonal period or it doesn't. And for example, you could maybe filter out interesting stocks you want to trade just by applying seasonality. The fun stuff or the good stuff here is it's not about being quick or something like that. Seasonality appears year to year. So you can take your time. You can apply seasonality to whichever instrument is interesting, create a short list out of that, and then apply your trading strategy. For example, some traders just use seasonality as an overlay. It helps them to decide if they want to buy or sell, for example. And of course, a selection, which I will show you after all, helps you figure out if I want to go in a specific market, which instrument should I go for if I'm interested in just a market. By saying that, from my perspective, like there's 2 things for you. Your time is the most important trading factor probably, and of course the timing. By saying that, I want to switch over to the application itself, and I hope the host will switch over there. If you are interested in Seasonax, I would just highly suggest register at seasonax.com. There's currently a 30% discount coupon which you can apply and is valid for the next 20 days if you're starting subscription. And what I will show you right now is how you can apply all those strategies directly in our application, going into detail on some stocks, commodities, which I picked out to show you. And I would ask the programmatic director to switch over to the application. Perfect, thanks a lot. So we are heading over now here to the application. What you are seeing right now, I'm within the application, and this would be my starting screen. So what can you see here? It's like you could search for any instrument available in our database. You have a screener, which I will continue showing you afterwards. You would see interesting patterns, for example, in the S&P 500 right now, in the FTSE, HDAX, Forex, and so on. You would also see latest news from us published, latest insights, which are research articles we are publishing on a bi-weekly basis. And you would find featured patterns. Those are hand-picked patterns, which are interesting right now. And if you are registering a no-paying customer, those will always be available for you. So if you're registering, you will find those upcoming patterns and you can apply them at any time. For example, Broadcom Incorporated, in that case, you would see a pattern which is starting did start yesterday, is lasting until the 18th of December. Pretty high annualized return, winning rates 100%, pretty good here. And if you are interested in buying the application, I will just show you where you could apply the coupon. You could directly jump into the subscription area and you could type in Benzinga 30, check, and you would apply directly a 30% discount on your first purchasement of any subscription available here. If you like, go for it. It's available for, let's say, I think it's 2 or 3 weeks. And I will now show you how you can actually directly use the application and how you can save time, because I know how much time it costs to do seasonal analysis if you go for your Excel sheets, for example. Now, as I mentioned before, you're seeing strong patterns here, and I want to pick one of those right now. I would go for the Berkeley Group holdings. If I would click that chart, I would jump directly into a seasonal chart. It's an interactive chart directly. And what you will see here, as you learned before, and hopefully can still remember, is a seasonal chart which starts as 100% and shows you the price movement over time. And as you see here, for some reason, end of year, the Berkeley Group holdings seems to have a pretty strong XMAS rally. As they published recently, they said they're on track as estimated and announced that they will meet their profit guidance probably this year. And as they said, what they said is the second half of the year is their strong half. Now, of course, if you would now mark the first half of the year, for example, Seasonax would directly give you back statistics of the pattern marked. In that case, let's say we go for the last 15 years. So I pick 15 years here, and we're using historical data for the last 15 years now. As you can see, the stock is going sidewards the whole first 6 months or so. Now, of course, the second half is stronger for Berkeley Group holdings, but in my opinion, for example, why not just skipping that and going for this really interesting visual pattern at the end of the year? And as I mark the chart, what I'm doing here is I start the pattern at the 21st of November until the 30th of December, and Seasonax automatically gives you back feedback and statistics on the marked pattern, which means if you were invested in Berkeley Group holdings for the last 15 years, just from the 21st of November to the 30th of December, you would have an annualized return of around 130%. 100% winning rate, what does that mean? The marked pattern for the last 15 years, all of the time, it was a positive return. So in the last 15 years, at the end of the year, the Berkeley Group holdings did return in this pattern an average return of 9.88%, which is huge from my perspective. Now, another approach which you can do here is You could switch to, let's say, 25 years. And as I do so, you see that the seasonal pattern, of course, does change. And again, the chart starts at 100% and is changing over time. If you try to figure out, if you want to figure out where are my seasonal patterns, in that case, it's pretty obvious, but you could apply the feature called detrended, which remove the trend from the calculation. It's just a visual effect, but you would see the seasonal patterns more obvious. I wouldn't like to be holding Berkeley holding groups end of August to September. As you may see here, most of the time we have a drop in that stock in this time. But again, here, end of the year, interesting period. That's what I try to aim for. So pretty easy to analyze a single stock here. But as another example, and maybe that's something you should know, seasonalities occur in different ways and at different times, of course. And what I read recently was around Estee Lauder companies. I think they bought, who did they buy? They bought Tom Ford. I think it's not through yet, but they did make an offer, and they want to acquire Tom Ford with investing around 3 billion or so. Now, that was released 2 days ago, talking about that during summer. But again, what we see here is a seasonal chart, of course. In that case, we have 3 interesting areas of the stock, which could be interesting for investing. Now, we see an interesting pattern here at the early beginning of the year, starting somewhere end of January, going to mid of February. And as you see, I just marked that area. I'm sorry. And I get instant feedback on that specific pattern. I do see I have an average return of 4.52 in this pattern, which is okay. It's a short period being invested. We are talking just of a few trading days in that case. Then we have a second interesting seasonal pattern, which happens here from early March to late April. But what I do see here, and that's something you always have to take care of, we are looking for patterns which occur more or less the same every single year. But what I do see here is that for some reason in 2009, we had returns of around 45%. And of course, a big return like that destroys all our statistics. Now, knowing that, we want to make sure that that pattern not only happened because of that. And what I can do here is I can just remove a single year. For example, I'm selecting the years which the seasonal chart is created on, and I would remove 2009, for example. But I would see that the pattern still exists, but of course, the average return, for example, is lower. Adding 2009 would be 5.12%. Removing 2009 would be 3.63%. And that's just showing you how easy you can modify or adjust seasonal charts. Maybe you want to remove the years out of COVID. Maybe you want to remove 2008. It all's up to you. And Seasonax offers you lots of approaches how you can use or try to use those charts. As mentioned before, we of course have commodities within our system too, and I want to start with gold in that specific case. In our case, I would pick the last 54 years. Like on gold, we have long historical dates within our systems. And what you could see, let's go for maybe 25 years as we did for the other stocks. As you would see how gold performs, interestingly, like there's not that much movement from late February to end of July. But as some of you may know, gold becomes interesting mid of December until end of February. Now, like this pattern starts at the end of the year and ends next year. That's why I have to approach a little bit differently here. I'll go for the 20th of December until end of February. And this, by the way, is the approach how you could use Seasonax with your tablet too. And I would go for end of February. This is from our perspective where gold becomes interesting. Now, gold is interesting for some of you maybe all the time. Maybe during the current time, gold is interesting too. If you want to go for gold, for example, based on seasonality, you should start before mid of December, because that's on a statistical base where gold starts rising until February. And some of you might know that there's a correlation between silver and gold, or even platinum. And what I can do here is, for example, I could compare silver to gold. I could not only display you the gold chart, which you're seeing in blue, I could add the silver chart. And you see they are pretty similar when it comes to seasonality. Both are starting mid-end of December, and like the rally of silver is even stronger until mid of February, but there is a weakness of silver to June. Now, if we would switch directly to silver, for example, we could directly see, let's go for like the last 25 years, going for silver here. Like as mentioned before, mid of December, rally of silver starts, ending sharply mid or end of February. Now, where does it come from? Of course, there's different reasons for that, but like silver is being used in various industries, and some of those might wait for the end of the fiscal year and start buying silver early of the next year to use silver for their production, for example. And that makes prices go up until the end of or mid of February. So if silver is something you're looking for, I would highly suggest to start before mid of December and not starting somewhere in summer or so, because as you see, prices start to fall June, July, very weak, and then rising again. And even if we would switch to a different view, like the last 15 years or the last 54 years, those seasonal patterns are still existing. Like they are shifting a little bit, but they're still existing. Now, this is the approach how you could work if you know which instrument you're looking for. Like you could type it in, you could click a pattern, you could investigate a financial instrument which is interesting for you. But of course, we have around, I think, 20 to 25,000 assets within our system. And our users approached us and said, sounds great, Christoph, but I want to know which instrument to look for in the S&P 500 right now, for example, or in any other index. So what we did is the seasonality screener. Now, what does that screener do? It has various universes within it, and you could jump to any of those, and we would give you back a ranking on the most interesting assets within those indices based on the seasonality. And where I want to start here is the Dow Jones, for example. Now, what do you see right here? I opened the Dow Jones as index, and as you see here, we have a start date. Now, the pattern is locked starting on the 16th of November, which is today. The historical data which we are using is 10 years, which means I can display here the constituents of the Dow Jones ranked by seasonality. And what you would see here directly is, for example, first one is Walt Disney, second Goldman Sachs, and so on. I want to go for the last 15 years. And what you could do here too is, what kind of patterns are you looking for? Are you looking for short patterns, 5 to 30 trading days, 30 to 60, 60 to 90? Up to you, depending on what your investment periods are looking like. And as I said before, you can use that analysis before you apply yours. Like you could, for example, try to figure out you want to invest for some reason in the Dow Jones, and you want to pick some trades for the future. Like you have a list here. In that case, first would be United Health Group Incorporated right now. And I want to shorten that list. That's why I will just display patterns which have a winning rate of 80% or higher, which means the last 15 years, that pattern occurred more than 80%. And we have a short list now of 3 stocks, and we saw that before already, United Health Group Incorporated. There is a pattern starting on the 16th of November ending on the 29th of December, like it's classical XMAS rally pattern, to be honest. 43 calendar days, number of trading wins, 13 out of 15, which makes it 87%. Standard deviation, 8.66. This is something I want to take a look into. That's why I would jump to that specific pattern. And where are we again? Like you see, the approach is the same as before. We do see the seasonal chart of United Health Group Incorporated. Like the pattern is already marked, and you could like adjust here visually. I would say I would go for this pattern if I would like to. And again, what do I see here? I picked the seasonal screener for the Dow Jones. I saw that United Health Group Incorporated could be interesting. Now, why don't I pick that, apply my trading strategies to it, and then decide if I want to go for it or not? Now, again, what do I see here? Annualized return, 102% over the last 15 years, 93% winning trades. I adjusted the pattern, to be honest. Average return, 8.5%. That looks pretty confident to me. So what will I do now in my Seasonax account? I will add that pattern to my patterns. Like by bookmarking that pattern, I will add it to my patterns here. You see like the patterns I added into my account over the last weeks. Why do I do so? It totally makes sense to manage all the seasonal patterns you have. I just added United Health Group Incorporated. You do see gold. I have Estee Lauder. I have some other stocks within my patterns. And I use it in a little bit of different way than probably most of our users do. I add them to my calendar directly. As you see, those are added to my calendar. I can do so by just adding it to my calendar. And that helps me to have an overview of all the patterns I have, which means in this month, for example, my patterns I added, I see that there is a trading pattern ending for me today. United Health Group Incorporated would be in 3 days. And since I applied Notify Me, Seasonax will inform me 3 days prior to this event that there is an upcoming seasonal pattern. And I can then decide if I want to buy it or not, like if I want to go for it or not. Now, this is one approach how you can use the screener. And there's a different approach using the screener, which is called the basket. I don't want to make it too complex, but what you're seeing here is I have lots of different universes which I can use, but maybe you have your own portfolio and you want to know if you want to buy more into your portfolio, which instrument should you pick, like on a seasonal base, for example. That's why I created my own basket. My basket, honestly, is around sports right now. I have Adidas, I have Callaway, Nike, Puma, Under Armour. Now, adding those instruments to my basket enables me to use my basket in our Seasonax screener. I have my own portfolio or like stocks which are interesting for me in my basket, and I can directly screen within my basket. And what I do see here is starting today, for example, for those 5, I don't see any interesting patterns right now. As you may see, like I'm going for 15 years again. My basket is just those 5 instruments. Starting date is today. Examination period, 15 years. If I would go here for a filter and just give me patterns with a probability of 80% and more, there would be no winners. So right now I wouldn't go for those and I would skip those. And that's what I'm doing here. Now, those are 3 different approaches which I just tried to show you. You could go for a single instrument directly using the search, switching over to that instrument, trying to figure out if there is an interesting seasonal pattern, and then decide going for that or not. You could even go for interesting trades within different indices, which means you can go for the Dow Jones, the Nasdaq, S&P 500. Depending on the subscription you're using, you have access to more different indices, for example. What we did add recently, I think it was 3 or 4 weeks ago, is, for example, we added the US sectors for the S&P 500 and the European sectors. For example, if you want to go for the S&P 500, but you want to focus on the financial industry only, you could approach this way. You would find the market financials. Again, you have a starting date of the 16th of November. You could apply the examination period, and you would get a ranking of the most interesting seasonal trades within the S&P 500 for financials. Now, there's a different approach for that too. Some of you might try to prepare for trades a week in the future. Now, what you could do here is you could switch for, let's say, 1 week in advance. You want to go for the S&P 500 for financials. You want to do those trades maybe in a week or so, or you want to be prepared. Like seasonality is pretty easy to apply. You have time for that. You can spend time on it. And I would, for example, go for the 23rd of November as starting date for my patterns. Now, what has changed here? As you can see here, the pattern start now is the 23rd of November, and the end of the pattern differs. In that case, for example, Lincoln Nation Corporation has a pattern which ends on the 6th of January, win ratio 67%, maybe not much of a winner. We can apply the same as we did before. We can go for a short list, for example, and what we have here is the top 5 patterns in the S&P 500 for the sector of financials. And we have those 1, 2, 3, 4, 5, 6, 10 patterns. What you see here, maybe I have to add that you have a rank. The rank is now added filter, like we had all the instruments shown here. Now we have filtered some out, and one interesting pattern could be State Street Corporation or maybe BlackRock, for example. You could, of course, rank those symbols, those patterns in a different way. I could go for the highest average return for some reason. Like I want to go for a higher average return, Berkshire Hathaway. Not sure if you can afford this one, but I'll show you anyways. You would then, as known as before, you're jumping back to the seasonal chart, starting at 100%, going more or less sideways over the last 15 years. And let's say in that case, pretty strong in the second half of the year. And that could be a different approach for the Berkshire. Okay, it's the B class, it's not A, so this is affordable. And for example, I'm marking this pattern here just for you for July for some reason. There's not that many investments during summer, for example. You want to go for Berkshire Hathaway. And I'm starting here on the 29th of June, ending at the 9th of August. Going downwards here, I see the cumulative profit, which is just like the pattern for every single year, like sidewards. And I see the pattern returns again. And maybe in that case, you want to figure out what's the pricing of those shares. And if you would scroll down, it would show you the details on those trades for every single year with the start date, start price, and end date, and end price, for example. So in June 22nd of this year, starting price was 273.49, ending 292.77, which was a profit in this year of 7%. And it would match not really directly the average return, it was higher, but you see like how this approach works for us. Now, going back to the starting page where everything started from our end, to summarize the application from my end, and I think then we can maybe switch over to a quick Q&A session. You have different approaches here. You could use the popular instruments which are available for you, jump to currencies, commodities, stocks, or indices. You could directly search for any instrument available here. Let's say if we go for drinks, in that case, we could go for Monster. Then we have the seasonality screener, your quick access to a ranking of constituents within indices or your own. You have a short list of interesting patterns coming up. You have the news, and of course, you have the featured patterns. From my end, this would be the introduction to seasonality and Seasonax as an application. If you're interested, sign up, figure out the free version of it. There's lots of things you can create, try, and do in free version 2. If you're interested to dig deeper, go for the Seasonax paying version. Like click up, go for a subscription, apply the Benzinga 30% coupon. And I hope that gives you insights on seasonality, Seasonax, how it works. And if you have questions, you can connect to me on LinkedIn, for example, directly write our support, or just give Seasonax a try and let us know if you like the tool or not. That would be my part from the application itself. And if possible, I would jump over to a Q&A question period. Sorry. If you're interested and have questions from your end. Thanks for watching.
Hey, Christoph, thank you for that. Let's go ahead and see if we've got any questions flying out of the chat real quick. If not, that was a great presentation. Like you said, we've got that Benzinga code. I'll go ahead and pop that in the chat as well. Thank you again for hopping on the Benzinga November Bootcamp. It was great to have you.
It was a pleasure. Thank you.
No problem. All right, we'll go ahead and wait for about 20 seconds, see if we've got any questions flying through the chat, because we've got a little bit of a delay. What's up, Jesse Kaler? Jesse Elite, how you doing, man? It's been a while. What's your favorite season to trade, Christoph? I got to ask.
My favorite season, like the easiest season to be honest, is around this time of the year. Honestly, but this is the season everybody's using, and what I can highly suggest is search for patterns which happen during the year. Like there are patterns earlier every year, for example, Adidas, Puma, for example. Those are interesting periods in March, April, for example. Then, of course, there's interesting patterns during summer. What I like to do is just like jumping from one pattern to the other, because I don't want to stick to a single stock, indices, for example. I want to like use my money wisely. That's why I tend to jump between patterns, to be honest.
Got it. Well, I love that, Christoph. I love the fact that you guys are doing what you're doing, kind of looking at these things, because, I'm reliant on guys like you that are smarter than me figuring stuff like this out, because I always see it and I find it interesting, but I'm like, all right, I'm not going to go out there and do all that research that it takes to find that stuff. So, Christoph, I appreciate it is what you guys are doing. Thank you again for hopping on the Benzinga Bootcamp this month. We'll talk to you soon.
Thank you. It was a pleasure.
Great. All right, guys, that was Christoph from Seasonax. Go ahead and check that out. Use the code in the chat again for 30% off with the Benzinga code. Excellent explanation. Couldn't agree more, Richardo. That was a great presentation from Christoph. Again, from Austria too, from Vienna. We're going around the world today, so you think, we're gonna get people from New York City, Austria, San Francisco, you name it, and I'm down here in downtown Detroit. Let me know in the chat where you guys are joining us from today. Just to give you guys a quick rundown for what's going on, we'll take a look at the agenda for the rest of the boot camp. So here in about 15 minutes, Chapter 3 with Direxion, Gianni DePoci will be hopping on with us. And then after that, Chapter 4 will be talking to Capital Markets Laboratories. We'll skip Chapter 5 for now. That'll be just some AB and chat hangout time. What we'll do during that time too is, and we can do this right now too. I want to check back in on our fantasy trading, paper trading challenge that we're doing right now. If you guys are new with us today and you have not joined us for our trading challenge, you have to. I actually just liquidated my whole portfolio, so I'm in all cash right now because I wanted to make some trades with you guys today on that portfolio. So we'll do that at well, we can do a little bit of that now. We can do a little bit of that later. We'll have some fun with that. Then Chapter 6, my man Rob Roy will be joining us. If you guys haven't seen Rob Roy talk, you got to watch what he does when it comes to options, spreads. Really kind of a genius the way he does his options trading. Way different than what I do with my option trading. And then Chapter 8, we will be talking to Nasdaq's Kevin Davitt. We're going to be talking about what's going on with the dollar. We're going to be talking about currencies and all that. So just an exciting show today. We've got a lot of great speakers. Smash the like if you have not already. But before we talk about our little fantasy trading, Detroit International City, thanks to Abe, exactly. we are going to, I'm going to go ahead and play this little pro commercial. And then when we come back, we're going to do our fantasy trading. We're going to take a look at the leaderboard. We're going to see what we need to do to get AB up that leaderboard.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.
Alrighty, guys, let's go ahead and get my wealth-based screen pulled up. Again, if you guys want to join me here, I'll go ahead and drop the link in the chat. So let me go ahead and show you what we're dealing with here. So this is actually this is my first time on this site, and I'll be completely honest. Like, obviously we're partnered together on this thing, but this is just me being candid. This is like really cool how we're able to do this kind of trading thing. We've got 380 players in here now. We're gonna get it up to 500 by the end of the week. We're gonna get it up to 1,000 before Thanksgiving. Again, this ends on December 2nd. You will get a free year of Benzinga Pro, which is a $1,200 value if you are able to finish in the first place. Right now, again, I'm on 26th on the leaderboard. I'm in the green though. You start with 100,000. I've made 2,000 so far. My portfolio's up about 2.1%. I'm going slow and steady. I don't know if my man Jeff Dees is out there, but I see you. You know, you've already made 6%. This guy's already made 20%. You can click in and see kind of what they're investing in. Okay, he sold everything. Oh, man, he made a bunch of money on this SATX. I don't even know what this is. So my thing is these guys that are going for too much too quick, they're going to get blown up. Well, actually, I don't know. This John guy seems to know what he's doing. He liquidated his whole portfolio. Maybe he's just trying to play those runners. But either way, I've got $102,000 of buying power. Again, this is paper money, not real money. What up, Gianni? I see Gianni hanging out. We're gonna be he's gonna be coming on in 10 minutes with Direxion. So Gianni, I don't know if you saw this, but we're doing this paper trading challenge with WealthBase. I'm gonna drop the link in the chat. wealthbase.com/Benzinga. Why did the price of bread triple? I don't know. Like at the grocery store or like some sort of a commodity you're talking about? All right, let's go to movers. Oh, Lowe's is your biggest market gainer of the day? There's no way. There's absolutely no way. Is that true? Advanced Auto Parts. Advanced Auto Parts is getting crushed. See, I was liking... Let's go... I don't know what this chart looks like. I was liking kind of the auto parts... Well, it's weird because... Okay, so here... And obviously these aren't the most like sophisticated charts right now. I'm not in my Benzinga Pro. But look at Advanced Auto Parts' chart. This is on a 1 year... basis, and it's gone down from like 240 down to 150 right now. Compare that to O'Reilly's Automotive, which is at like all-time highs. That's crazy. They're literally like O'Reilly's Auto Parts and Advanced Auto Parts are like the same store. I don't know if I've ever seen that big of a discrepancy between two companies that are literally like the almost the same exact company. But I had been kind of long the auto parts trade with how expensive new and used cars have been over the last year because of the chip shortage. So people are less likely to go out and buy a new car. They're going to want to fix up their car. But now you have the prices of cars coming down, but not mortgage rates, but interest rates have risen so much that it's now more expensive to finance a car. So again, I think people are going to be more incentivized to fix up their car. But I don't know what's going on with Advanced Auto Parts, unless O'Reilly's is just really like just eating Advanced Auto Parts lunch and saying, hey, yeah, we're benefiting as an industry, but we're getting all the benefit over here at O'Reilly, and Advanced Auto Parts isn't getting any of that benefit. I don't know what's going on. I'm going to need to go and do some digging on that because, again, like you typically don't see that. You typically don't see, UPS and FedEx, one going down for months and one going up for months, or you typically don't see, I don't know, you name it, like two names that are in the same category, really, really similar businesses, and that big of a discrepancy. So something interesting going on there. O'Reilly that much better, I guess so. The parts and car supplies are more expensive. Yeah, but I'm saying like if you, it's like Walmart versus Target. Yeah, let's check that out. That could be. I don't know if that discrepancy is as big. Wait, so wheat, the actual commodity of wheat, you're saying is triple the price of what it was when? AZO up 40. All right, let's check AZO. Should we buy some AZO? What is this? Oh, that's AutoZone. Oh, okay. So yeah, so AutoZone's doing well. Advanced Auto Parts. So it's really just Advanced Auto Parts not doing well. O'Reilly's doing well. AutoZone doing well. Walmart versus Target. All right, so Walmart's doing well. That makes sense to me as like things tighten, the more luxury. Oh, holy shit. I didn't see Target was down 13% today. All right. Should I man. I might buy some Target in this portfolio, a little swing trade. I'm going to buy some Meta today, down 4%. I gave my thesis on this. I'm going to swing Meta in this portfolio. Bam, $20,000 worth of Meta. Boom, order filled. Skip. 181 shares of Meta. Thank you. All right. How about NVIDIA? So NVIDIA reports earnings today after the close. Here's my thing. I don't think the earnings are going to be good, but the bar is already on the floor. Look, the stock's trading down another 4%. NVIDIA's come out and already, warned against guidance, all this stuff. I don't know. So here's the thing is I think maybe what's going to, my prediction for NVIDIA is going to be that the numbers themselves are going to come in and not be that terrible, but the company may warn again. I think it's having some, I think NVIDIA and other chip makers are having some trouble right now, but NVIDIA's could be in some trouble because their main kind of customer base are like gamers, crypto miners, all this stuff where demand really fluctuates, and like all indicators are pointing right now that demand's pretty low right now for NVIDIA's chips, and a lot of people have been upset with the price of the new one, the fact they think it's not that big of an upgrade from last year's graphics card, but way more expensive. So I don't know. I mean, I might end up playing this, either going long or short in this portfolio just to get some action because with the trading competition like this, I mean, it's over in, 2-3 weeks. I got to try to make some returns at some point. I got to try to make returns somewhere. Tesla, like anything that moves a lot, I need to pick a direction on and be right about it. This is the way I'm seeing it. Another one, Elf versus Estee Lauder. Yeah, and that's kind of the same exact thing with Walmart versus Target. The Elf is like the Walmart brand, the cheaper one that's been doing really well, whereas Estee Lauder is the more. All right, I gotta blow my nose real quick, so I'm gonna go ahead and let's play our promo for the FinTech Awards. I'll be right back.
Who has made the biggest impact on your life? Who should we really be celebrating? And that's what this event is all about. All right, guys, second award. And again, this is the Grammys for our space, right? This is where we're really celebrating and recognizing who's been building, who has been driving this space.
All right, guys. Sorry about that. No positions on AMC. I'm just trolling Breida so my rank increase. Ooh. That's not nice, Shelly. All right, let's check the leaderboard. Damn, I'm moving down. All right, we got to check my portfolio. What's moving against me? My meta. I lost 20 bucks. I lost 20 bucks on my meta. What about copper's been doing really? Oh, holy cow! God damn it! I bought a bunch of this Southern Copper down here at like 50 bucks. I was expecting this pop, but this was like in September, and I sat on it for like a month and was like, it's kind of boring. It's just a copper name, and then now it's moving. That chart looks kind of nice. I mean, you guys know I like those little rounding bottom charts where you got the gap fill coming back up to the upside after some consolidation. What was the other stock we were looking at that had a similar pattern like that? That was coming up. I think Netflix maybe. Netflix, if you look at it on a, coming back up there, maybe filling that gap up on the upside. And again, I said this yesterday, like I'm still fully down to play Netflix to the long side up to like 340, 350. But after Netflix had basically gone up, like if you look on like the 1 month chart here, like so much so quickly that it's like you're due for a little sell off, right? When we went from 250 up to 310, basically, in like 5 straight days, I was like, all right, we're due for some profit taking here. We're due for a little bit of some sales. But then I think I'm gonna buy some Netflix. I think we're gonna go long here. Screw it. Scared money don't make money. You know what they say. And I'm gonna short Tesla. Short Tesla. Ooh, a little small position on this one, only 10,000. There we go. All right, so now we're in some positions. We're long Meta, long Netflix, short Tesla. That is our portfolio right now. Boom. We're in the green on some of our trades, and then the red on Tesla. See, this is kind of screwy because if Meta and Netflix are going up, chances are Tesla is going to be going up as well. But we'll see if we get some divergence there. Lula is on the climate drug. Went long Brazil after the election. How do you go long Brazil? Is there a good Brazil fund? I'm down to do that. All right, guys. Here in about 3 minutes, we're gonna be starting our chapter 2. Chapter 2. Chapter 2. Chapter 3. We're gonna be talking Direxion. We're gonna be talking with Direxion's Dave Mazza as well as Gianni DePocci. About some ETFs. Excited about that. I don't know if Dave Mazza is listening in the background, but I'm upset because on this little trading competition we're doing, I was trying to trade some Direxion ETFs, but they don't let you because they're leveraged, which it makes sense, right? It'd be a little unfair in a trading competition to get that 3 times leveraged ETF. But I was trying to buy some. I don't know if that helps you, Dave, if I buy a $20,000 on a paper account worth of a Direxion fund, but I was willing to do that, but it won't let me due to the competition rules. But excited about that. Let's go ahead or actually we still got about 2 minutes here before we're supposed to start that session, but I do see them hanging out backstage. So we're almost ready there. EWZ Brazil. Oh, you can't do this one either. Is it leveraged? I don't know. Either way, guys, again, if you have not signed up for this trading competition, I don't think that helps, Dave. I know, I was kidding. I was being facetious. But 20,000 is 20,000, whether it's real money or paper money. That's what I've learned. Yeah, that was a joke, too. All right, guys, let's go ahead and get to our Chapter 3 session, Direxion. Again, Direxion's Dave Mazza, as well as our own. I don't know if it's our own, Gianni DePocci, but he writes a newsletter for us, which is great. So without further ado, I'm going to go ahead and bring Gianni on. Gianni, how you doing, man?
Good, Aaron. How are you?
I'm great. Beautiful Wednesday here. It's starting to get cold here in Detroit. I don't know where you're joining us from, but it's not too bad.
It's even colder up here.
It's even colder up where you're at. Oh, man. Well, hopefully it's not as cold wherever Dave is. But let's go ahead and bring Dave Mazza on from Direxion. Dave, how are you doing?
Doing well. What's happening, guys?
Not a whole lot. Good to see you, Dave. It's been a minute.
Yeah, no, good to see you as well. Excited to be here.
So Gianni or Dave, I don't know which one of you guys wants to share your screen and get the presentation going, but I'm ready to kind of hand it over to you guys. I'll be hanging out in the background. If anyone has any questions, we can pop up on the stream. But you guys want to give us a kind of a little preview of what we're going to be talking about today?
Yeah, happy to do so. So we're going to go through an overview of leveraging inverse ETFs, what to know, some of the ins and outs. As noted, these are power tools, so we want folks to understand how to use them and use them appropriately. Then Johnny's going to give us some nice trade ideas, and we'll go back and forth along the way. But it'll be a good conversation.
Beautiful. That sounds awesome. I see Manish in the chat saying it's your first day. Welcome, Manish. Well, you're in good hands. We're going to learn a lot about different ETFs, kind of what those are, how to trade them, and again, the key here is to figure out, okay, how do you want to implement these leverage ETFs? How do you want to implement these inverse ETFs? Who are they for? Maybe, when you should be using them, when you shouldn't be using them.
Exactly.
All right. Well, yeah. Well, so while we get that presentation pulled up, let's see if we've got any questions flying in the chat about ETFs. Manish saying, can you make a playlist for all lessons? We could do that. What, Dave, have you noticed anything? I mean, is it still kind of the same story as far as the semiconductor ETFs being some of the most popular ones? Have you been seeing a lot of volume in the energy ones, the drip and the gushes?
Yeah, so we've really seen kind of two, I'd say, interesting trading patterns here. One, as noted, semiconductor Seasonax, that's a 3 times bull fund on the semiconductor space, remained really in favor by traders, right? So it's seen some of the best inflows of any ETF actually in 2022. And it's really, but what's interesting is the holding period has remained low. So people are really still trading it, trying to time the dip, be in and out of the space. I expect that fund to be active again, especially with NVIDIA, announcing and the like. But in other areas, like S&P 500, small cap, we've seen the inverse funds, or the bear funds that kind of are used as hedging tools or the ability to outright express a negative view on a particular market or segment have really picked up the pace. So if I look at the ratio between XPXL, which is a bull fund on the S&P 500, and SPXS, which is a bear fund, the bear fund really is going on strong from an asset perspective. So other than semis, we're seeing people definitely begin to get more defensive here.
Yeah, and I'm seeing some people in the chat, Beach Bum, and talking about that they're trading Sox S. So that's been one of the areas too. I mean, the semiconductors have just been so beaten down, and now you're seeing them come back a little bit. But I think a lot of people have been interested in kind of wondering, like, all right, is this going to last? Are we going back down, or is it time to really get back in and buy now? So, let's see. Are we having trouble pulling up the screen share here? Or?
Well, yeah, I'm happy to do it, but how do I do it here on the StreamYard? Or Johnny, if you want to take care of it, that'd be. If you know how to do it.
Let's see. I just have it in the PDF.
You should be able to, if you have it open in the PDF, it should be a little share button down on the screen, and you can kind of go by window and then open that PDF window. I found that works.
The one I have is not the final version, David. So.
Okay, so what is it down by
I do not have that. Yeah, where it says present. Share screen.
Yeah. There or share screen. Yeah, I think that should work. Here, if you guys want, I can pop you guys off while we figure that out. Or I'll pull up my we'll go back to this trading competition real quick. I'm gonna check out how my trades are doing. Oh, not great. All right, my short Tesla trade is not doing well. Maybe I'll buy it a cover here. Have you guys ever done one of these paper trading competitions? Pretty fun.
Yeah, I've done a bunch. They're fun.
All right. Well, and also, guys, I mean, if you guys want, I'm sure we can have a pretty good conversation about ETFs and whatnot, and some trade ideas from Gianni without that specific slide share, you're more than welcome to Gianni pull up any Benzinga Pro or wherever you got your charts and whatnot. If we'd like to kind of audible to that,
I could pull up some charts on TradingView if needed.
Yeah.
Well, before I do, Dave, was there anything you wanted to say about the the intricacies of the products?
Yeah, let me. Yeah, perfect. So let me take a step back and kind of I'll virtually walk through some of the material I was going to touch on while you queue up some charts here. So essentially, it's important to think about leverage and inverse ETFs as daily trading tools because that's what they are, right? So these are tools that amplify exposure both on the positive side or on the negative side. So there's your bull and your bear on a daily basis. So when we say a 2x fund or a 3x fund, these are daily products, right? So it's not 2x over a week, not 2x over a year. It's every day. So the fund is relevered or delevered depending upon the performance on that particular day. So $1 of exposure gets you that $2 or $3 $1 investment gets you $2 or $3 of exposure, excuse me. And really, you don't need to, again, that's the whole point. Leverage is embedded in the product. But again, because the leverage is embedded, it introduces some optionality within the product itself. And we need to, again, appreciate that when a particular asset or index is up, on a daily basis, particularly in a volatile environment, you're not going to have perfect tracking, and which is why we believe that investors need to have the ability and interest to monitor their positions on a daily basis. So that would be, you can make that buy, sell, or hold decision daily because your cumulative returns over various time periods in a leverage and inverse ETF are not going to match what a longer time period would be. So in a trending environment, you would an uptrend, for example, any bull fund in this example probably could have positive compounding. In a negatively trending market, the bear fund would have that positive compounding. But when you have whipsaws on a daily basis, neither product, bull or bear, will necessarily be tracking that amplified exposure. Really important to remember. But if you're interested in taking short-term positions and having expressing short-term views, these can be excellent products for you because, as we'll walk through, you can get exposure to everything from large cap U.S. equities, small caps, Brazil, China, sectors, industries, fixed income. And really everything in between to allow you to express those views. So that's kind of a preamble here, and we can talk more about how people are using them along the way.
Okay, you want me to pull up some charts here then?
Please.
Okay, so let me go ahead. Let me see how I do this with the current browser. Okay.
Yeah, usually if you either share by tab or share by window, it'll be easy to kind of navigate. I find that's easier than sharing the whole screen.
Do you see my trading?
There we go.
No.
Yep, popping it up right now, and then I'm gonna hand it over to you guys. I'll be hanging out. Whoa. Looks like we had you breaking up for a second there. Yep.
Okay, yeah. So feel free to interrupt me at any point if necessary. So one of the first funds that Dave and Aaron mentioned at the onset of this conversation today was the triple leveraged bull S&P 500 ETF. So SPXL obviously has been doing pretty well since we had that low form on October 13th. So Dave was talking about, the trend is your friend essentially, and how in a bear trend, the inverse ETF will do better. Well, this is the bullish ETF. So you can see it's been trending lower. And, when we look at these types of investment vehicles, it's important to stay nimble and really manage your risk, because leverage can be very rewarding or very cruel. You really cannot afford to stay wrong for long. So, as a trader, been trading now for, 10, 12 years. Oops, I don't want that. I always try to trade with the trend, and then I'm not going to take on a trade unless I see a price pattern. So, on this particular chart, it looks like there was an inverted saucer, at least at some point. And we had an initial breakdown from this inverted saucer at the beginning of October. But there's a saying in trading, from false moves come fast moves. And, if you go back to October, sentiment had turned pretty bearish at that time. And that turned out to be a low. We had a big short squeeze rally that unfolded not long after. But as you can see, we haven't really made a significant higher high yet. And now stocks are pulling back a little bit today. Some questionable economic data coming out, geopolitical tension spiking a little bit here again. So, SPXL might not be the place for a short-term trader, but, I'm especially keen on this high from mid-September in the S&P 500. If we take out that high, I do think that the SPXL ETF will probably be better than SPXS, which I will pull up now. And as you can see here, I'm actually going to redraw this chart pattern here because I think there's a better one unfolding here than was previously drawn. So I'm doing this live since the slides weren't available. But, what I'm seeing on this one is an inverted head and shoulders pattern. So you have the left shoulder right there. You have the head right here. And then you have the right shoulder right here. Now, here's the caveat with these head and shoulders or inverse head and shoulders patterns. I always like to see the low of the right shoulder be higher than the low of the left shoulder. That is not the case in this particular example. Moreover, we do like to see, in order to confirm the pattern, a close above the neckline as represented by this horizontal trend line that's acting as resistance. So unless we actually close above this neckline here, this price pattern really won't be validated. And as you can see, SPXS has had a pretty sharp sell-off over these last couple weeks here in lieu of the market rally. So I just need to be aware of the risks at a broader index level, because if you're trading the index, these are great vehicles to essentially make pretty significant daily returns without exposure to the options markets or the futures markets. For pure equity traders, this kind of gets you through a loophole and gets you more access to leverage than you otherwise would normally need through the options or futures market. So that's my little diatribe on the indices at the moment. Dave, was there anything that you wanted to add to this particular fund or any other fund you wanted me to look at?
Yeah, so we'll get the one thing I'll note here is that, so we looked at two different funds, right? One being SPXL,
yeah.
One being SPXS, right? One is that, again, that daily bull, that's the L, and then the daily bear, that's the S. They are they offer 3 times the exposure of the S&P 500. So meaning if the S&P 500 today would be up 1%, the 3X fund, the bull fund would be up 3, and then -3 for the bear fund. So particularly when you're using this as part of a, in a trading system or what have you, you do need to recognize that the funds reset on a daily basis. But if you're looking to identify patterns as we're showing here, they can still be very powerful tools for you. But just know that, again, if the trade is wrong, you're going to underperform than you would just using a one beta fund or just, a more traditional ETF. But that's, again, so there's to every pro, meaning the potential outperformance, there's a con, which would be the potential to underperform. With that being said, one of the big areas is why, we're happy to be having Johnny joining us here for the conversation is using indicators and patterns of that nature, because you certainly could make a fundamental view that, and we should look at semiconductors next, that's a space that's primed for a comeback, and I want to take a long-term position. I probably wouldn't be using SPXL to do that because one, I can't advocate for it, and two, you end up with hindsight, you could always say, yeah, hey, I could have amplified my exposure over a 10-year period, but that's always at the benefit of hindsight, because man, that fund Soxl had unbelievable performance in 2020 into 2021, but now with the pullback, of course, it's much worse in the market.
Well, I have that chart up here now, and you're talking about the potential for gains, without ignoring always considering and keeping in mind the potential for loss. I mean, you look at Soxal here, rallied from a low of $6.21 to a high of what was that, $14.14, basically in a month. Now we're pulling back a little bit here, had a little bit of a gap down at the start of the day, and we're still seeing the sell-off here. But the key price pattern that I'm looking at in this case is a rounding bottom formation. But again, as Dave mentioned, semiconductors have performed very poorly this year, and you can clearly see the downtrend that's been in effect, lower lows and lower highs. Now, if prices were to start closing above this upper horizontal trend line here, I think you have a pretty strong case that a low of significance is complete, and that SOX L is going to provide you better returns compared to SOX S. So until that happens, though, you kind of have to respect the trend. You see here that, we could have just formed another lower high, as this high from mid-November came in below the high from September 22nd. So those ads keep popping up on me. But yeah, I think that's the big risk that, semiconductors face right now. Obviously that was a big part of the infrastructure bill that was passed earlier this year. We're trying to reshore a lot of the semiconductors manufacturing. So there's a lot of arbitrage opportunities unfolding in the sector from a fundamental standpoint as well. But at the end of the day, these trading vehicles, which is what they are, we have to keep in mind the short-term price fluctuations and beware of the short-term risks. So looking at this SOX S, the inverse one, you can see that, it looks a little bit better from a trend standpoint, but the risk that I see here, and it kind of reinforces the bullish case in my opinion. We were just looking at an inverse, we were just looking at a rounding bottom pattern, and it looks like here, we're on the precipice of breaking down from a massive inverted saucer pattern. But like in the previous example I showed with the S&P 500, we broke to a new low here, and if this was a false breakdown, we could see a pretty powerful face-ripping rally, with SOX S, and I would look for like a gap fill back in this area here, in that $50 to $55 area. So that's what I see from a technical standpoint in this. If you take a look at volume here, one of my favorite indicators to use is to look for, significant volume spikes, either, when you're breaking below support or breaking above resistance, but also at or near highs or lows, because a lot of times that's indicative of capitulation. There's a tendency from, traders and, sometimes you might say, oh, retail crowd tends to do it the most, but, believe it or not, a lot of institutions, I mean, you even look at what happened with FTX recently, a lot of institutions get caught up in those types of situations as well. But, humans have a tendency, because of the emotional aspects of trading, to sell the lows and buy the highs. So a lot of times you see volume spikes at key turning points in ETFs or stocks or whatever market that we're looking at. So the fact that we had this big volume surge coming off this low from yesterday in SOX S, I think does give bulls a little bit of impetus here going into the back half of this week.
Yeah, good points. Maybe let's shift gears and talk about TMV and TMF. So as you pull those up, and I know these are some of your favorites to trade and take a look at, what these funds do is offer, again, on a 3 times daily exposure to long-dated treasuries. So 20-plus year treasuries. And then these funds offer that amplified bull or bear expression. And what is fascinating here is that if you think about the duration world meaning your interest rate risk that would be theoretically embedded in these products, it's 3 times, right? So if I'm talking about something with 20-year or 25-year duration, this is 3 times that or 3 times negative. So as volatility has come to the fixed income market in a way that we have not seen for decades, these funds, particularly the bear fund, have exploded in interest. Some of it is because of the trend that's being displayed here, but also, again, we for years have been conditioned. The only place to find volatility is equities. Fixed income is boring, set it and forget it, and that's kind of how it should be. frankly, but that's not been the case in a rapidly rising rate environment where, we've had hikes at 6 straight meetings, 75 basis point hikes. And to be honest, for the purposes of interest rate volatility, it doesn't matter if they do 50 or 75. It matters in a lot of other settings, but the fact that we're debating it heading into the FOMC is only offering more opportunities for trading.
Indeed. And, just looking at the technical aspects of this chart, you can see that there was a tremendous opportunity to make money, through a cash equity account with this leveraged inverse ETF in the treasury market. So, to elaborate a little more on what David just shared, this has been the most hawkish the Fed has been basically in modern history. I mean, the pace of these rate hikes have been really exceptional with respect to their historical precedents. And, it's rattled markets. Historically, you would see equity markets rally for a period of time when, the Fed embarked on a rate tightening cycle. But, if we go back to January of 2022, basically the Fed ended QE. They started raising short-term rates immediately, and the market correction ensued right afterward. There really aren't any historical cases of that happening. Usually there's a lag time between, them starting the rate hike and then the market actually rolling over afterwards. So as you can see here, what do? We start off with the trend analysis. We see clearly displayed cases of higher highs and higher lows in TMV here. We had what could turn out to be a blow off high on October 24th. And, we were rallying really nicely within this ascending price channel. And again, example of from false moves come fast moves. Looks like we had a false breakout from this ascending channel. And that was a flag in of itself because, these are known to be continuation patterns, meaning that they tend to resolve in the direction of the underlying trend. In addition, as long as prices rise within the channel, it's indicative of bulls being in control. But as soon as prices started to reverse, we had this island reversal pattern. And this unfolds when you have a gap up on day one. It's actually a 3-day pattern. A gap up on day one, a rally to new highs on day two, and then on day three, you gap down. You don't actually have to gap down, but if you close the gap from day one, then that's an island reversal. So we had that island reversal when it came to this candlestick pattern. We then re-entered the ascending price channel, rallied back up, basically were rejected at this upper trend line here, and then had what's called a bearish breakaway gap. So this was actually a bearish breakaway gap here as well. But this one was more powerful on the secondary case because we closed below a support level. So that's kind of how I distinguish whether it's an island reversal gap or a bearish breakaway gap. Bearish or breakaway gaps, whether it's bullish or bearish, either close above resistance or below support. So in this case, we broke below there, and then we started closing below the lower trend line of this ascending price channel. So here we are again, from false moves come fast moves. We had a secondary lower high form here. We then took out this low from late October. And now, we're getting a bond market rally, which, by the way, is probably a good thing for stocks overall, with respect to intermarket analysis, meaning, intermarket analysis is when you use what's unfolding in one market to make, to come to conclusions about what could happen in another market. And since the Fed's been taking away the punch bowl all year and reducing liquidity, it's been a tough environment for equity investors. But now that bonds are catching a little bit of bid here, let me pull up TMF. You can see here how bonds, basically the inverse of what we just looked at. We broke out from this bearish continuation pattern, this descending price channel, and we made a new high here. But, there's so much resistance above on this TMF fund that, I really wouldn't, there's going to be a lot of work that bulls need to do in order to definitively turn the tide here. Even though, there's some signs that inflation could be cooling in the short term. We had October CPI come in below expectations. October PPI, producer price index, come in below expectations earlier this week as well. But, by no means are we out of the woods yet. And the trend does remain our friend, and we're still seeing lower lows. So, but what this does is show you the power of the ability to make gains, significant gains in short periods of time. But as you can see, if you're on the wrong side of this market, you can be punished pretty intensely in the short term. So yeah, long story short, not really seeing any signs of a definitive reversal pattern in the treasury market yet from a trader standpoint, but that doesn't mean that a rally can't and won't continue in the short term.
But here's what I think is notable, and in particular, as I said earlier, and this chart really exemplifies it in my opinion, is again, these are daily trading tools, but when there is a trending pattern, again, in this case, if you were short it, but let's pretend we're looking at the other chart, right? Here we go, right? When the trend is your friend, that's when your positive compounding can come into play. Now, you still need to make the decision to own it on a daily basis because it can go against you, as shown a moment ago, very, very quickly. But it's not as if they're unable to be owned for longer than a day, right? We have a lot of folks who are doing swing trading or doing other types of analysis that are owning them over multi-day periods, but making that decision to do so on a daily basis. In choppy markets where, particularly with a VIX over 25 or 30, it can be, you can really see the lack of trend that's occurring. But of course, in the fixed income space, that's been the furthest from the truth this year.
Yeah. Well, you made some really good points, Dave. Let's talk about time horizon and risk management for a moment here. So, when dealing with these leveraged products, I really don't think it's appropriate. People say, "Oh, you're a trader." Well, what does that mean? Well, I say, well, being a trader actually means you have to be a professional risk manager if you actually want to do this, for a living or for secondary income or what have you. It's all about managing risk. And I already mentioned, you can't stay wrong for long in leveraged markets, but I think we also need to pay attention to time horizon and how that affects your trading plan. So I don't think that these products really are appropriate for anyone aside from being a day trader or a swing trader. Now, a day trader, obviously, you could be making trades intraday, and there have been instances where, if you get a 3% or greater move in the underlying index or benchmark that these funds are tracking, you could get 10% moves in these funds, either to the upside or downside. That is possible. But if we define swing trading as holding a position, from 3 days to 3 weeks per se, just for safety's sake, just defining it within that realm, then you can see that you really have to be nimble. Because even in this case, let's say you entered TMV at this low. Let's say you bought the new high here at the beginning of September. You rallied back up. You had a nice gain. A drop from 140, to 125, is pretty meaningful in a short period of time. So you need to have an exit strategy, I would say, before you even enter into these positions. Now, there are rare instances where holding, beyond could reward you, but that's, I would say, more of an exception versus the norm. And when we're dealing with probabilities as traders, because that's really all we have, there are no certainties in financial markets. If something works 70-80% of the time, if that is the periodicity, so to speak, of a particular outcome or trade unfolding, then that's what we're going to go with. We're not going to look for those one-off cases where, in the instance, oh, look, TMV, for example, rallied from $80 to $180 in a matter of a few months. That's not really that's an exception versus the norm, and that's not how you want to be managing risk as a trader. So that's my 2 cents on risk management and time horizon. And actually, one last point, since I just thought of it, you have to come up with a certain percentage loss threshold. In my particular preference is, whenever I'm dealing with an equity market or what have you, I almost never, barring a gap down, against my position, let a loss accumulate to more than 8 to 10%. Now, if a stock or a fund gaps down 20% at the open, well, that's what position sizing is for. So, there are multiple facets and components to risk management that you need to consider. I would insist before you start trading these types of vehicles, because, again, leverage, it's not for the faint of heart by any means.
Yeah, no, I think that's a point worth emphasizing. Now, what I would say, and look, there's varying opinions on this, is that there is there can be a benefit, depending upon your trading strategy, to use these tools as opposed to other derivatives or options, right? Folks who are familiar with trading and familiar with options, there's a lot of powerful things you can do with them, whether it's basic things like covered calls or using a variety of different strategies. But there, again, and maybe you could argue I'm a bit biased here by offering the ETFs to do that. So fully admit that you're not going to lose more than you put in. You can still definitely lose, right? But you're never going to have to owe money if your trade goes against you, unless you're buying and leveraging inverse ETF on margin or something of that nature. But just purely for that investment, you don't necessarily have to worry about that. You still need to do your risk management, understand whatever stop loss you're comfortable with or what have you. But you do have the benefit of the ETF structure in this case, as opposed to building these trades directly with puts or calls.
Yeah, you don't have to worry about margin calls with these, right? Unless you have a margin account.
Correct.
Yeah, and that's what Direxion does, is you're basically, as a trader, outsourcing some of that risk to them. So they are, basically shouldering some of the burden with respect to that risk management for you, which is what helps make these ETFs so attractive. So Dave, I actually want to talk about precious metals. Can I pull up the miners?
Yeah, let's do it.
So some really interesting stuff happening in the precious metal world right now. Gold and silver really have not been hot commodities per se in the last 2 years, even despite the broader commodity rally. And we can get into the fundamental reasons why precious metals really aren't the same as other commodities, but that's not really why we're here today. I want to talk about what's going on in these gold mining indices, or the gold mining ETFs here. So I have DUST, which is the leveraged 2x bear ETF for gold miners. You can see that the bear fund broke below support of this rounding top formation, fell to a new low, fell to its lowest level since June. So I think that is very noteworthy with respect to just pure trend analysis. And here's the thing about technical analysis, it very, very much is an art, because as I look at this, I could even make an argument that we broke below a regular head and shoulders formation. So there's the head, here's the left shoulder, and then here's the right shoulder. And what do we have here? Something I mentioned earlier. We see the right shoulder's high in this case being lower than the left shoulder's high. So that increases the odds that you get a favorable resolution from this pattern. We then broke below the neckline of the head and shoulders and fell to new lows. So let's see, the NUGT, I was thinking of the junior miners. So in looking at let's see, is my internet stalling out here? NUGT. There we go. Of course, it came up as soon as here we are. Okay, so NUGT. This looks like we're breaking out from a rounding bottom formation. We could even extend this resistance zone into the $32, $34 area. But I think that precious metals could be reawakening from their slumber. Let's consider a couple catalysts here. Well, the Fed funds probabilities, even though Fed Chair Powell said, we're going to stay hiking rates, now traders are expecting the Fed to actually slow the pace of rate hikes. That could be bullish for metals and miners. Keep in mind that metals, there's no yield in precious metals unless you get dividends from miners. There's very little appeal, from a fixed income standpoint or from a cash flow standpoint to pursue precious metals in a rising rate environment. Again, unless you are looking for the dividends and the stocks. So even though rates are still higher than they have been, in decades, I still think that, there are some shifting macro headwinds or catalysts that could actually prove to be favorable for the precious metal sector. In addition, the dollar's been selling off pretty notably in the last couple of weeks as well, and that could turn out to be a bullish boon for metals and miners. So basically, long story short, it's kind of like oil companies and the price of crude oil. Precious metal miners are more likely to exhibit rallies when precious metal spot prices are going up. And so, if we start to clear this upper horizontal resistance zone, this trend line here, in NUGT, then I think that we're going to see a pretty big story unfold in the gold mining sector going into year end and into the, perhaps a couple months of 2023. So, yeah, we could be looking for a rally, perhaps as high as, I don't want to give any, definitive price objectives by any means here, but, we could even look for a rally of up to a former support turn resistance level, in this fund. And, yeah, that's how I would slice out precious metals, and from a sentiment standpoint, just observing, the emotions of the crowd. Not a lot of people are talking about precious metals right now. And especially in the age of the crypto bubble that we've seen over the last couple of years here, people seem to have forgotten about precious metals. And, there was a time, a decade ago, I'm aging myself a little bit here in this financial world, but, there was such a thing as gold bugs, or people that thought, gold was going to go up forever and, hit $10,000 an ounce. Well, they've been wrong for a decade now, and we've come nowhere near that. But this is a sector that's fallen out of favor with a lot of traders and investors. But now perhaps we have a new type of a bug, like, a permeable in the crypto space. So, when things fall out of attention or fall out of favor for extended periods of time, like precious metals have, that's usually around the time that you should start paying attention to that. And, we actually see a technical catalyst here for a renewal in bullish impetus if we can clear this resistance zone.
Yeah, no, really, I think really interesting points here on, particularly on what's, to your point, going on with the underlying commodities, and then of course the related equities that we're displaying here. And, of course, gold has really been weighed on by the strength of the dollar, by the move in real rates. And then the miners, have their stocks, but they have a beta to gold, they have a beta to silver.
Right.
And that, and that's been really a play here. And, generally, I think you also have the overhang of, are we actually ending up in an environment of slowing economic growth as opposed to just an inflation scare? And I think that's what the markets, in certain cases, is most definitely pricing in here. So I wonder, if we can switch gears a bit and talk about some single stocks. Maybe, because we maybe pull up just the chart of TSLA, because where in August, we actually introduced our first single stock leveraged inverse ETFs. And folks could say, single stock ETF, what is that? Well, in this particular case, we're offering amplified exposure to 5 stocks: Tesla, Apple, Amazon, Alphabet, and Microsoft. So essentially, on the bull side, you get TSLL, but keep the stock chart up for a second. TSLL offers 1.5 times daily exposure on the bull side, and then we have TSLS, which is just the inverse on the bear side, so more of a hedging tool. These are not offered at the 2 and 3 times leverage points because single stocks are more volatile than broad-based indices. So we felt it was appropriate to have them all be 1.5 and 1 on the bear side. So these are, again, new tools. They've been growing in liquidity, particularly the Tesla products, as folks have begun to, and this is I'm curious to see what you say about this chart, because there's a lot of opinions, of course, always with anything Elon Musk related, and good, bad, ugly, everything in between. And we don't have time for that today, but let's talk a minute about the chart.
Well, first, what do we see? We start off with what we've been talking about throughout this discussion is the trend following, lower lows and lower highs. You had a little bit of a short-term bull trend that was birthed in July. But, if you compare it, if we actually zoom out, one of my favorite phrases in trading is when in doubt, zoom out. You can see that despite the summer rally in Tesla, we failed to come anywhere near the high from April. So now let's zoom back in, and we can see that prices essentially digested their losses from a longer term time horizon and coiled into an inverted saucer pattern. So these are pretty powerful bearish momentum patterns, and we broke below support as seen by that lower horizontal trend line at the beginning of November. And one of the principles, a very key technical principle in trading, is that when support breaks, it becomes resistance. Conversely, when resistance breaks, it becomes support. And it's important to keep in mind that support or resistance zones are more so zones than hard lines. So in this case, I have this horizontal trend line here drawn around like 205, 206, but there's I would classify this as a price zone between 205, 215, let's say. You can see how there's been some digestion in that area, but more importantly, what I see here is that we dropped and we closed below the support zone. This now becomes resistance. We've since come back up and seemingly were rejected at this former support zone, turned resistance in this 205, 215 area. So I would say right now, from a technical standpoint, bears have the impetus on Tesla, and that would be, I would maintain that outlook so long as prices do not or cannot make a high above this high from November 1st. So if we start to print a higher high, we change our outlook, and that's how technical analysis helps us manage risk. So it's not even enough, in my opinion, for prices to get back above 205, 215. I want to see a higher high form, because that would be the first sign that the downtrend or the bear trend, which is characterized by lower lows and lower highs, is starting to shift. So it's hard for me to say whether there's been like capitulation in Tesla. There still are some hardcore believers in this company, in this stock, notwithstanding whatever Elon Musk says or does. That's beside the point. But at the end of the day, all we have is risk to manage, and price is all that pays you. So, you can believe in a company or in a story all you want, but if your position is down 50%, then you're not managing risk. And then you need 100% appreciation from that loss to just break even. And we're not even talking about leverage in this case. We're talking about, spot prices. So when it comes to Tesla here, I really wouldn't be pressing the issue from the long side unless we start to take out this high from the beginning of November.
Yeah, no, really interesting there. And what I've found interesting is that the first in August, when we were still in that small uptrend from sort of that kind of middling summer performance, if you will, we saw TSLL, which is the bull fund, really take off, and that fund has continued to gain momentum. But now, more recently, of course, as we've been in this more pronounced downtrend, and particularly as you noted, kind of finding support in an area that a lot of bulls probably aren't too excited about. We've seen TSLS, which is the bear fund, come online too, because there's so much headline risk right now with what's going on, frankly, with the CEO on involvement with Twitter and other areas. The stock's not, and maybe you could argue it never trades on fundamentals, but it really has been, I think, more trading on headlines. And as we get into this, looking ahead into the end of the year, vehicle deliveries and the like, that's when this name, I think, actually further more fundamental pressure could be put on it. Certainly all that could be reverse course if we get some upside surprises there. But, the kind of outlook remains pretty choppy here. I'd be curious. Can we take a look at Apple? So
that was going to be my next idea, actually.
Awesome. Apple's another. I know we're kind of bumping up on time here, so that'd be good. Apple's another fund that we have bull and bear ETFs on. So in that case, AAPU is the bull fund and AAPD is the bear fund.
So long story short, Apple looks a lot better than Tesla. So again, beginning with trend analysis, you can see how Apple never took out its lows from June. And, this is a really important key observation and does give bulls some hope for the overall indices, because when we consider Apple, one of the biggest companies in the world, when you look at ETFs like the SPY or the Qs, Apple, very big weighting in that ETF. So it's important to see a stock like this perform well. And I'm encouraged by the higher low that was, let's see, did we actually take out, let's see, the low of November 9th was 134.59. And then the low of October 13th was 134.37. So we actually made two higher lows. So, October 13th, we didn't take out that low from mid-June. And then we just made a higher low compared to that. So if Apple starts to get above 157.50, we then have a higher high and a higher low. And that, I think that's a most welcome development for the overall equity recovery thesis, again, because Apple is such a heavy component, heavy weighting in so many passive, investment funds. So Apple, I'd become really bullish if we start to get above, let's call it 155, 160. But if we start to break below, 128, 130, I think that not only bodes poorly for Apple, but for the overall equity index as well.
Yeah, no, I mean, there's been so many calls about the weighting of Apple as an individual company.
Still there? Did you lose me?
We can hear you.
Am I frozen or?
Looks like Gianni might be having some here. I'll pop him off real quick. But yeah, Dave, I mean, so we are coming up here on time anyway. We'll see if Gianni refreshes and comes back in. So out of those 5 individual ETFs, you think Tesla has been the one that's kind of had the most volume so far?
Yeah, so by a mile. So TSLL has really picked up steam, followed by TSLS. But I would say post-earnings season, we've seen all of them begin to pick up, and Apple and Amazon in particular, I would note, because, in many cases, the earnings excitement, the surprise, I think earnings were not as awful as some people were expecting, but the forward guidance was pretty poor. So now as we remain in what is still a highly volatile environment, we've seen folks looking to trade both the bull and the bear funds.
Can you see?
Yeah, and I think we're kind of. Yeah, you're back, Gianni. And I think, Dave, to your point, that earnings haven't really been as bad as some people anticipated. A lot of people have kind of gotten, I don't really want to say more bullish, but more, I guess, yeah, for lack of a better term, just at least a little bit less scared. I think a lot of people now are kind of more worried, like you said, the guidance has been poor, looking outward, like 6 months from now, where are we going to be? Because right now, things are okay. Like, people are okay. We're okay right now. I think a lot of people are worried about 6 months from now down the road.
Yeah, exactly. No, I mean, when we saw the first leg down in equity markets because of a repricing of PEs, or price to sales, choose your multiple. I think it remains an overhang of, are we going to see another leg down, when the reality that most likely earnings need to come down sharply. And it doesn't appear as though analysts have necessarily cut them, and they remain bullish that we're going to, this is going to be kind of a near-term blip on the radar. So I actually think the market environment could remain challenging until we get some clarity.
Yeah, and I don't know about you, but I'm looking forward to Nvidia's earnings tonight. Could kind of one more big one before we round out the earnings season. Then we'll be back talking about earnings in a couple months.
That's right.
All right, Dave. Well, thanks for joining us today on the November Boot Camp. Again, Dave Mazza, head of product at Direxion. We'll go ahead and put a full list of those Direxion tickers that we talked about in the chat. Dave, thanks again for hopping on. We got to get you back on Benzinga Live again soon too.
Yeah, let's do it soon.
All right, Dave. Well, enjoy the rest of your Wednesday. We'll chat soon.
See ya.
All right, guys. That was Dave Mazza from Direxion, and Gianni DePoci. Go ahead and smash the like if you have not already. I saw Gianni pop back in. I'll pop him back on. Gianni, we just said goodbye to Dave, but smash the like again for Gianni and Dave. Thanks for hopping on, Gianni. All right, looks like we're having some more technical difficulties there. Sorry about that, Gianni. All right, guys, we've got a few minutes before our next chapter. Let's take this time to run through the agenda. So that was Chapter 3. Chapter 4, we're going to be talking to Ophir Gottlieb over there at Capital Markets Laboratories. He's in backstage right now, so here in a couple minutes, we'll bring Ophir on the stream. And then Chapter 5, we are going to Audible to we're just going to do a hangout session with AB. We're going to be doing some live trading. We're going to talk about this live trading competition I'm doing. Let's go ahead and pop that up right now while we've got a couple minutes. All right, guys, the trade. I'm doing the thing that I've talked about not to do, and that's trying to force a trade right now. So I saw myself slipping on the leaderboard. I'm in 22nd place right now. I saw Shelly in the chat saying she was catching up. Oh, you are, Shelly. What are you trading right now? Amazon, Google, Bank of America, Citi. So you're going mega caps. All right, Shelly. So Shelly's trying to catch up to me right now. I saw myself slipping on the leaderboard, so I decided to make some trades. I bought a bunch of Upstart. I'm going YOLO mode now. Whoa, something's working out here for me in the last minute or so. Let's go check the port. I don't know. My Upstart's getting hit. My Southern Copper's doing all right though. Come on, Upstart. Let's go. This is paper money, by the way. I didn't actually buy $20,000 worth of Upstart. When you graduate from nursing school, they give you a pair of Crocs with your diploma. Good future. Crocs, yeah, I've seen a lot of medical professionals, I feel like, wearing the either the Hokas or the on shoes too, you know, with like the extra cushioning. All right, let me go ahead. Alrighty. All right, let's take a second to go through the rundown for the rest of this show. So Chapter 4, again, we're going to be joined by Ophir Gottlieb. He's hanging out backstage right now. Chapter 5, CME had to drop out due to an emergency, so we're just going to be hanging out for that half an hour from about 1 p.m. to 1:30. Chapter 7, we've got another little free space there. Sorry, I skipped over Rob Roy. Can't skip over Rob Roy. Rob Roy, my man. We're going to be doing option spreads with Rob Roy at 1:30 for an hour or so. Then Chapter 7 will be hanging out. Chapter 8, Kevin Davitt from Nasdaq, 3:10 p.m. Excited about that. All right, guys. Without further ado, excited about this chapter right now. Chapter 4 with Capital Markets Laboratories. I see backstage Ophir Gottlieb. He's got a Stanford hat on, so you better not be a USC fan or anything like that. So without further ado, let's go ahead and welcome Ophir to the stream. Ophir, how are you doing today?
I'm well, thanks for asking. And just so you know, I also went to USC for graduate school, so you can talk about USC too.
Oh, well, I didn't even know, but you know, that was just the first other, you know, Pac-12 team that came into my head. My little brother's actually at USC right now.
That's awesome. Undergrad?
Yeah, undergrad. He's a junior.
That's fantastic. What is he majoring in?
He is doing like media and journalism. He's kind of following in his older bro's footsteps.
It's a great school for media and journalism.
Yeah, I know, and I mean, obviously, a beautiful part of the country. I'm looking forward to going. I'm going to go visit it because I'm in Detroit right now. So once it gets super cold and snowy here, I'm going to go out and visit.
LA,
and stay with
LA for 4 months.
Okay. Well, Ophir, let's. Do you want to give us a quick preview of what you're going to be talking about today? And if you want to go ahead and get a presentation or screen shared, you're more than welcome.
Sure. Let me share my left monitor. That screen. You should see a slide. Is that true?
Yep. Let's go ahead and pop. Oh, we can pop it up, or if you're ready for it, or
it should be up. Yeah, go. Do I have to do
something?
All
right.
Okay. Cool. I'll actually turn off my camera. Well, I'll talk to the camera for a second. So this is all going to be about charting. Going to talk about, take a step back, sort of like what is a stock chart? So stock chart's it's a series of prices in a series of data in a time series, right? So you take the calendar, put on the horizontal axis, and then your prices. And why is a stock chart? First of all, why the hell would we look at a stock chart? Why is a stock chart different than, let's say, a weather chart? Let's say just time series of weather. And then once we understand why, or what, we'll understand why it matters, because just understanding what something is does not mean it matters. And then once we have that, we'll go into actual charting, and I'll show a platform I have. Let me just go into the slideshow because the slideshow
looks like wait. Sorry, Ophir. I think we might have lost your audio, or it might have just been on my end. Chat, can you guys hear Ophir, or is it on my end? Let's see. There's a little delay here, so we'll wait for the comments to come through. If not, Ophir, you can try hopping back in, hopping out, testing the audio settings, hopping back in.
Sure.
Oh, okay. They could hear you. I think it's on my end.
Okay. Yeah, I am having a little flicker too, but I think it's okay now.
Yeah, you're good. You're good. You're good to go.
All right. So I'm gonna share just very, very few slides and then get into trading. But let me not introduce what I'm gonna say and then say it again in a slideshow because it's gonna get really repetitive. So let me just start the slideshow, if that's all right. I am going to turn off the camera so I don't distract you. And I shall go. All right. I know that people always have disclaimers on presentations with regard to finance. But this one actually matters because we're actually going to get into specific stocks, profit zones, and loss zones, and prices. And so I'm just going to say it really clear, right? This is not a solicitation to buy or sell any security ever, and it's just not advice. Okay, this is just not advice. If at some point in the presentation it sounds like I'm giving advice, I am miscommunicating, or you are misunderstanding, or both. The results are provided for general information purposes, okay? And they're not a substitute for obtaining a professional advice from a qualified person, firm, or corporation. I am not a qualified person, firm, or corporation. I am no longer licensed. I haven't been licensed for 2 decades, so that's not me. All right. So real quick slideshow, and then we'll get the charts. Here's the agenda slide, okay? What are we going to cover? We're going to cover what a stock chart is really, right? So my background is I was an option market maker on NYC, ARCA, and SIBO, as a hedge fund manager, as a head of quantitative research at an institution. We'll just take a step back and it's like, what really is a stock chart? And like I said before, why is a representation of stock prices over time different than the representation of, I don't know, weather prices over time? Or, I don't know, the number of Toyotas sold over time? Why are they different? But what's really important is why what a stock chart is actually matters. So for example, I could tell you what Ito isometry is, right? I could tell you how you can square the expectation of a Ito integral, a geometric integral, and a geometric Brownian motion integral, and it turns into Newtonian calculus. But then you would say, yeah, why did that matter to me? Okay, so I think you must have the what and you must have the why, otherwise there's no reason to do either. So I hope to do that. I will consider it a success if you believe I've done the what and the why. And I'll just point out that these are 2 different things. Okay, these are 2 different things. We need to understand what a stock price is before we start talking about patterns on a stock chart, because otherwise it just doesn't make sense. Otherwise we're just drawing lines. I mean, I could put up a weather pattern and we could draw lines on that. You think that predicts the weather? I'll help you out. It doesn't. And then I'm going to give you a trading plan for every stock and every trade ever. That doesn't mean the trading plan for every stock and every trade. I'm not telling you your trading plan doesn't work. I would never come on and say, I have the trading plan. Wrong. But the trading plan I will show you, if you don't have one, or if you're curious to learn others, will absolutely be appropriate for every single asset you trade over time. Short-term, long-term, medium-term, as long as it has a chart. Right? Forex, metals, commodities, stocks, ETFs, whatever. This is going to be about stocks and ETFs, right? So if you are a trader who's looking for more systematic plans, or you're looking for a systematic plan, like, okay, you look at a chart, like, what do I do after that? I'll give you one. And again, I'm going to reiterate, it's a trading plan. I'm not trying to tell you that I have somehow figured out the best trading plan in the world for you. That is a foolish thing to say, and I would never say it. So the first stock we're going to look at, we're going to go slowly. Okay, we have to kind of introduce what, remember, in this thing, we're going to introduce what a stock chart is, and then introduce why it would matter. But then we'll start moving quickly. So the first half an hour, I'll be like, man, 25 minutes on a stock. And then we're just going to start going really, really quickly. Okay. When we're done together, so you've given me your time on a Tuesday. I think it's Tuesday. Wednesday. It's my belief. I have 3 beliefs. It's my belief that you will never look at a stock chart the same. Okay. I'm not saying if you use our software. I'm just saying you will never look at a stock chart the same. I believe that. I believe that you will find enormously more information inside of a stock chart than you did previously. That's with or without me. Okay? That's my second belief. And my third belief is that you'll be armed with tools and knowledge that will forever improve your trading. Okay? So by the time I'm done speaking in about an hour, I believe those 3 things will be true. It's a belief. Just because I believe it does not mean it's going to be true. I believe lots of things that are not true. But that's my opinion, and I want you to know my opinion before I start, because if those 3 things aren't terribly interesting to you, then you should just get off right now, because why would you waste your morning? Go do something else. Go play with your dog. Go have joy in your life. So that's what we're going to do. I will introduce 3 pattern types, and 2 trade discovery engines. Okay, and that's it. So I'm a big believer in tell you what you're gonna, tell them what you're gonna tell them, and tell them what you told them. Okay, well, I told you what I'm gonna tell you, and I'm gonna tell you. Now we don't need slides. So let me get out of PowerPoint because that's hardly interesting on a trading webinar. I'm going to drag over Pattern Finder, hypothetically, if I opened it, which it does not look like I did. Yes, I did. Okay, and I'll move it here. I'll go back to the stream to make sure you're saying good. Okay, all right. This is going to be a little bit interactive at the beginning, okay? All right, first of all, to no great surprise, this is a stock chart. And I told you I would start with what is it? What it is. Okay. On its own, this thing we're looking at, oh, by the way, this is JP Morgan 10-year weekly. That doesn't matter. On its own, a stock chart is pretty profound. It's pretty profound. It reflects all of the known information about a company. All of it. That's all of its earnings releases, all of its misses and beats, analyst upgrades and downgrades, the news, good or bad, macroeconomic environment, right? Federal Reserve, PPI, CPI data, retail sales data out today, good or bad. Every rumor, every executive change, every product launch, right? It's all here. It's all here. I'm gonna turn off my tooltip. It's all here. That's what this is. Every bit of it, every bit of what I just said is reflected in these bars that we call a stock chart. And because of this reality, because these bars, this time series representation contains so much information. In the short to medium term, I don't believe in the long term, but in the short to medium term, this is in fact a chart of psychology. Another word for psychology is simply opinion. That opinion is driven through buying and selling. None of these things should surprise you. So I'm going to do a little poll. You don't actually have to. It's going to be a poll in your head. I think that if you participate in the poll in your head, it will benefit you. You don't have to. There's no requirement to do anything I say. Okay. So before you answer in your head, I want you to think in your mind, as opposed to thinking somewhere else, about your favorite stock. A stock you're just very, very familiar with. Maybe it's the one you have the largest position in, the one you've been the most successful with. I don't know. But one recently, not like a stock 3 years ago that you made 7,000%. Recently. You just hold that stock in your mind. Just say it out loud or say it in your head like it's stock XYZ. All right. Now, without looking at the chart, without looking at a chart of this favorite stock of yours, don't let it be JP Morgan. I want you to answer, without looking at the chart, is there a price or a set of prices that you think are important in the short term? I just mean the short term. Like, what I mean is, let's say a friend came up to you and said, hey, Ophir, I know you trade, XYZ stock. What are some crucial levels I should know? Okay. So I'm asking you, strictly from memory, without looking at a chart, do you know the price that you would say to a friend? Or maybe it's a set of prices or a range of prices. Just think about it in your head. It's a yes or no. That's not the most important price. It's not the end all be all. Do you have a price in your head? If I name the stock, actually you name the stock, you could name a price. All right, so you can answer that in your head, yes or no. In general, when you run this poll on a very large sample of people, you get about 60% of people say yes. We'll just call it an important price, and that is not a technical term. I just made up a word, important price. I don't know what important means. And those 60% of people that say yes, it's a very interesting yes. I would say yes, by the way. And note that I didn't present you, when I asked you this question, with a future narrative. I didn't say, imagine inflation is lower than expected, or the Fed does something different, or earnings are good or bad, or there's news, surprise. I asked you very strictly from memory with no hypothetical news, if there was a price in your memory, not using a chart, that you think is important. That was individual to you, was individual to your stock. It's very personal. The answer in general is a resounding yes. Okay. I can't obviously tell you what you said. In general, it's a resounding yes. You can see that I've done these polls live with thousands of people, and you can see the results. I'm not just making it up. So that means what we're looking at here, this stock chart, it's a definition of that. This thing is a psychology of market participants expressed as prices moved by buying and selling in the short term. Okay, I said when I started the webinar, I promised you I would cover what a stock chart is. Okay, but then I said, why does it matter? And why does it matter is far more important, because knowing what something is and it having no impact on your life is what we call trivial. So now let's look at why what I just said matters, or why I believe it matters. How about that? I won't impose myself on you. So this is a stock chart. But just because that information, the psychology is in the chart, it doesn't mean we can see it without a little bit of help, right? Prior presenters in the bootcamp were drawing lines on charts. They were showing, I think there was one great line, when in doubt, zoom out. I'll show you that. Right? So I claim to you right now, and the presentation is going to start getting a little faster. I claim to you right now, in black and white, this is my claim, that you are looking at a trading plan right in front of you, this stock. You're looking at an entry price, an exit price, a decision whether or not you would enter. That's my claim. That's my claim. Right now, that's what you're looking at. And if my claim is correct, then I will have provided you with the why does it matter to couple with what it is. Okay. And that's where Pattern Finder comes in. Pattern Finder is it's a web-based, it's a website. It's a web-based software. Okay, now let's get a little more specific. I'm going to pick up the pace a little bit. It'll still be rather deliberate, and then we're really going to pick it up as we go to other stocks. So I just said a trading plan is here, and it's entirely driven by all the people in the market and their important price that I asked you about. That important price I asked you about, right, that we did. And if you study charts enough and ask enough people about their special prices, what you'll learn is not only do people have special prices in their head, but those special prices repeat. You repeat. I ask you, and I ask the guy next to you, and I ask the lady next to you. You start to repeat. These special prices, the ones that we incidentally commit to memory, are the prices where stocks reverse direction. You say, wait, they do what? So reversing direction is a phrase that is much more familiar to people when I call it support or resistance, right? What is support? Support is when a stock is going down, that's a direction. It hits that price, and then it goes back up. That's a reversal. We can call it support if you like. We can call it resistance if you like. It's fine. It's the same thing. And further, it repeats. And because of its repetition, more and more people recognize that price as their important price. There are many of them on the stock chart. Do you see any of them? I'll give you a layup without even doing any analysis. Here's an obvious local low, right? And what do you know? It was support, and it was support. Okay, I took the easy one. Do you see the rest? Do you see the trading plan automatically? My guess is no, and unless you're a chart savant, you wouldn't. I'm not a chart savant. So let's turn to the first of three patterns from Pattern Finder. It's the explicit identification of local highs and lows, or if you prefer, local resistance and support, or if you prefer local reversals, it doesn't matter. These are the important prices. I can turn on the prices where they happened. Semi-helpful. Let's go to our first one, horizontal lines. There they are. Okay. Here's the obvious one. Haha, I knew that one. That one was easy. We probably all saw it. I can delete it. I don't know. Here's one that wasn't so obvious to me. The 105 level. Resistance, 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 gap. Resistance becomes support and support, for example. It went straight to and then above that price after it gapped. And from that moment, the resistance turned into support. It actually turned into support twice. How many people that trade JP Morgan, if I would have asked them the important price, would have said 105? Well, we can actually answer that, right? By looking at all of the volume on the days where it acted as support or resistance, take that volume, multiply it by the price, and you'll get that billions of dollars traded using 105 as a special price. It's obvious, right? Now it's obvious. What if I didn't have Pattern Finder, if I turned it off? Yeah, I don't know. It's not so obvious to me. I don't see it. I don't see it. All right, that's the start. All right. So those horizontal lines are powerful, and we don't even need the prices on them. We could turn them on if we wanted to again, just to see it. We don't. Okay. These are the reversal points, or local resistance and local support, however you want to call them. But when it comes down to it, while horizontal lines are nice, after all, stock prices don't trade sideways all the time. Right? We have a word for how they trade. We call it trends. Right? Maybe it's higher highs and higher lows, or vice versa. We got a lot of lower lows and lower highs recently in this bear market. So the next layer of pattern finder is to algorithmically choose these reversal points that define a trend, not a horizontal trend. The trend of the stock. So we'll turn on the second one, trend lines. So now the platform has found the direction of the congestion points or reversal points or whatever you want to call it. And it connected them in a way that represents not just the psychology of reversals, but the trending direction of those reversals. These are higher lows. These are higher highs. Some people would call this trend support. Some people would call this trend resistance. Call it whatever you want. Now, I think it's a proper trading approach to draw in profit and loss zones on a long-term chart. Okay, and you want to start with loss zones because it reinforces an idea that a trade can lose. Right? And the name of the game when you're trading is to stay in business. You cannot trade out of a hole if there is no capital left. But before I do that, I promised you something on the slide. I should promise you something else. I said I was going to give you a trading plan for all stocks and all charts, long or short, that you can use. I didn't say it was the only one, but I said it was one you could use forever on any chart. And here it is. It's basically a checklist, and it's something that must be satisfied to trade. We're actually looking for a reason not to trade because there are so many good opportunities in the market when you have a platform like Pattern Finder, and I'll show you that. I haven't proved that yet. That's a statement that you should say you could prove it. We want to reduce the losses and increase the wins. We will never eliminate our losses, and we will never only have wins. That's an unrealistic point of view of trading. But we can try to improve our odds, and that's what this plan or system is intended to do. And the plan is systematic, it's easy, and you can repeat it. And once I do it once slowly, you'll be able to do it very quickly on any stock. So we'll start with a long-term chart. That is why I am on a 10-year weekly chart. If and only if the long-term chart looks good, we will then define an initial profit and loss zone. It's preliminary. Then we'll move on. And what does good mean, Ophir, before I get into it? Good means there is room to the next resistance point, right? The stock isn't toppy. There is defined support line. If we're getting long, we want an uptrend, right? Why fight the tape? There's no need to. There's no need to fight the tape. If that is satisfied, we'll go from the long term to the medium term, and then we'll go from the medium term to the short term. And finally, the trading decision, if all three pass, we'll have to look at RSI. That's the whole plan. Long term, medium term, short term, RSI. So let's draw in some profit and loss zones. It's good psychology, as I said, to start with the loss zone. So I'll just draw it in. It's pretty easy. Current price to support. Easy enough. This is preliminary. I don't make decisions on long-term charts. I do kick trades out if the long-term chart doesn't work. And my profit zone, the stock is actually here. Sorry about that. And the profit zone, as I see it, you can go up to trend resistance if you want. I actually see this all-time high right here for JP Morgan, so that's kind of where I would be at, right? So if I was only trading on the 10-year chart, which I am not, which I do not advocate, and which I will go further than, I see exactly what I said. An uptrend, defined loss zone, profit zone, support, profit zone is larger than the loss zone. Okay. This passes the sniff test. This is not the decision. This simply says we're not going to throw it in the garbage. All right, let's go to the medium-term chart. 3 years. And I'll turn it into a daily. These shapes in Pattern Finder actually have built-in intelligence, so they've stayed at the same stock prices as this axis changes. Okay. Now I see this and I say, let me turn on my third kind of patterns. It's cup and handle, cup, ascending base, flat base consolidation, and double bottom. Some of you know it as can slim. Let's turn those on. Magical. So what I see is back-to-back double bottoms. Double bottoms can act as support, but in general, they also act as resistance where they end. So I'm going to actually drop my profit zone. I'm not going to fight through this. Bring it down. But there's something else we see. You see that peeking over there on the left-hand side? I'm going to zoom out with my mouse. That's an ascending base. Okay. An ascending base is just a fancy way of saying a series of higher lows, right? Higher bases in a short period of time. Ascending bases are beautiful when they're bullish, right? That's an ascending base must be bullish because the bases are ascending, but they do tend to act as fierce resistance. And as you can see, when the stock could not hold its fourth higher base, it didn't stop here, it just collapsed. Okay. And this is not the COVID low, by the way. This is the COVID low. Is that right? Maybe this is the COVID low, actually. Let me see the date. Okay, this is the COVID low. There you go. You can see that the top of the ascending base then acted as a little bit of resistance, support, resistance, right? So I'm going to take my loss zone and say, no, I'm not fighting this. If it gets to the top ascending base, I don't want to play anymore. I don't want the catastrophe. I'm cool. I'm cool. So I've reduced my loss zone. I've actually reduced my profit zone. I still have the same belief system. The profit zone is larger than the loss zone. Okay. It's well defined. I'm still okay with this trade. Haven't made the trade yet. And I said, if we pass the long-term test, when we pass the medium-term test, let's go to short-term. By the way, what I determined to be long-term, short-term, and medium-term, pardon me. What I determined to be long-term, medium-term, and short-term is very personal. If you're a day trader, long-term is 3 months, medium-term is 5 days, short-term is 1 day. I'm just doing my version of it. It doesn't matter. The applicability of the system is the same. Long, medium, short. Let's go to 18 months. I see some congestion points here, which we could call, their important prices, their reversals, whatever you want to call them. I'm going to tighten up my loss zone. Okay. I feel really good about my profit zone. And I'll go ahead and turn on some moving averages. Here's the 200-day moving average. Magically, the 200-day moving average is right on this repeated point of congestion. It's not magic, it's psychology. This isn't magic. This is where charting, which is what we're doing, marries with technical analysis, which is what a moving average is. This is a combination of charting and technical analysis. All right, so hypothetically, I would take this trade now. Do you guys remember the last step I said? I said there was one last step before I make a trade. I said it was RSI. And why do I use RSI? I do not want to get long a stock with an RSI above 70 or really even 65 because it's overbought. And I don't want to get short a stock. I short stocks too. I don't want to get short a stock where the RSI is below 30. It's oversold. So where are we? I want to turn my tooltip back on. Where are we with JP Morgan? The RSI is 65. That to me is too high. So, and yes, I knew that this first chart I would show you would end up like this. I knew that it would pass the sniff test for 3 years, for long-term, medium-term, and short-term. I knew I would be adjusting my profit zones and loss zones. I knew I would be using charting, double bottoms, ascending bases, congestion. I knew that I would be using technical analysis, the moving average. But I also knew when it came down to it that my first one would not be a trade. And the reason I did that is because I promised you a trading plan, a systematic trading plan. I didn't want to distract you with a trade. Not yet. All right, the rest of this presentation is going to go faster. Hopefully I've been successful in my endeavor to define what a stock chart is. That was the beginning, where I said, this is a stock chart. And then the why that matters. And then how to create a trading plan. Those were the 3 things I wanted to do. And I hope that I have done them. I believe that I have done them. You are the arbiter of whether I've done it for you, not me. All right, let's clear this out, go a little bit faster, and start showing how Pattern Finder can find you trade ideas in any industry at any time with any requirements, whether it's fundamental, technical, or charting. I will clear all this out. I will even turn off RSI. Do you remember when we started with this? It wasn't that long ago. I said this was a stock chart. And I said, it reflects all of the known information about a company, all of its earnings, misses and beats, analyst upgrades and downgrades, news, good, bad, macro, rumors, executive changes, product launches, that it was all here. Every bit of it is reflected in these bars. Turn off my tooltip. And that because of that reality, a stock chart in the short to medium term is in fact a chart of psychology. And then we saw how that psychology can produce profits in a trading plan. All right. Now it's time to pick up the pace. We started this journey with me self-selecting a stock. Right? That's great. We all have stocks we like to look at. Type in Tesla, type in Apple, fine. But Pattern Finder, I've shown you the 3 pattern types. Pattern Finder is what I believe to be the most powerful idea generation platform in the world. And I can't actually say in the world because it covers North American stocks and ETFs. So I can't say the world. That's not fair. All right. There are 2 discovery engines. Okay. The first is down here. It's pattern breakouts. The last one is far more powerful. Pattern breakouts. All right, let me move this thing here. So I'm not going to go through 97 examples. I want to look at stocks that are through their 18-month resistance and their 3-year resistance. So both timeframes. I like, as you can tell, I like time frame agreement. Right. So I'm looking for tickers essentially that repeat. Right. You can go through all of these. And the one that I usually go through, but it does change day to day, would have been Chewy, but I don't see that. So let's maybe check CLBT. A stock that has been getting pummeled. Let's stay away from tech because tech is getting, how shall we say, obliterated. And I want something that's within the last day. Okay, we'll go with Chewy. Go to a 3-year chart. Let's go to a daily chart. Select all of our patterns. Okay. So the pattern breakout told us that it was through, I'll zoom in, that it was right through this resistance. It now came back down, but you wanted a breakout, that's a breakout. Right? And I could draw in a profit zone and a loss zone if I wanted to. Start with the loss zone. We'll go quickly. Start with the loss zone. It's just good psychology, in my opinion. This would be a super, super, super tight loss zone for me, and I'll tell you why. The bottom of a cup is, by definition, a point of support because a cup only forms when it hits a bottom and then comes back up. 1, 2, 3, 4 times it acted as support. That's where I'm at. Profit zone? Yeah. I'm going to go through to the top of the cup. Right? Here's the top of the cup. The top of a cup also, by definition, is resistance. And I say by definition because the cup is not formed. You cannot draw a cup until the stock goes back down. So 1, 2, 3 times in a row is resistance. Okay. So what's the next thing we do? Well, that's a long term. We'll go short term. Here's the exact same reality. When you start zooming in, you get a little more granularity in the prices. I would actually increase my profit zone just a bit to the top of this cup. I'm maintaining the support. I'm out. If it goes to here, I'm not even going to go down to support the trending support. No thanks. Bottom of a cup is good enough for me, especially when it's reiterated 4 times. 1, 2, 3, 4. Okay. We can turn on some moving averages. Turn on the 50-day and the 200-day. I know everyone has their favorites, so I try to kind of stick with that. Magically, The 50-day, which is in green, is right at congestion in the bottom of our loss zone. So if you're a technical trader, yeah, you'd be out if the stock went to or below the 50-day moving average. Alternatively, if you're a technical trader, you might be out the day the stock went below the 200-day moving average. It lines up, and it doesn't line up because it's magic. It lines up because it's psychology. And that question I asked you to begin with, where 60% of people say, yeah, I know price without looking at a chart. The more it repeats, the more volume tends to come during those periods. And that's when we tend to see reversals. Okay. And finally, we can go to the 9-month chart. Since we can't, by the way, the reason I'm not going 5 years or 10 years on Chewy's because it didn't IPO that long ago. Okay. Here's a 9-month chart. I would choose the same loss zone. It's still reinforced here. That's the bottom of the cup. It was a little bit of support here. It was support here. It's just getting reinforced. It was a top here. I'd probably bring my profit zone down to the short-term trending resistance, right? Be a little less greedy. My profit zone is larger than my loss zone. It's well-defined. 3 time periods agree. Last thing I have to do is check my RSI. I'll turn my tooltip back on. Hover over the last candle. RSI is 56. Okay. Obviously, I like lower RSIs if I'm getting long, but remember, we asked Pattern Finder for a breakout. You're just going to have a strong RSI. So this trade would be maybe something I would consider. I'm not, in full disclosure, I'm not trading Chewy because it's earnings season for me, and I'm also an analyst of record, so I'm focused on other things. But yeah, maybe I would bring up the loss zone if I'm really tight. I bring it up to the 200-day moving average. But yeah, this is very defined. You will not win on every trade, but you can have a plan and a system. And this is a real-life, real-time example of using Pattern Finder to find ideas, systematically assess them, and then systematically create a trading plan. While we're here, just for a second, before I go to the really powerful part, it's good to note that Pattern Finder has all of the fundamental information on a company you could ever want. So for example, you click on Snapshot. All right, you got some EPS history, some revenue and free cash flow data, some metrics. You can see the number of funds that are owning it is going down. That ain't good. You can see valuation metrics, but you also have our ratings. So there's an overall rating, which is for us is a number between 1 and 100. The overall rating is an amalgamation. It is comprised of 3 other ratings. One is our buying strength rating. So this is a number that goes from 0 to 100. 100 is incredible buying strength, and I'll talk about what it is and how it's computed in a second. 0 would be incredible selling strength. So the stock has some reasonable buying strength, and we know that because it got through resistance, right? EPS rating is very weak, so fundamentally it's not strong. We have its relative strength over the last year versus the Russell 3000, weak. Over its industry, decent. These are numbers that go from 0 to 100. It doesn't have the strongest RS profile. It's terrible, but it's not like the most powerful signal I've ever seen, and I'm going to show you some powerful signals next. If you're wondering why the stock is moving, you could just go here. You can read some news. This is great. The patterns will tell you like, hey, there was a cup and handle. There's a cup with no handles. It'll tell you what's going on. We're really, really, really big into fundamental data, monstrously so. And so here's where you would find all of the financial information, including forward PEs, forward price to sales, profitability measures, implied growth, balance sheet data, cash flow data. Okay. This is really interesting. The relative strength, remember I said the relative strength wasn't that strong? So we extrapolate daily volume in real time. So the market's been open for 3 hours. We're saying today, Chewy's on track to do a little bit less than its normal, its average on 50 days, 50-day trading volume, right? So this is the average over the last 10 days, month, and 3 months. We're saying it's going to be a little bit below 3.82 million. Of course, buying could accelerate during the day, but this isn't like particularly interesting on a volume day. I'll show you things that are particularly interesting on a volume day. What is interesting, I would say about Chewy is that over the last 30 days and 50 days, the buying volume is 35% more, 1.35 of the selling volume. And on the last 50 days, it's 65% more than the selling volume. And that is why it does have a buying strength of 70. It's not overwhelming. I'll show you overwhelming. But yeah, on a scale of 0 to 100, it's a 70, sure. All right, you can also see holders information. And then, of course, if you want to go to our community, you can start discussing trades very openly. It looks like this. Hypothetically. And here it is. Here's all the trades, okay, what people are talking about. All right, let's go a little bit faster now, and I'm going to clear everything out, introduce a far more, well, I believe a far more powerful idea generator. One that I'm comfortable to make a bold statement that I think it's the most powerful there is, but you don't have to agree with me. Of course you don't. That would be ridiculous. It is the screener. All right. So we have pre-built screens for you if you want, with relative strength, volume, and technicals. I'll talk about those in a bit. In fact, we'll use some. Fundamentals, if you're looking for, let's say, long-term revenue growth or long-term revenue growth with positive free cash flow, or even hyper revenue growth, and you don't care about free cash flow. But the most important thing to me is I want to create a screen with you. I want to find an idea, right? The point is not to just click around on charts. I want to find it. And since people don't love shorting on these presentations, I'm going to do something that's bullish. But you can do the exact opposite if you're looking for shorting ideas. So I'm going to create a new screen. Really simple. Here it is. I want to make sure the companies I'm looking at have at least $100 million in revenue, because I don't think companies should be public if they don't have at least $100 million in revenue. It takes us to 3,600 companies. I want them to be growing revenue. So in the last year, I want revenue to be growing at least 15%. Easy enough. That takes us to 1,600 companies. Not only that, I want to see what analysts think about this year. I want that to be at least 15%. And I'll go a step further. Next year, I want it to be at least 15% growth. Right? So these are companies which are growing. There's 330 of them. I'll even go a step further. Since we are in a recessionary and inflationary environment, only certain companies will be actually growing revenue quarter over quarter or year over year. So I want to look for that revenue acceleration. So I'm going to come down here. Pardon the scrolling. I want revenue to have been accelerating the last 3 or 4 quarters. Now you can take a time out and say, yeah, what does that mean? Every metric actually has a question mark to tell you. So what does revenue acceleration over the last 4 quarters mean? This is what it means. The metric carries a value of 1 if the stock in question has seen revenue increase consecutively for the most recent 4 quarters compared to the same 4 quarters 1 year ago. So we're at 278 companies. I would actually like to go to free cash flow margin. I just want to make sure that it's not negative free cash flow. I'm just not in the mood with rates going up to be dealing with companies if I'm looking for something bullish that don't at least have break-even free cash flow. So I'm going to say a minimum of 0%. Okay, 131 companies. I'm not a big microcap trader. You can be. You could look for microcaps trading under $2 if you want on this. I'm not. So I'm going to say a minimum of $500 million market cap. This is just personal. You do whatever you want on the screen. There has to be some kind of volume if I'm going to try and trade this with size. Right, so I'm going to say the average volume, let's say in the last 4 weeks, the last month, is at least 250,000 shares. That's not a big number, sort of the lowest I would ever look at. I don't know why that says 0. That's definitely not true. Let's try that again. Well, oh, that's up-down volume. Sorry, that is not what I meant. I wanted total volume. No, average volume. Average volume over the last 30 days to be 250,000. Sorry. All right, back to 105 companies. All right, now I said I want to buy things that are bullish. I'm going to go to our proprietary ratings, and I want something that's in the 80th percentile or better of the buy-sell rating. And you say, okay, thanks. You've said that now like 4 times. What is it? Good question. It's a rating that's identifying buying and selling activity in a stock over the last 50 days. This looks over 50 days, okay? We have put heavier weight on just the shorter term to create a rank system where stocks that have heavy buy to sell volume, so volume on up days versus volume on sell days, strong relative strength in the last 3 months, and strong stock returns. They get the higher rating and vice versa if they're selling. So you could also consider this, if you wanted to put this from 0 to 20 or even less, that would be where you would find companies that you might want to short. And finally, I am a believer in relative strength. Relative strength is how a stock has done relative to a certain basket, like its industry or that S&P 500 or the Russell 3000. You can chart all of those. I can show you that. But I just want to go to the 3-month, short term, 3-month RS. I also want that to be in the 80th percentile. Okay. And we're down to 8 companies. I'll even go a step further. I want the stock price to be up over the last 10 days. Percent change over the last 10 days, at least 0%. Now I'm down to 7 companies. I'm going to save the screen. I'm going to call it fundamental strength, RS strength, and buying strength. Feel free to name it as you like. Close the editor. And here are our 7 companies. I'll sort it by sector. Look, there's just no way to say it a different way. I think the last presenter was touching on it too. We are in a bear market, and what's working in an inflationary environment is energy. So I'll click on ESTE. By the way, I can just view this as a watch list. It's just easier than going back and forth between the bottom and the top. I'll save the watch list. I'll just call it Benzinga. All right. Now I can go through the tickers really quickly. ESTE is an energy and minerals company. Now we have buying strength that's 89, overall strength 99 out of 100. RS is strong. We'll throw on all our patterns. Would go through the same rigmarole. Here's the ascending base. That would be my loss zone. There's room to the upside. There's a cup of handle. That actually might be my loss zone, the top of a cup. Go to 3-year. You're going to find similar things. It fell through support, came back. That looks like there's strength. And then the short term. Okay. The last thing I'll show you is if you want to use a pre-built screen. I love this one. It's heavy bullish volume on the day. We also have heavy bearish volume. And here are stocks which are really moving on the day with a lot of volume, right? 4 times average volume, 7 times average volume. 10 times average volume in Terra. So let's go daily. So this is where the idea, here it is. Will it go through resistance? I don't know. It's got a wall here from a cup of handle, right? So let's see. Then you can do it with tech and things like that. So I'm running out of time. And I did promise you 3 things. I'll go back to the slideshow for just a second. Hopefully that's showing on the, go back to the presentation. All right. I said what we would cover. We covered it. This is called Pattern Finder. It allows you to build a trading plan on any stock you want. With a system, any system you want. With built-in algorithmic congestion points. Built-in algorithmic trending support and resistance. Built-in can-slim patterns. A built-in screener. And built-in pattern breakouts. You can get the product at bit.ly webinar_pfinder as in pattern finder. I'm now going to take QA. I said I would take Q&A. So I will take Q&A. It's pattern finder. So bit.ly webinar_pfinder. If you prefer, it's just easier. You can just go here. This will take you to a page which looks like a sign-in page. People sign out. Well, I have to log out. I won't log out, but I'll open it in incognito. Okay. It'll look like this. You just click on Get Pattern Finder, and you'll have a demonstration of what the software is and what it does. Okay. I also probably should have done this. All right. So let me get back to having a little trouble getting back to the presentation. There we go. I'm going to stop sharing my screen. I'll start the camera. And I'm open to take any questions if you have them. And if you don't have any questions, then I'm happy to let you go about your day on a Tuesday. So my head is turned because it's on a different monitor. All right. This is in order. If you guys have any stocks that you want me to pull up, I'll actually start the screen share again. Sorry. Then you can ask me. And if you don't, you haven't hurt my feelings. I'm happy to let you go about your day. Let's see. All right. I don't actually see a lot of questions, which is perfectly fine with me. So I will.
Yeah, hold on. I'm just seeing because there's sometimes a little delay between the stream and the comments. So we'll wait a couple more seconds to see if we've got any tickers or questions flying in. But that was a great presentation out here. Really, or Easy Mike wants to look at Nvidia into earnings.
Okay, yeah, do that. Used to be long Nvidia, not anymore. So we'll just use the same thing. 10 years. The stock, as I think everybody would have known before we showed it, the stock. Let me make sure patterns are. The stock came through its long-term support. It was a devastatingly bad chart. We've had this crazy rally recently, so there's no doubt that if I got in, my stop zone would be this support. I don't want to revisit that. I go to the 3-year on the daily. Look, there is some room, right? There is some room. There is a cup here. The top of a cup, so I would probably be out at the top of the cup at least, if not resistance. Support, yeah, probably around here. This was a top, a top, a top, a bottom, right? Something like that. And then 18 months. Keep in mind, there's not a whole lot of upside left to NVIDIA. There's a lot of downside left and its earnings. For me, this would be a no-go. I don't really do earnings bets anyway. But for me, I would say, no, there's not enough upside for me. Does that mean NVIDIA couldn't go to 220 today after earnings? Of course it could. I don't know. But to me, this would be a pass. In other words, the reason it's a pass is because I know I can find better ideas. I know I can with Pattern Finder. I can find any idea I want. So that's my very quick take on NVIDIA.
Got it. And then someone else wanted to look at Chipotle, CMG.
Yeah. One of the few places my cousin, who has a lot of allergies, can actually eat.
Really?
Yeah.
So we're bullish.
Yeah, well, I like that. So it's pretty clear where my support would be. Like, here's the end of an ascending base or the support line. There definitely is room. I would say very, very quickly that the long-term chart passes. Okay, let's go to the medium term. I mean, pretty clear my profit zone would be at this resistance line. That was the kind of a diagonal double bottom. So I would definitely be out here. That would be my profit zone. And my loss zone would either be the bottom, the double bottom that was confirmed with 2 cups, by the way. So if you're holding Chipotle, you do not want to see it go below 121. I'd probably stop out here. And then 18-month. Yeah, I mean, this looks like very doable to me. I don't know what earnings are. Let's look at the RSI. Is there any problem with RSI? No, there's no problem. This is okay to me. It's not the greatest chart I've ever seen in my life. Buying strength is super weak, so be careful, right? There's not a lot of buying strength. In other words, up days are not getting the volume that down days are. So I would be careful, but does it pass the sniff test for the system? Yeah, it does. I bet you I could find better, but yeah.
All right. What about MM Deep wants to look at the chart for Bitcoin?
Oh, we don't have Bitcoin. Unless there is an ETF. What is the ETF?
BITO maybe?
Right. Is that right? Is that Bitcoin? Just want to make sure.
Looks like the Bitcoin chart for sure.
Yeah, exactly. All right. So this has not been around that long, unfortunately. So we can do the 3-year daily. This looks, well, it's definitely found a base. I don't think we needed a chart to know that. Whether it holds the base or not, I don't know, but it looks like, look, it has come through this resistance. It came through this very long cup. That does tend to be a resistance, so I'd be careful there. I would probably stop out at its former resistance, former resistance turns into support. I don't love the chart. I don't think we have buying. Yeah, we don't have buying strength on ETFs. We're working on that. So let's go a little shorter term. Look, I would put my loss zone down here, the trending resistance, which will now be support, and I definitely put my profit zone right at this very long cup. I would definitely do that. That's actually not a cup; it's a saucer, but it doesn't matter. So that's how I would trade this if I traded it. I don't love how it looks.
Got it. Someone wants to check out Sunrun, ticker RUN.
Sunrun, yeah, I used to follow that company. 10-year. 10-year looks really good. It might be getting pretty close to, let's do the monthly. It might be getting pretty close to, interesting, pretty close to resistance, but ooh, yeah. I don't know if I love this. The next, my profit zone would be through resistance. If you believe there's going to be volume, it would be at this base. My loss zone would be down here. Let's go shorter term. Yeah, so I simply don't love this chart because it's at resistance. So I don't see a lot. I could find a chart where I'm going to have, if I drew my profit zones and loss zones like I did, my loss zone would be larger than my profit zone. I'd probably do something else. It's not the worst looking chart, and it has a lot of buying strength. So 94 out of 100 is very strong. So that means on up days, there's a lot of volume on up days. So could it push through that resistance? Absolutely. If this had a buying strength below 50, I'd say no way. With that kind of buying strength, it could push through that resistance, and all of a sudden we're looking at this as a profit zone. So for me, it's a pass because I know I can find trades that are absolutely excellent. But yeah, I could, if someone told me they took that trade, I wouldn't say they made a mistake. What's the RSI, by the way? Let me turn on my tooltip.
You said it there on the bottom. It looks
Yeah,
like it's about
60.
60 or so.
Yeah, it's at 60. You can see the tooltip. Yeah, that's if you believe that buying strength continues, that there are buyers, then it will push it through resistance, and then you can get one of those. I'm not going to tell people it's going to happen, but you could get one of those parabolic moves where it just goes boom. But that's not my prediction, but it's possible.
Right. Let's see. Ophir, do we have time? Looks like we've got a couple other tickers flying in the chat.
Sure. By the way, guys, before you can also just get Pattern Finder and do this. There's endless ideas, but go ahead. Yes.
Yeah, Pattern Finder. We'll throw that link in the chat. Did we already check out Amazon's chart?
No, we didn't. Probably, I'm going to say ugly. Yeah, it's through support. If you're really a believer that it's going to push through the support, then yes, there's clearly upside. All of this congestion is far higher, right? This cup, this double bottom, it's way up here, right? You got to believe it. I'm going to turn off RSI. RSI ain't going to be a problem for Amazon. Let's go a little shorter term and sneak in on the daily. Yeah, I mean, you got to really believe it's going to push through. Let's see its buying strength. Really, really weak. Here's a weird thing. How's this for contradiction? When buying strength gets below like 5 or 10, it's almost like RSI below 30. It almost becomes, there's almost so much selling that it turns into a buying signal, right? A contrarian signal. There is a very specific methodology to trading stocks that are in technical failure, which Amazon is in technical failure. It's slightly more advanced, but if you have that in your toolkit, you could definitely use Pattern Finder to set up your profit and loss zones. The question is, where would you get out? And we're probably going to have to go shorter term to know. Yeah, you'd have to get out kind of in this 87 range. Let me go even shorter term. Yeah, keep a tight stop. This is the death spiral. Let's go to the long term. Yeah, it ain't good, right? So here's that 82, 85 range. You just don't mess around below 85. Just like you'd be out. So it's I would rather find things that have more buying strength. Also, it's odd that Amazon does not have a lot of buying strength, considering tech in general is recovering a little bit. Not today, but I don't love it. Long term, by the way, if anyone cares, I think Amazon's nice.
Yeah. All right, let's see. Catching up on the chat. First Solar FSLR. That one's, I mean, that one's basically at like all-time highs. It looks a little different than a lot of other charts.
This is a great chart because what do you do now, right? I'll bet you the buying strength is insane. 95 out of 100. So we do have to use our Fibonacci's and our extensions. So this would be our Fibonacci extension. My profit zone, look, if you're looking parabolic, my Fibonacci, is 205. That's where I'm going parabolic. My loss zone, let me go a little shorter term to see what I got because I don't think I want to go quite that low. My loss zone might be this prior resistance, which would be the 147 range. So maybe I give it $15, about 9%. That's, you usually want to have like a stop at 7%. I'll go to 9%. I'd have the stop on. You would have to use your Fibonacci's in order to pick a profit zone. I do note that, if we get through this, if this prior resistance does not act as support, there's a long way down. Okay. Having said that, you look at the 18-month, it's got a really nice upward channel. I don't know, like it's pretty compelling with 95 buying strength. I think I can find better trades. I think I found better trades on this presentation, but I could see why someone who wants to trade this parabolic stock could make a really strong argument that on the shorter term charts, it looks okay. Let's even try 9 months. I mean, there's room. Upward channels are beautiful when there's higher volume. And actually, let's just take a look at the volume. Yeah. Look at the up volume to down volume over 30 days and 50 days. Almost 50% more up volume to down volume. There is a lot of interest in this name right now. Is RSI a problem, though? Let's take a look. I don't know if RSI is a problem. Wouldn't surprise me if it is. RSI is at 66. Okay, it would be a no for me because RSI is at 66. That would be my final decision. Okay. I think maybe I lost the host. So guys, one last time. I think pattern.
Oh, I'm here. I'm here, Ophir.
Oh, sorry. Go ahead. Sure, sorry.
No, we were just full screen on charts here. Let me get us back on the. There we go. Yeah. Okay. Yeah. Ophir. I mean, yeah. If we want to leave it here, I think we had a couple more tickers, but we can leave it here. And yeah, again, pattern finder. Well, we'll go ahead and get that link in the chat if you guys want to go check that out. But Ophir, I mean, I've followed you on Twitter for a while, so I had a great time kind of following you along, seeing how your thought process works, how you look at some of these charts. I thought it was a great presentation. If anyone has final questions, anything like that, speak now or forever hold your peace.
That's right. You can never ask a question other than in
Nope.
the next 60 seconds. In the rest
Yep.
of your life, that's it.
Right now is your one shot. Yeah. And I'll drop as well, Ophir, your Twitter handle. Like I said, I've been following you on there for a while. So if folks want to go give you a follow there, go check out Pattern Finder, the website. I don't know if do we have some sort of like Benzinga code or something we can give them?
I don't think so. I just want to, real quick, since you talk about Twitter, there's like 7,000 fake accounts, and I'm not a fake blue check. I didn't buy one. So just please, the reason I say that is there are people who spell my name with like a 1 instead of an I. They immediately direct message you about like a Bitcoin scam. I just want to be really clear. I will never direct message you anyway, but I'll definitely never direct message you about asking for money or for Bitcoin. Please, 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 please don't fall for that. It's not me. I won't do it. I never will do it. I never have done it. It's not me. People close to me, like my social media, have been scammed. Just please, 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 please look. Now that Elon Musk has turned on anyone can get a blue check, I can't tell you look at the blue check. I can't. So just please be careful, because Elon Musk has turned on the scam machine. And just please don't get scammed. If you don't like the software, fine. Don't lose your money to a liar. So please, 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 please make sure it's me. Okay.
100%. Yeah, guys, be safe out there. If anyone's ever asking you for a Bitcoin or a crypto address, that's a huge red flag. Just right there, you got to know that that's probably not something you want to be partaking in. But Ophir, again, thank you for participating in the Benzinga Bootcamp today. Yeah, of course, we'll chat soon.
All right. Thank you so much, Aaron.
No problem. All right, guys, I see Money Mitch hanging out backstage, so we're going to be hanging out for the next 30 minutes or so till Rob Roy comes on, and we'll be talking about option spreads with Rob Roy, 1:30. Excited about that. I do want to talk a little bit more. I want to check back in on our trading competition, see how I'm doing. Let's see. How's my portfolio doing? Let's get a little refresh here. Oh, man. All right. I went long Upstart as a kind of I told you guys I needed to make some moves. I needed to find a stock that was really going to potentially give me some big returns. And I thought Upstart was going to be that option for me. Not really looking like that right now so far. So Upstart, I'm down big on. But outside of that, my Meta is doing okay today. Some Oxy Petroleum, some Apple, some Southern Copper. So I'm diversified. I'm pretty well diversified here between metals, between all these different things. Let's check the leaderboard. In 24. Oh, look, Shelly, we're neck and neck. I'm only about $20 up on Shelly right now, so we'll see. Oh wow, look, I've made a lot of trades. I've made 40. I'm in the 41. I'm over trading right now. Look at AC. See, this is what really matters. Is how much money can you make in the least amount of trades? Like my profit per trade right now is really low, whereas some of these people like Clarence only took 3 trades to make over 1.4%, doing pretty well. But all right, let's go ahead and pull up my Benzinga Pro. I saw someone in the chat saying SPY was ripping. Let's go ahead and take a look at the SPY chart, see what's going on there. SPY. S&P 500. We're gonna get a let's take a look at the 5-minute chart here. All right. So I mean, like it looks like. So let's see. Where do we open today? Here's open. Came all the way down. So our lows of the day on the SPY are about 395.20, 395.20. We're up to 396.80 now. Big red 5-minute candle here in the past 5 minutes. So selling off there a little bit. What I would be watching here is kind of this level, 396.50. 396.50. So in about 25 cents and about a quarter, we're going to get back down here. I'm hoping we can stay above on top of this level here that could act as some support here. Then maybe we can keep moving higher, because it does look like, I mean, if this pattern, boom, up, little sell-off, boom, up, little sell-off, boom, up, little sell-off, I still think this is bullish unless we drop below this 395.50 level. So I might, if I were swinging this, I would definitely be swinging the SPY on the long side, and you can set your, price target is to yesterday afternoon's highs kind of right here at around $400. You hit that level exactly and then sold off. So you do have a couple bucks there, I think, to swing on the upside. Microsoft, Google holding up the cues. Yeah, I saw Apple was a little weak today. Let's go over to Google, up about a percent today. I don't know. I mean, I think these big tech names, like I'm still not completely I'm still not completely sold on them, but we'll see. Enphase had been doing work. Yeah, let's check out Enphase. All right. I mean, so here's the thing with an Enphase right here. I think this actually becomes a pretty... So I don't like the way this chart looks. If anything, I would be looking at like some 225 puts that expire in like a month or two, because it looks like, this gap could very well get close to being kind of filled on the other side here. But if you were interested in playing on the long side, here's the good news. Another thing is this kind of looks double toppy for me right here. Honestly, I might go short Enphase. Nike, Skechers, both lousy reports. Foot Locker whacked today on Target. Reports Friday, could do the same. Yeah, Skechers is a wait. What's the Skechers ticker? SK. What is it? SKX. SKX, I think Skechers is a short. Sorry, this stock sucks. This company sucks. I mean, no, who the heck buys Skechers shoes? I don't know. Check out the financials or the fundamentals. 13. I mean, it's kind of cheap, less than 1 price to sales. Forward PE 13, but I mean, still, I don't know. I'd rather own Crocs or Nike over Skechers for sure. But the Tokidoki collection is nostalgia AF, Shelly says. I don't even know what Tokidoki collection is. Oh, Skechers does make good golf shoes. That's true. But so does I mean, Skechers. I feel like there's a lot of competition there, right? Nike's been growing a lot in the shoe game, in the golf shoe game, and then FootJoy. I feel like FootJoy is the premier golf shoe. Check it on Tesla. Ooh, Tesla's coming back here a little bit. I mean, this chart to me is just so ugly that I think you would have to like really... I don't even know what levels we would have to clear to get me interested in this chart. Probably get back above this little double top we had above here, above 314. Stock is ugly to me. Alrighty. Catching up on the chat real quick. Anyone got some trades they've got out there? Abel Marley thesis taking a break. ALB high or low. Is Tim's still the shoe in New York? I don't know. I don't live in New York. I don't go to New York. It's a Tokyo-based artist that was trending when we were like 14. I'm really liking. I might actually. I'll let you guys know tomorrow if I do. But I might buy some real. I might actually spend some money on some end face puts here. Looks like a good entry point to get in on those. I mean, this gap filled down to like 2. I think you've got a ways to go here. It's expensive. I mean, look at this. PE forward 62, 21 price to sales in this environment. I mean, I understand there's a lot of growth there. And I understand it's bad ARC support. Is that supposed to be a joke? Like bad arch support. You're trying to make a joke. Yeah, I mean, so here's the thing with ARC is that as long as it maintains like this level kind of down here, I mean, it dropped below this consolidation level. It dropped below $35 like briefly on this one day. You can see the RSI down here. I know the RSI is super hard to see. Let me go ahead and try to fix that. I feel like we do this all the time. All right, yeah, let's make it white instead. Yeah, so the RSI, you can see here is like right about 50, so it's not really oversold or overbought right now. But if I had to guess, I'd imagine this starts heading back more toward the oversold territory before you get another bounce again. But I mean, ARC had its best day ever. You can see right here, or one of its best days ever a couple days ago when Nasdaq finished up more than like 4 or 5%. So ARC was getting a little bit overextended. What's going on with Nintendo? I do like, I'm starting to look at Activision as a buy because right now, so Activision, you can see it with the chart with kind of the lack of volatility. It's just been trading sideways because it's been in this deal with Microsoft supposed to acquire Activision. There's been a lot of, scrutiny over, is this deal going to go through or not? Because, because Sony's trying to stop the deal from happening, from saying, okay, we don't want Microsoft to buy it and to make Call of Duty an Xbox exclusive, antitrust rules. I'm saying I think even if the deal doesn't go through, Activision has upside potential from here. Realistically, if the deal wasn't, going on, Activision would probably be trading closer to like $45-50. And if the deal does go through, it probably will get hit. And I think from there is when I would potentially want to buy it. But I think there still is a chance the deal does go through. Maybe not. BTU breakout, Jim Cruz is saying. Yeah, this one kind of scares me with just how, we're once we get basically up to this all-time high, $33, and I don't know if we are going to get all the way up there, is where I think, your line in the sand would be either that you're going to make new all-time highs and that's bullish, or you're going to sell off from there and that's not bullish, obviously. So that's what I'd be watching for if I was looking at BTU, is kind of just waiting to see if we get back up to there. All right. You cannot default on a student loan to my knowledge. SoFi. Yeah, how's SoFi looking? SoFi's stock just can't catch a break. I mean, this thing is ugly with a capital U. You ugly SoFi. I don't know, man. I mean, this is such a growthy stock in this environment. It's so tough. I don't know. I mean, if the only thing I would say is if you were like going to buy some SoFi shares down here at $5 to hold for 10, 20, 30 years, then sure, maybe I can get behind that. But outside of that, I don't know why you would want to own SoFi in this environment. I really don't. I think there are a million other names that you would rather own than SoFi. How's Snap doing, by the way? Man, I can't believe Snap got all the way down to like $7. That would have been a good time to get in and start scooping some up. But I don't know. I mean, like things like I try to ask myself which companies am I like pretty sure are gonna even like be around in 5-10 years, and I'm pretty sure Snapchat's still gonna be around. I'm pretty sure, you know, Meta's still gonna be around. I know Apple's gonna still be around. I know Amazon's gonna be around. I know Google's still gonna be around. I'm not quite so sure on, you know, because if you would have asked me 3 weeks ago, I'd have said, yeah, FTX is going to be around too. And obviously that's not true. I'm curious. I want to do I mean, it would have to only be with public names, right? But I want to build a portfolio of all the public names that own a big four. So I'm thinking like Busch Stadium in St. Louis. So we'd throw Anheuser-Busch in there, or, you know, United Center, or the United Airlines Center. We could throw that one in there. But some of them obviously are not publicly traded, but I bet most are. So we could do that. We could see what the returns would be. What is the best performing stadium in terms of stock returns? That'd be a good question. Levi's Stadium out in San Francisco, maybe? I don't know. With the Snap. I don't even talk about Snap that much anymore, MD. Only rarely. You know what I also haven't talked about today yet is Baba. I think trading off today a little bit. I mean, yeah, these things, and I was saying this about Netflix too, like you can only go up so much so quickly before, oh my God, Netflix is so freaking strong right now. Holy shit. This thing is just a monster right now. God, I feel so silly. I should have been. I've been calling Netflix out for a while, and then I didn't actually make any money off of it. I mean, it came back down from 2. We're gonna get a little sell off on here on Netflix, and a good entry point. I'm pretty sure. Twilio is what you want, Easy Mike. Well, then Twilio is what I'll give you. Twilio down about 4% today. You can see on the RSI, pretty close. I mean, getting back down more to that oversold territory. But I mentioned this on the show when I was talking about HubSpot and Asana the other day, and all these stocks, the HubSpots, the Asanas, the Twilios, they're all in kind of this B2B SaaS space. Twilio's more of kind of a fintech play than the other two, I'm pretty sure. But either way, I think it still is early to really be expecting any like sustained rally in these really growthy names, and Twilio, HubSpot, and Asana are all very much growthy. I think it's early. I don't necessarily mean that I don't think that's the right time. I think, you know, if I were trying, I wouldn't necessarily get in to try to swing these as like a month-long or 6-week-long trade. But what I would be interested in if I was looking at Twilio as a long-term investment to like buy some and hold for 2-3 years, then you know, that could be interesting. But I just think with this environment, with where the interest rates are going to be at, I'm still not ready to go like full long into high growth tech, into high growth B2B SaaS companies, even though I do think when the market does turn around, and especially once we do finally get a full Fed pivot, a lot of those names, your Twilios that have gone from, I mean, look at this chart, that have gone from 456 down to 50, you know, these names that have been beaten up by 80-90% are probably going to outperform your Apples and your Microsofts and your Amazons when the market does come around, just because they've been beaten up so much. And that's why I originally was buying Netflix, was because I was like, if you look at Netflix's drawdown from 700 to 180 or to 160 or wherever it got to, it was on par with some of the bigger drawdowns in the dot-com bubble, right? In terms of 85% market cap. And I mean, look, let's face it, like at the end of the day, there is still a lot of value in a company like Netflix that has strong cash flow, that brings in, you know, millions, billions of dollars every single quarter in revenue. So, you know, like you have to look for, what I would do is I would look, that's what I would look for, is those names that have been beaten down on the Twilios, on the Asanas, on the HubSpots, which ones out of them have stronger like cash flow, because that's what's going to really be able to hold up and prop up their value if things, again, like continue to get dicey. So if I had to guess off the top of my head without looking, I'd imagine Twilio and HubSpot's cash flows are a little bit stronger than Asana's, so maybe I'd be more interested in those. But yeah, I mean, I could be completely wrong, and now could be the perfect entry point, but I think it might be a little bit too early to be looking at a lot of these like high growth, speculative names in this environment. Upstart's kind of in that category, getting crushed today, down 9%. But I mean, look at this chart for Upstart. Like you go from 400 down to $20. That's what I'm saying. When the markets start coming around, when things are getting a little easier and money's flowing back around like it was kind of in 2021, like it was in COVID markets, then we'll probably be some of these names really skyrocket up compared to Apples and names that have held up. And Crocs. True. My Roku TV is bad, not happy. Yeah, I'm not a Roku. I'm not a big Roku fan. I mean, I have a Roku TV as well, I think, and it works fine for me, but I'm not a fan of the stock, for real. What up, Money Mitch?
What's up, man?
Not a whole lot. Do you mind getting your charts pulled up? I'm just going to take a quick bathroom break and then hop back on.
I got you, bro. No worries. I'll go ahead and I'll throw up my charts here. I'll take control.
Beautiful, man. I'll be right back.
All right, no worries. All right, so what's going on, team? How we doing out there? What do we want to talk about? I'll let you guys determine what I talk about here right now. We can either do a couple of things. We can, you guys can put a 1 for maybe look for a live trade. B, we can go for number 2. The second option is going to be we can talk about, wealth base in the fantasy portfolio. I took 1, 2, 3, 4, 5 trades on the fantasy portfolio. Of course, that AB's been kind of representing on Benzinga Live. So if we want to talk about that fantasy portfolio, $100,000, how I'm spending that, you guys can talk about that. That's going to be number 2. Or number 3, we can just look into the markets and I can try to point out patterns that I see out in the markets. Go ahead. Press a number. I want to see if you guys are awake. I said, wake up, guys. You guys there? It's time to wake up, guys. Let's go. I want to hear you guys. All right, I'm seeing some numbers coming in here. We got a 1, we got a 3, a 4. Shelly, come on. You're killing me. All right, we got some more 3s talking about market patterns. Okay. Check Monday. Looks like Lloyd Luna wanted me to take a look at some stocks. All right, we can do, since it looks like we got majority 3s, and it does look like we do got majority 3s, we can take a look at the market. Let's go. We'll take a look at some stocks that are making some moves. And of course, we got you. Let's get into it. Boom shakalaka. The money time. Money Mitch is here to talk about the markets. Looks like it's number 3. Let's get right into the action. Take a look what we got here. All right, let's go first with the SPY. Of course, I'm going to be flying through these markets. You guys let me know if you guys find an area that you guys want to focus on. And of course, we have more education coming up. So we'll get into the action market of what I'm seeing right now. Let's go towards the SPY. SPY right now, hourly. Hourly chart is really my favorite chart to look at, especially on the intraday. It helps look us for deep time frame pullbacks. So if you look at the SPY there, what do you guys see there? Well, I see more of a trend line, right? So we get this kind of move up here where we're trending up. And once we got to that peak, we actually start downtrending from that peak, right? And so I sometimes draw those just to kind of show me where we peaked from, right? Well, we went up there. Now we're peaking on this downturn. And if you actually look at it, there's some pretty good support acting as support right around here, right around the 395 area. So we could put it right at 395, or you could put it slightly above towards this body. I'd put it towards these body closes so you can see a lot is right around that area. Then we can zoom in. You can see how we caught that low today. Now we're starting to push up. I would be looking for a break above this trend line. And one of the things that I start looking for when I start seeing these pullbacks, right, is we start getting these kind of bounces, right, from resistance to support, then back to resistance, then tries to get back to support. Now we got to look to see, are we going to come up for that 400? We really need to see if we got to get towards first 398. That's going to be an important level to get to if you guys are thinking we start getting in that bullish trend. But let's go around. Let's take a look at what's moving on the day. This is what I usually call what was hot and what was not on my show, Stock Market Movers. Don't know if you guys checked that out, but let's get into it. Utilities making a move today. And so a lot of times I go into sector and industry analysis. So we'll see what happens there. Just to kind of mention there, at least AB's here. If you guys hear me cutting on the internet, let me know, because my connection's cutting in and out a little bit there. But of course, just let me know, guys. All right, so a lot of times I look at utilities here and I start drawing like hourly trends. We've been keeping this hourly trend pretty good here. You can see it a little bit better on the daily, right? That's where I usually draw it. And so you can see here, we've been holding this kind of upwards trend on utilities. Eventually, I think this turns back around, but this hasn't been a bad area to watch in the last couple of weeks as it's been making a move up. Of course, one of the things that I'm also been using now, and I've been trying to do a little bit more, is watch some sectors and use some lines here. The top is healthcare. And you guys can see here, we can take a look at from like this morning. This is going to be from 9 a.m., how we've been doing on certain stocks. Looks like energy on a downturn, but could turn back around. You guys can see technologies actually in the green, trying to like push up from that open. It came right towards kind of the opening price now. The ones that's kind of dragging right now, you can see it's more kind of the healthcare names, but financials not looking too bad. We'll see what happens in those areas. Let's go towards my main chart here. I'm going to go to defensive names. That's the next leading sector from the open. I always like to look from the open versus overall change. You guys can see here, if I stack this by overall change, defensive is actually overall in the red, but from the open, it's actually into the green. So I take a look at what's there. We'll take a look at the industries, confectioners making a nice move up, MDLS, Mondelez. Looks like that's an interesting pattern. Looks like I've already been kind of watching a pattern there. Of course, I haven't extended it there, but now we can kind of extend it, see if we're holding the pullbacks. Looks like we got that nice little break above. Now we'd be looking for that continued move here. Mondelez, it's not a bad one to keep watch, right? Look at the weekly chart. Let's adjust this off the weekly, and we can adjust that by just taking a look at the trend. You see 3 spots here. Now we're really trying to get towards the break on that. Now will we get here towards, let's say, this first weekly high that we need to get towards 66.31. It's not a bad one to keep on watch. I need to take a look at the PE on it, but if you guys, this is an interesting pattern trying to get back up there. A lot of times stocks make 3 attempts to resistance, and this is the 4th attempt. This is what I would call the go or no go, where I'd be looking for it to really kind of break out. And if it doesn't get the breakout here, I'm pretty sure you'd get that support test down to 60. And then I'd be a little bit careful, because if it whooshes through that 60 again, I don't think you'll get the same kind of reaction here that you got from October lows. Hershey's is another stock in this area, and this one's a little bit less volatile, and I think that's an important thing to look for in this environment. You're looking for stocks that don't make huge up and down moves. I like in this environment, I'm looking for stocks that can give me nice return, especially in a longer investment, and something that I don't have to worry about, making huge down moves. Hershey's could be definitely one of those types of stocks. Take a look at the kind of daily levels, and you could see it kind of in more of a triangle trying to get back up. The weekly looks a little bit better, but really you want to see it get back through the 230 for that break back towards that 240s, catching the bounce right around 220s. So it looks like a decent support there in Hershey's. Grocery stores, we know the story there. Kroger's bought Albertsons. Kroger's continues on a nice little rise after kind of dipping through a longer term trend line. And I always look for those longer term trend lines. If you can find those longer term trend lines, a lot of times stocks will maybe even give you a little cut below, but then they try to recover that. And if they can recover that, then you can get back into kind of the overall bullish trend, which is the primary trend, right? So there's usually like kind of secondary trends where this is kind of like on a pullback, right? But the primary trend on Kroger's is really kind of a breakout from this kind of low towards where we've been. And even though you've seen some pullbacks there, you've continued the trend in an upward slope. One that I would say watch here is this one, Sprouts Farms. Sprouts Farms is one that I like here because it did have good earnings. It's good value name. It's had higher lows, had a nice little pullback, is on a nice little daily kind of channel towards the upside here. And you guys can see how this is kind of getting towards the up move right there. This looks like it wants to get back up, and it's held the little support. Now you just really need to get it past this high here, 34.17, a close above that, and you're looking good for a little breakout there in Sprouts Farmers Market. All right, packaged foods, an area that I was looking at today that I started seeing some kind of like buy the dip mentality. Of course, this is a more defensive area, and value names usually show up here. You got General Mills. I like Kraft Heinz here off the kind of like support area. But I was also looking at Hormel's Foods. This one looks like a nice little area here. If you can see here, this has a longer term trend line that it kind of bounces off consistently, which is the monthly. Then you're seeing kind of the monthly resistance over here, kind of acting as the new support that was monthly resistance right around here. And you can use that kind of monthly close, the prior resistance. It's acting as support around the 45. You got some kind of wick through there. Now I'd be looking for another little pushback. Let's look at like the weekly. Weekly has like some levels that it looks like it wants to come back towards 50. Nice little curve. Got the SMA. This is the 200 one. If we look at the daily, now you got the 50. Nice little pattern on the daily. This is how I usually work backwards from the monthly to the weekly to the daily. The daily looks good too, above the, especially if we start closing above this kind of like 47.85 level. I didn't get into this one in the fantasy competition one because it was already higher, but I didn't see this pullback either. This pullback looked good here. I was looking at kind of the hourly charts. I always usually look at hourly charts, and a lot of times I use my rule of three here to determine patterns here. So I'm looking for upside action, downside action, and really it's all about peaks to troughs, right? And a lot of times we're going to get action like this in stocks, and we're looking to see what are the peaks, what are the troughs. Let's clean this up a little bit. Let's go to the 4 hour, and you can see it here that you're getting kind of those peaks and those troughs. A lot of times stocks are going to be building up resistance. And so what I like to think about there is more as a psychological outlook, right? And so if I'm thinking about it in a psychological output, one of the things is a lot of traders get a little angsty when they see the stock going back to the resistance and it doesn't break out. That's why I like using these deeper time frames, because if we use these deeper time frames, when the price action is actually going towards the trend line, you don't think of it breaking out because you're not probably in the move already. You're looking for the buildup of the volume and the price action. So what I usually do is at those moments, I'm actually not feeling uncomfortable that the stock is turning around and coming back to support. Because as long as it's building up the pattern, then I'm still looking at this pattern like I want to attack it, right? And so what that can give me is when I really start drawing the support and I feel like I know a support level, it can really give me an ability to look for those spikes to the resistance. But really, I try to attack entries on these low moves, because if you can attack entries on these low moves, you can try to use, especially after the first couple of down and up moves. I always look for this third up move to really be the move that I'm really focusing. And why is this the third up move? Because I mean, you can just draw it out, right? That's the second one. This is the first one. I look for that supporting action to take off through that 48. And
what up?
This is the secret sauce. If I have any secret sauce, I would say this would be the secret sauce. So should I take this down? What do you guys think in the chat? Should I not let AB know the secret sauce?
I don't know. Not if you want me to catch you on that little trading competition. You know what I'm saying?
I opened up today. I spent some money, man.
You did? Did you? What'd you get?
We can talk about it if you want.
All right, yeah, let's do that real quick. Yeah.
All right, I'll pull it up here. I'll just pull it up here. Here's my little competition account here. I just started it today, so you know I got to catch up to these guys. How long have you been running it already?
Just 2 days. You only missed 1 day, I think.
1 day? Okay, so
Yeah.
not too bad. I got to spend some money, I guess. You guys are definitely opening up some positions, but I spent some money. You guys can see here. Buying power at 45. I got Goldman Sachs short. I'm also short Exxon Mobil. That's doing me well. I'm long on BJ. And so we'll take a look at some of those positions right now. And I am long McDonald's. That's not doing me too bad. Now, what's in the red today is Bristol Myers. Now, this one, got to be careful. I'm going to risk down towards 76. Entries average there is 77.08. So we could take a look at the losing position also. And now we can just
I've got a few of those losing positions for sure, unfortunately.
You want to show us what you got, man? And then maybe we can run through some of these, or we can run through mine first and then we can take a look.
Yeah, I think I see Rob Roy hanging out backstage. I know he's slotted for 1:30, but I think we're going to get him going a couple minutes earlier and then pull him off a couple minutes early too. But here, let's pull up my portfolio. Let's see how's it looking. Oh dear, I bought a bunch of Upstart today, Mitch, because I saw it down like 8. I saw it down 8%. So here's what not to do. Don't just buy a stock because you see it down 8%, which is what I did with Upstart. But I was thinking like, all right, I need something, because I was looking at the leaderboard and someone's up here already made 100. They've already made 20,000. I'm sitting here with 102, and I'm thinking, all right, I need a big mover to help me make up this 18 grand. I mean, there's no options on the trading thing on the contest, so I had to buy a high flyer.
Yeah, I mean, but I saw what John was doing there. He was opening himself up for also big losses. He's up on number 1, but let's see how long he lasts. You know what I mean? It's one of those things that when you're opening yourself up to such big positions, you could get yourself hurt too if you're not paying attention to it. So
I see. Wait, hold on. I see Jay Rice. Jay Rice talking about Brady too. Honestly, it's pretty impressive given everything going on between the divorce and losing half your money on FTX or however much he lost. The fact that he's won the last 2 games in the NFL, so Brady's playing through it right now. He's saying, "All right, he said I gotta win some football games because I went broke on FTX, so I gotta make sure I'm getting paid."
Hey, I'll tell you one thing though. Brady's not worried about money. He's the GOAT.
I don't know. I mean, it depends on how much he lost on FTX. But all right, Mitch, let's go ahead and bring Rob Roy on if he's ready, and we're gonna be talking about some options and some option spreads with my man, Mr. Roy. So without further ado, how you doing today, Rob? Oh, looks like we got you on mute, Rob.
The old mute trick.
The old mute trick. We got you. We got you again.
I got it. Hey, man, how you doing?
I'm good. How are you?
I am fantastic. Well rested. Nice vacay in Florida for a couple of days. Awesome.
Boom. Love it. Well, Rob, you want to go ahead and get your screen pulled up and then give us a little preview of what we're going to be talking about today?
Sure. I had it on there. Let's go ahead and do that again.
Yeah, we might have just had it. It might have just... Yeah,
that's cool. No problem. No worries. So... as we go through, guys, make sure, keep in mind everything we talk about is for educational purposes. Nothing's meant to be advice or recommendations. I did see the last gentleman you had on there really went in depth with it. Guys, this is not meant to be telling you what to trade. It's to teach you how to trade. My goal in life is if I disappear tomorrow, my students need to learn how to do this on their own, not to rely on me to give them candidates all day long and feed them. It's great to start that way, but not the way to go about it. So I want to talk a little bit about options trades today, utilizing spreads. And to do so, we've got to get into the actual charts and understand from the charts perspective what you need to be looking for first, because that chart is going to tell us where we decide to take the trade or not, and or where we decide to exit out of that trade or not, based on what we see on that chart. So I want to go into a little bit of the technicals. And Aaron, you guys were talking a little bit about your strategy of what you were trading in there and so forth in your competition. I can teach you right now in 30 seconds the most profitable trading strategy ever, and it works 99% of people. How about that? You want to know what it is?
Well, on that specific trading competition, unfortunately, Rob, for guys like you and I, there are no options on there. You just gotta.
It's terrible. I know. But those of you that are out there and you seem like every time you place your trades and it just seems to go against you, it's a simple strategy. Sit down today, whatever you decide to do, you're going to go long, you're going to go short, you think you're going to buy Microsoft today. If that's what's in your head, you need to sell it instead. If you're thinking going short today, you need to go buy it. If you're losing on 70 and 80% of your trades, you will completely flip around what you do just with that alone. All right, we're done. See you guys. No, I'm kidding. Truly, though, right? You got to really look at what you're doing and analyze that position, how it all works. All right. So let me take that off of here. Let's go bring up some charts. And I want to talk about, for me, everything starts with looking at the S&P 500. I focus on the S&P. I focus on the VIX. And if you can't focus on those or aren't focusing on those, it doesn't make sense to me because you're missing out on what happens so heavily in the market. And I'll give you an example. With the S&P 500, 70 to 80% of all stocks tend to follow the S&P 500. Excuse me. That doesn't mean there aren't outliers. That doesn't mean there aren't stocks that are contrarian to the market. There's still that other 20 to 30%. But 70 to 80% of all stocks tend to move with the market. So if one of your focuses is just, all right, how's the market doing? Is it up or down? I'm going to follow that today or overall trend today. And focus there, you've got a better chance of being right in your trades, right? So when I look at the S&P 500, this is a daily chart, right? It is a one-day chart that I've got on here. Let me just bring it in a little bit more for you. And what we've got done on here is I've got a Fibonacci drawn. So let me go ahead and let me start up. I should have opened this up already. I always forget that we don't have a drawing tool inside of this software that I use. Let me open up some drawing tools here. But if you see this V top in here, right? We've got this V shape inside of our Fibonacci's, right? Or inside of the chart where we came and made a move up to the top, had what's called a swing high, and then we dropped off. Swing high means we had a high yesterday, right? I called this yesterday, a lower high the day before, and a lower high today, the day after, right? This was a swing high is what we're looking for in here. We're also looking for a swing low to be able to draw the Fibonacci from. So if I grab that tool, here's my swing top, my swing high. We had a good, strong, directional, what I call thrusting pattern, straight down, and then we had a really nice bounce. That means we're going to draw the Fibonacci from where that run started right there to where that run ended right there. And when you draw Fibonacci, you want to draw them on the largest directional move closest to the right side of the chart. Let me ask a question. How many of you are using Fibonacci in your charting right now? And you can do it real easy with just the one, if that makes it easier for you. I'd love to see who is, how many of you are actually using Fibs in your analysis day in and day out. So we got that move, and that's where we draw the Fibs from. So if I go ahead and just grab, I don't know, let's see, Diamond Offshore. All right, so I don't have any Fibonacci drawn on here right now, right? I'm going to go over to a chart that does not have, always use Fibs, lots of ones. Okay, good. 90% of people know that, but for him, it is a secret. It was a joke. Well, all right, so we look here at Diamond Offshore, right? Daily chart. And you look at the move, you got this big directional move down on, on the open here as it reissued. We have a move down in here, and you've got a strong directional move to the top. So if we look, and it's always great if you can, when you're first starting, it's wonderful if you print these out and draw on them. So here's a nice V top in there, and we come down to a nice V bottom, right? We have another move in here, kind of choppy inside of this, but that's another one. And then from down here, we have another swing low to swing high, right? Another V bottom to V top. So what I would do then is I would grab my Fibonacci tool, and I'm going to come over to that lowest low that's right there. And I'm going to put my mouse on there. We draw off of the wicks. And as I move my mouse up, we're going to snap it on this Omega charts. You can find Fibonacci on just about every charting platform out there now. I'm going to snap it to the highest high in that overall run before it rolled over and pulled back in there, right? If you notice, all I did was I drew from this low section here up to that high. If I do it one more time, watch what's taking place. As I move my mouse up, my mouse is by that blue line. Right now it's 1058. I move the line down, it's 940. But all of the red and the one purple line that are in between are all being drawn automatically, right? I don't have to do anything for them. I draw them. They're drawn automatically in there. And they are a percentage of retracement that takes place inside of this chart. In other words, if we look at the numbers, analyze what we've got there, here's the V bottom and the V top. If we pull back to this line, we've pulled back 0.236 or 23.6% is the pullback. Right? When you look at how this reacts, guys, it's kind of like the 236 is kind of like a hesitation point, right? This is a hesitation level, all right, where stocks tend to move back to. There's also a 764 down here that's also a hesitation level, all right? But we pulled back here. We got a nice bounce inside of this, right? This is a nice, clear, clean Fibonacci, all right, that we're setting up in there. If we look at other stocks, let's say Netflix. I know you guys were talking about that a little bit earlier. We look at Netflix in here, right? We had a really nice V bottom. Let me move it in a little bit. Down here. Really nice V bottom up to this V top inside of here. And we pulled back to that 236 level. We kind of vacillated around. We broke out, but you'll notice, look at how well, not precisely to the penny, but look at how well stocks tend to move to the various Fibonacci levels. When we gapped up here, we ran, nice move, and pulled right back down to this original line that we drew the fibs off of. We came right back to that level inside of there, all right? When we pushed up to it the first time, we bounced around a couple of days. We hesitated at that level. The key here is you want to identify the largest directional move closest to the right side of the chart. If we look at the Costco, and it really doesn't matter the stock, right? This has a little bit older fib on it, okay? But let's see. If we draw, here's our V top into our V bottom, okay? And we drew that as the stock bounced up. Here's that 236 hesitation level, right? We pushed up, we retested it 1, 2, 3, 4 days before we finally bounced, right? Then we came down, we hung around there for a week or so, hesitated, and we bounced. But notice we tend to move back to these lines inside of the Fibonacci again. That one kind of broke through. Right here was awesome. Right there was a great move. Great stop there. And right here and here and so forth, right? I think you guys get the picture of where I'm going with this. They are a very powerful series of lines that help us identify support and resistance. And that is critical. Now, whether you call it a zone or a support and resistance level or whatever your verbiage is for it, this helps us to identify key levels that are based on one thing and one thing only. When I drew that swing high and swing low, when I drew that Fibonacci on that left side of the chart where this line is right in here, when I drew that in there, that all of that move down was on the chart clear. There was nothing to guess, nothing to think about. It's the highest high to the lowest low. The lines that are drawn in between all represent human emotion, right? When you look at a chart and you see the chart has stopped in the middle of nowhere and you're scratching your head saying, I don't get it. There's nothing back there in history. Why is it stopped there? And you come back and look and you put Fibonacci's on there, it becomes an aha moment of, got it. I understand perfectly where this comes from and why it's happening, right? Now, I use fibs in my decision-making for setting up my trades, all right? So in other words, if I am looking at a credit spread that I want to take, and I am a very big fan of anything that pays me to trade, nothing wrong with you going ahead and buying a stock or shorting a stock or buying a directional option. As Aaron said, I'm a big directional options trader. But there are certain times that I don't want to do that. You know, we had Target today, Target, right? TGT. Target today is down right now, 22.5. They were down over $30 in the pre-market, right? But it's down 22.5. So, and it gapped down into the middle of nowhere. Where my horizontal line is, that's where we opened up today. Let me bring it in a little bit. We opened up right here today, and we had a small pullback, and then we bounced. Well, you could take a directional trade. I'm not saying that you can, but with such a big move, here's the question you have to ask, right? How bad was the news that it's down $30 on the pre-market? And is that news going to continue to drive it down? Or how much of an overreaction was that news? And is it going to bounce up from there? you can guess and you can be right, and I'm good with that. If that's your style and that works for you, I love it. For me, I'm very much about identifying a potential strategy that will pay me money and dramatically reduce my risk. If I buy the stock, if I would have bought the stock today, I did well. If I shorted the stock today, I'm underwater $5 or $10, depending on where you got into that trade, right? If I bought a long directional trade today, an option, if I bought a put option, I'm underwater because a put means we think the stock is going down when we buy it. If I bought a call, someone's natural reaction is going to be, well, I'm up money today, and it's a nice move, and you probably are, but you also run into the fact of, with earnings coming out last night, the market makers had jacked up the implied volatility on the options immediately. They widen bid-ask spreads. It starts out about 3 or 4 weeks before the earnings come out. They jack up implieds. They open up the bid-ask spread, all of this to protect themselves. When the market opened up today, the market maker came in this morning, had their cup of coffee in hand, and he's looking at the board of every trade that's out there right now that somebody already owns, whatever the open interest is, right? And what orders are in place to get out of those trades today. They can go in there and say, let's see, how much do I want to open the price up at? Well, that sounds good. What's most advantageous to them? So that option that you bought, that call option that you maybe paid $8 or $9, $10 for today, might have only been worth 6 or 7, right? Because you bought that directional trade on news. The market maker knows that. So they jack up prices, they open that bid-ask spread, and ultimately, as the news dissipates, it's out. The trades for the news are done already, right? But as that happens, the market maker can start easing that implied vols, right? Closing up that bid-ask spread, and now you've got the potential to be underwater in that trade when you trade directionally. And I'm not saying that you don't trade directionally. I trade directionally almost every day, but the directional for me is not based on news. On news, I like what is called a credit spread. So let me just go in and see some of the questions. All right, let's see. All right, PPI and CPI are manipulated. Yeah, I talk about that all the time. So why bother institutional trader? So why bother? Institutional traders know that. Well, it's not a matter of why bother. It's, listen, traders are going to react to it. Whether you know it or not, traders that don't or think it might be are going to react to it anyway. There are the ones that will say none of it is manipulated. None of it, I trust those numbers, and they're going to trade off of that. Right, wrong, or indifferent, right? The problem most people have right now is they think we're in a bullish market, and we're not. Go and look at the S&P in a daily chart, look at it in a weekly chart, and look at it in a monthly chart. The daily is the only thing telling you we're moving to the upside. That's it, right? Here, you guys threw a couple of symbols in there. So CVX is the first one, and that was Crassi. So I already have a Fibonacci drawn on CVX. You can see that nice bottom in there. We moved up, and we're looking for a potential move to the downside on this, right? With where it is right now. It's hesitated at that 0 point. It's bounced off it a couple of times. We want to see now, what does it do, right? If we were to close right here today, and Aaron is very familiar with my strategy. If we were to close right here today, I would ideally look for tomorrow a move up near that 186.38 level and a fail. And if I can get that to take place in there, I could look for a move to the downside, right? And that's what I'm looking for. So if that were the case, right, if that happened tomorrow, right, that we made the move down, let me go and look at CVX. I'm just going to put it on the option chain, and I'll pull the option chain over for you. So we have a support line, or resistance line rather, at 186.38. Okay. So if I were looking at a credit spread and the market was rolling over off of this, I'm going to look somewhere above that 186.38 level, which in this case would give me a 187.5. Now, we don't have a lot of time left in this week, so it may be an unfair number to try to use this week's numbers. So actually, right now, 186.38 is our resistance level. All right. So let me put this up full screen here. Easier to see. So we're going to look at spreads. Write these down. The very first one is called a bull put spread. 3 words. Analyze each word by its individual. Bull, well, we think it's going up. Put, we're using put options. Spread, we're spreading out our risk with options. Bull put spread. It's a bullish trade. We think the stock is moving up. We're using puts to take advantage of that. The other side of it, which we're looking at here, would be a bear call spread. Bearish trade using calls, spreading out our risk with options. So if we move to the downside, I'm not saying we will, but if we make that move tomorrow to the downside, we want something above that 186.38. So we've got a 187.5. So if I look at that 187.5, and I'm going to go ahead and click on it to sell it, right? And it loads it down in my order bar. So that's the first strike above my resistance level. What I want to do then is buy the one that is above that, right? So what does that do for me? Well, if I just sold this option, they're going to pay me right now $1.24 if I'm not negotiating. We can negotiate to, let's say, $1.30. But they're going to pay me $1.25 right now. What I've just done is I sold a naked call. Number one, it is the riskiest option trade there is out there. I don't do it unless I am sitting here ready to cover the other side. I don't walk away. I don't go upstairs. I don't do anything unless I'm staying at the computer with an uncovered call. Personally, doesn't mean it's right. That's just me. For many, the broker won't even allow you to do so, to sell uncovered calls. But when you combine it with buying a call option as a protection and insurance policy, we're going to go ahead and we're going to buy one higher strike, which is right here, the 190s. All right. And we don't need 5 contracts. We'll just do the example as one. I am a big fan of always trying to negotiate on these. You've got to do 2 options together. So the market maker, someone has to make a decision of yes or no. Right. So put it in and negotiate it. They're going to look at it anyway. Do the negotiating. So I would do this at the mid price, which basically is taking the bid and the ask and cutting them in half. You've got a decent spread here, 10 cents or so on one side, 7 or 8 cents on the other. So we can negotiate into that midpoint. And what happens with this trade here, I'm going to go ahead and, all right, I'll put it in and hit place order. Yes, it's higher than the last quote. But now what you want to make sure to do, especially in trades like this, I do this on every trade that I place, is I read it out loud. And I'll tell you why in a second. Sell to open 1 Chevron, 25th of November, 187.5 call, and buy to open. So I'm selling one strike price, 187.5. Buy to open the same date, the 25th of November, 190 call, the higher strike price. So the lower one is my risk. The higher one is my insurance. Okay. I sold that 187.5. That's where my risk comes in on that trade. The 190, it just guarantees that I have a maximum risk in this trade of the difference between these 2 strike prices, right? It's for the day. I only put an order in to enter a position for today. My exits will be overnight. I don't care about that. But I don't want to put an order in that I forgot about and 3 days from now it gets filled, as the stock is moving drastically in the opposite direction, right? It shows the estimated profit is $59 and my maximum loss is $191, right? So it's right now at 60 cents. We're probably not going to get filled because it is not at the actual price, right? And this trade station doesn't always fill well on the non-funded trade setups. All right. So that order is now in place. So if we go back and look at the daily chart, what did we just do? We sold the 187.5. Right, 187.5 is what we sold. I'm going to change that over to red. And then we're going to go over here and we're going to make this the 190. And I'll change that over to green just so we have different colors than what my Fibonacci are. And that is my protection leg. So right now, until next Friday, I am obligated on this trade once we're filled, that if the stock, that someone can make me buy the stock at 187.5. All right. So why would they do that? Right. I'm sorry. Let me back up. Someone can take the stock away from me. We did a call spread at 187.5. So if they want to take the stock away at 187.5 and it's trading at 184.5, go ahead, do it. That's when I call the broker and say, dude, how do I get on a list to do this again tomorrow? I'm happy when someone takes it away when the stock is trading lower. Who's going to do that? Nobody in their right mind is going to do that, right? So this setup right now is in place. It's done. There's nothing we have to do for this except set back now and you let it run. do we want to put stops and protection there? Absolutely. If the stock gets back up into our resistance level, we don't want to still be there, right? So I normally look at it. If I took in a credit of 50 cents, I would be willing to risk $1 on the trade. Because remember, on this position, if I took 50 cents in and 250 was my max risk, if I am right, that's a 25% rate of return on this trade, right? 20%, 50 cents and 250. So it's 25%. It's 25%. All right. Let me see what you guys got here. Yeah, always have a bathroom laptop. There you go. I just don't want to have to run around the house and worry about it. Never walk away from an order. I agree. Yeah, I've lost so much money just from walking away from my desktop. It's not even funny. Guys, there's reasons that I do trades the way that I do them. When I first started, and for you guys, many don't know my background. I started back in 1997 is when I took my very first training on trading options. I retired from my full-time job back in 1997 at the ripe old age of 33. All right. The company that I taught, that I learned from, is no longer in business. They were an options trading company. The training they did was fine. I met a mentor, a person at that event who was an amazing stock trader. He went to learn how to trade options. A very wealthy individual. And he took me under his wing and taught me Fibonacci, and all the strategies that I'm sharing with you all originated for me with him. All right. So someone had sent me a picture one time, right, they said, here's your new office chair. And it was a toilet bowl with a sports coat draped over the back of it. And that was me. I wouldn't leave the office. I would never walk away from the computer. Now I spend an hour out, maybe an hour and a half in the morning. I spend an hour, maybe an hour and a half in the afternoon looking at trades. And much of it is done from a cell phone. You don't even have to be there to do it any longer on the computer. You can manage everything there. I get my alerts. I log into my account, and no matter where I'm at, fishing, which is usually where you'll find me. For some, it may be golf, right? But I don't want to have to sit in front of the computer all day long. Paper trading helps them produce a database that they sell. Oh, my goodness gracious. All right. So let me see. Did I have some other ones that were in there? I did. So I hope that helps, Crassi. Let's go look at Square. Daniel, I already have fibs on Square because Square is one of the stocks that we trade regularly in one of our programs called Power Option Plays. My actual template, my actual chart that I look at is just this right here, right? It has moving averages on it, which are the 8, 21, and 55. Pink is the 8. You can see them at the top. 21 is the green, 55 is brown. Don't worry about the 5. That's for one particular trade setup, right? My biggest focus on Square as a company is that they look at it. They move $5 a day. It's called a Fibit, but I just double the wildest average range. They move $5 a day as a $70 stock. I love that kind of move, right? There's a lot of opportunity day trades with very, very inexpensive options. If I'm looking at day trade Square today, right, I would find an option that has a 65 to 85 delta, the shortest expiration possible. So I've got an option with a 69 delta, 2,500 open interest. We're looking at $3.10 would be my cost. Done. Done. Every dollar the stock moves, the option moves about 70 cents before I put gamma into there, which we're not going to cover today. But we're looking at an option that can easily move a stock on this stock can easily move $2, $3, $4 in a day. And if I'm on the right side of that and every dollar the stock moves, I make 65 cents. I'll take it on a $2 move. I got $1.30 in there for $3, right? For almost nothing in cost, right? Very small amount. But when we look at it from a spread standpoint, we are in a bullish position here on Square. My bias is bullish. Bias is something that I base everything off of moving averages. My 8 moving averages on top. My stock is above my shortest moving average. Our bias is bullish. Okay. So I am only looking to take directional, which means I can hold overnight, directional bullish trades. Intraday, I could take a bearish trade, but I would want to be in and out of that trade fairly quickly to not be on the wrong side based on the 70 to 80% rule I just taught you guys or went over with some of you. I'm sure some of you knew it. But that 70 to 80%, I want to be on the right side of that most of the time. I don't really want to fight the overall market. I am not, and here's the thing. Some are going to say, well, Rob, you probably went to school, you got all these degrees and you know all this stuff. I don't have a degree. High school, some college classes, dropped out, took chemistry, calculus at night, same semester, 4 nights a week, 4 hours each night. I think it was 2 days in, I dropped out. Said, I'll come back next semester, and never did. All right. So I have maybe 9 credits in college or something. Right. You don't need to be a brainiac. You don't need to be a math wizard. I was a C student in school. I'm just really good at recognizing patterns. And since I've been doing this now for over 25 years, right? And the person who taught me is no longer with us. He passed very early on in my career as a trader, right? But I've been doing this for so long, they jump out at me. And I'm a big fan of making sure that I share things like this. When Aaron asked me, hey, do you want to come on and share this stuff? A lot of this is proprietary things that we use inside of our paid programs that I'm sharing with you guys right now. The techniques and the tweaks on spreads and or how we use fibs that you're going to see me do today are, again, things that hopefully you're taking notes. If not, you come back and rewatch this section again. So when I look at this, we pull down into below that 70.62 level, and that's great and fine and good. We had a really nice run the last couple of days. We had a nice pullback in there, but I don't want to trade this to the downside. My support level right now is 67.42. I really don't want to fight to try to get a $1.50 move, $2 move. I don't want to fight for that. But if I can get a move today and or tomorrow above that 70.62, maybe up to 71, 71.5, and get a small pullback, doesn't have to come all the way to the 70.62 and a bounce, then I would be looking at a credit spread. And I would be looking at what's called a bull put spread. Bullish trade using puts, spreading out your risk with options. Well, when I go and look at Square, let's get the option chain. We go and look at Square, what were we looking at there? That would mean we would be doing this somewhere down below 70.5, 70.62. Somewhere down below there. So we're probably going to wind up with a 71. We are. Okay. So we look at the $71 position, right? The $71 put. Now, keep in mind, we're below that level right now. So the option pricing is going to be off because we haven't made that close above, right? But we make that move above, we're going to look at selling the $71 put and buying the $70 put. So again, the numbers are off right now, but you're talking about your maximum risk in this trade is $1. If I load it up and we sell this one and buy this one, this has a 58-cent credit. You will not have that credit tomorrow. If we look at where the market is right now and base our entries off of that, if we look at a 67 put right now, let's say we bought we sold the 67 and we bought the 66 put. That gives me 24 cents of credit on this trade. Now, I'm sure there are some that are looking at this going, but Rob, that's nuts. Why would you go ahead and do a trade where the maximum you can make is 24 cents? Watch what I'm going to show you. Cash in my pocket is 24 cents, 0.24. I'm going to divide that by my cash out of my pocket. If the maximum risk is the difference of these two strike prices between the 66 and 67, inside of here, that's the maximum risk. Well, that means $1. If I got paid 24 cents, that's $1 minus 24 cents. So we're looking at 76 cents. So if I divide 24 cents by 0.76, it gives me a 31.5% rate of return for Friday, 2 days from now. So you got 2 days and a couple hours left until the market closes. Here we are Wednesday, all right? 31.5%. But Rob, it's only $24. No. It's only 31%. It's only going to destroy, if you did this one trade and stopped for the rest of the year, you will destroy what the S&P 500 does this year on one trade, right? Don't look at it as I didn't make enough money. Don't do one. Do 10, do 20, do 50. You don't have to do one contract. The most you can risk on this trade in one contract is $76. That's it. That's your maximum risk in this trade. If you did 10 contracts, it would be $760, but you would make $240 on that trade. Something I'm going to set up and walk away. Something that has a 4 out of 5 chance of being right in the trade, right? Actually, based on this, we have a 29, and I just picked strikes. They're not the right ones. I just picked the strike prices. We have a 29% chance of being wrong on this trade. If I want less of a risk in this trade, if I want less risk, I can come out here. I could sell the 65 and buy the 64 on my puts. It's 14 cents I'm taking in. So what is that? If it's 0.14 divided by 0.86, right? Add those two numbers up. It's the dollar. That's the difference of the strikes. I'm looking at a 16% rate of return, and I have a 17% chance of being wrong on this trade. That's what Delta tells us. It is a probability calculator. What's the opportunity, the chances I'll be wrong on this trade? All right, so I like Square a lot. Daniel B. I like it a lot. I'm a huge fan of Square, always have been, right? And even now, with it being as low a price as it is, remember, I am not a buyer. I am not an institutional trader that I'm looking long-term for that buy and hold positions. I've got my positions on those. They're more of the larger positions that I can rent out every week, okay? The Google's type positions of the world, Teslas and such, right? But for this type of trade, my goal here is not anything else than how do I generate as much capital as possible with as little risk, minimal risk as possible in that trade. And that, ladies and gentlemen, is what credit spreads does for you. It takes a big majority of the risk away from you. Because if you think the stock is going up on Square and you buy a call option, the stock must go up for you to make money. If it goes sideways, you lose money because time value is deteriorating. If it goes down a little bit or a lot, you lose money. If it goes up a little bit, you still may lose money because of time value deterioration. It's got to go up enough to cover that deterioration of time to make up for the value, right? For me, with a credit spread, if the stock stays sideways, I make my 24 cents. If it goes up a little bit, as long as it stays under my strike that I sold, that $67 strike, I keep all the money. If it goes down a little bit, I make money. If it goes down a lot, I make money. The only way I get in trouble here is if it goes up a lot. I'm not going to let that happen in 99% of the cases. I'll have a stop in place that if something happens, it takes me out of the trade. It costs me a little bit of money, but I'm out of the trade. Yeah, okay, I got slapped in the face and, ow, but it's over. It's not holy Christmas. I can't tell my spouse how much money I just lost on this trade now. I've capped my risk on the trade. I can't get in trouble more than that. I just have to manage the position that when I am done, I am done. I'm out of that trade. All right, let's see. Yeah, see, place your bet, Scotty. Yeah, I've never really found it well for me to associate trading with betting. For me, it's a very calculated risk. I have a good friend of mine that is a poker player, and he says it takes him 20 minutes to decide who's at the table is the donator. And I said to him, Rick, who's the donator? What is that? He said, that's the person that's going to give me all their money today. I said, what happens if you can't find it in 20 minutes? He goes, then it's me, and I need to get up and go to another table. He's a card player, but it's very calculated. He's got a very good understanding of how he's going to do in that. Trading is no different. It's all about probabilities. I can tell you that 79% of our trades are moving the right direction for us, are profitable. We're only, this year, for the entire year, 370-ish trades, we have 21% of them have gone against us. That's it, right? So overall, very happy. Guys, ask the questions. If you're not understanding something about the content that I'm telling you, ask the questions and I'll be happy to go over it. Watch. Let's do spiders. That one is coming up from Melissa. So let's go look at SPY. All right. So on SPY, we are right now in the middle of nowhere, right? You could say, all right, I want to take a trade on this, but it's not near any level. In other words, if I look at this and say, all right, where is this going? Could it go up? It could, probably up to this level here. Could it go down? Yeah, probably down to that level there. But I don't have the odds in my favor. If you want to take it back to gambling, right, and put on your bet, I don't have the odds in my favor of where I take the trade. So what I want to see happen is before I enter into this position, I want one of two things to take place. And I don't care which one it is. Move up, break out, retest, and bounce, and I'll take the entry. Or move up, hit this resistance line, and fail, and I'll take the entry. Right? There's my entry down, right? There's my entry up. Either one works for me, right? Because now I've got a way to set this up that if I am right in the trade, if this stock moved, let's do it two different ways, all right? If this stock moved right now, you know what? Let me do it here so I can keep the line on the chart for you. It'd be easier to see. Where's the arrow? Okay. Let's say the stock moved here and then failed off it just a little bit. This would be the bearish one, right? Where the head of the arrow is, that second arrow right here is where I would take the entry into the trade, right? Well, now I'm going to be looking somewhere above that 400 level for a credit spread. So I would go over to my option chain. All right, we'll switch this over to SPY. I'll go over to the option chain and I want to see when it comes to a bearish move, what spread do I want to take? So it's something above 400, right? Now we're too far away right now. We've only got, well, actually this expires today. Many of you know that the options on SPY and Qs expire Monday, Wednesday, Friday. They are now Monday, Tuesday, Wednesday, Friday. They've added Tuesday, Thursdays, and then next step. So if we look at this option here on SPY, it's a couple of days out, right? This one is coming in. This one is tomorrow, 17th. All right. So interesting. We did not have this option available. See, no open interest. This wasn't available yesterday. Today it is. Right. I traded SPY on the front option today with a directional trade. So we look at this option here. We're looking for above 400. Okay. So we're looking at the 400 right now. I could sell the 400 for 69. And if it were going down, I could sell the 600 the 400 for 70 cents. And I could buy the 401 for 50 cents. So they're going to pay me 20 cents to take on risk. The risk said someone can make me buy the stock or take the stock away from me. In this scenario, it's a bear call spread, which means they can call the stock away. Someone can take the stock away from me at $400 a share. Okay. Well, who in their right mind is going to want to take the stock away at 400 while it's trading at 395.5? They're not, right? But they're paying me 20 cents for that risk, to take on that risk. If someone does say to me, you have to buy the stock, you have to sell us the stock at 400, no problem. I'm going to make somebody else sell it to me at 401. So $1 is my maximum risk in that trade. I cannot get caught anywhere on this setup outside of that dollar. As long as I follow the rules in the system, manage both positions at one time, meaning I have both trades open, right? The leg that I sold and the leg that I bought, the 400 and the 401, they're going to pay me 20 cents. The worst thing that can happen in this trade is it costs me 80 cents out of my pocket. I'm going to set this up. I'm going to put automatic stops and targets on there, and I'm going to walk away, and we're done. Right? I love the phrase, especially in trading. I love the phrase, set it and forget it. That's what these trades are. Set this up, walk away, come back at the end of the day and see what happened. Doesn't matter. Target was hit, stop was hit. It didn't hit either one of them. No matter what it is, I expect to get taken out of trades. And when I say get taken out of trades, I mean to have them cost me money. I fully expect that. Let's see. So Herd Scrambler said, if you sell a put and it drops down below the put price at expiration, you would have to buy the 100 shares, right? So if you are a naked put seller, and when you say selling a put, right? If you're a naked put seller, that means you are taking on an obligation to allow somebody to put the stock to you. So as an example, if I went ahead and I sold this $394 put on SPY, I am letting somebody force me to buy that option, that stock, the SPY, at $394 a share, right? While it's trading at $395.5, right? And that is till now, until the expiration of the 17th, which is tomorrow, Thursday, okay? Well, if the stock drops, right, no one's going to make me buy it at $394 while they could sell it at $395.5. But if the stock drops to $394 to $390 to $380, someone's going to make me buy the stock in 100 share increments. So yes, you're right on the number of shares, 100 share increments. They're going to force me to buy those 100 shares. But if I turned around and said, all right, let me go ahead and buy the 393, Now, if the stock dropped to 390, they can make me buy the stock at 394. I can make somebody else buy it at 393. Okay, I've got my dollar in there. Well, yeah, Rob, that's if it goes down to 390. But what happens if it goes a lot further down? Well, let's say the stock does drop a lot further down. Let's say the stock drops to 100, right? Someone's going to make me buy it at 394, and I'm going to make somebody else buy it at 393. So I'm still at the same $1 risk no matter how far down the stock goes. I cannot lose any more than that. Period. The end. I am protected in that trade. And the best part is you don't even need to have the money to buy the stock. If someone says, hey, I want the stock at 394, I'm making you buy it, whatever it is, depending on the side, you use your other option to take care of it. You don't have to buy the stock. You don't even have to have the cash in your account to buy the stock. Now, you have a day to do it. If it happened on Friday, you got Monday. If it happened on Tuesday, you got Wednesday, but you only have that one day to do it, right? The day you exercise, you have to follow through on that same day. But I can't lose more than that. But Hurt Scrambler, does that answer it for you? Does that make sense? Does that help? The more you trade, the more likely you are to lose. Scotty, yeah. I mean, my percentages are pretty accurate, so I'm good. Yeah, don't even breathe. Your position will reverse. All right. Hurt Scrambler did have EFX in there before. I'm not sure who EFX is. Not one that I normally trade. Let's see. All right. So this one is a very particular pattern. I know who this is. It's a stock that we look at for channeling. Not one that I personally trade, though, but it does have a nice pattern to it. But if we look, you don't use Fibonacci. You use just support and resistance. These has support and resistance on it. This stock was in a channel, and we've got a channel pattern structured on here. We failed below this 203 level, right? So what do I want to see happen? Ideally, tomorrow, I would like to see this move down a little bit more, or today, let's say today, move down a little bit more. Tomorrow, move back up a little and fail off of that 202.91 level. So basically, it's 203. Fail off of that 203 level. When it does, I am looking above the 203. This is EFX, right? Above the 203 level is where I want to see. So I'm probably going to look at like the 204s. So let's see on EFX. Let's get an option chain for it. All right, a couple things about this one that make it not very exciting for me. Number one, it only has monthly options on it. It's great that one expires in 2 days and I could take advantage of it. Not a problem. But I'd like to have weeklies, not monthlies. That's number one. Number two, you have $5 increments on your strike prices. I prefer to have $250 max. You can take these trades, okay, but I'm not excited about it. Number three is you do have some open interest, but you don't have a lot of it. When you look at volume today, there's none, basically. It was 36 contracts traded today on one put, the 200 puts, right? And they are down $5, but we were looking at a bear call spread. And I said above 203. So we would have to go to, ooh, boy. So look, they're following real old school rules on options. They go $10 increments when you get above 200, right? That when I first started, that was the rule. Not it could be, that was the rule. So for me, this one doesn't, I have way too much risk in this trade. I'm going to make 15 cents and risk $9.85 in the trade. Not worth it for me. So from a spread standpoint, doesn't work. Directional breakout, absolutely. But even there, if I'm looking at a directional trade, I'm still looking at some decent bid-ask spreads. So keep that in mind for that. All right. Let's see. I hope that helps. Yeah. So tickers you want to look at. If you have others you want to look at, guys, drop them in. But if I go back and pull up my list right here, Aaron knows I don't hide anything, guys. This is the list of the 20 stocks I trade day in and day out. Right here. Screenshot it. Get your phone out. Whatever you want to do. This is the 20 stocks that I trade day in and day out. Most expensive one is Booking and then Chipotle. Other than that, everything are $500 to $50 with Square and some of those, right? Square I like a lot. Roku I like a lot because of the intraday movement is the why. If I am looking at Apple, which is such a big company for so many people, right? It's a very popular stock. It's a big day trader stock. Look where it's closing. I have a confluence of my moving average, this brown, which is 55, and my fib line. We're near that. If we close right here tonight, and tomorrow I can get a small move to the downside and a bounce, then I am looking at taking a bullish entry there. Now, I've got a clear path to resistance, so I could just buy a directional call. If it was news driven, I would look for a credit spread down below that 147.68 level. So if we go look at Apple for 147, below that 147.68, right, let's see what Apple produces for us. So for this Friday's expiration, below 147.68, we're looking, you've got the 140s there, 147s. I'm probably going to go to the 146s. Right, let's see. We're getting a bounce on here, so we're looking at puts. So 147, I can't remember 5-digit numbers. I got to write them down. 147.68. That's the beauty of having 6 monitors. I don't have to look at it. I don't have to write it down. I just have it on a different screen. So if the stock is at 147.68 and we're looking for a bullish entry, we're going to look at the 147s. All right. So if we did the 147s and we sold this, so we now took on an obligation. This goes back to Hertz Scrambler's question before. I'm obligated that somebody can put the stock to me at 147. And if they did that while it's trading at 148.71, I'm okay with that because I'll just sell it. But let's say the stock moved down and the stock goes down to 145 and they make me buy it at 147. I'm underwater at $2. Goes down to 140 and they make me buy it at 147. I'm down $7. Right? So minus whatever premium I took in. So to offset that, we buy the other leg, right? And that other leg, if we sold the 147 and it's a put spread, we're going to buy 1 strike lower. So we're going to buy this here. So notice there's $1 increment in there, right? And again, this mine just auto loads at 5. But we're going to take in, at the midpoint, we're going to take in either 28 or 29 cents in credit. Let's just call it 30 cents. It's easy math. You have $1 of risk and 30 cents of profit, credit that you're taking in. Subtract those two. $1 minus 30, you have 70 cents left. That's your risk in this trade. That's the most it can cost you in the trade. So when we lay out the basic functions of the trade, right? The first thing you need to do is identify on the chart, the stock is near a key level. It would be a Fibonacci. For someone else, it could be a support and resistance. That's the first thing you need to do, right? And we're going to say for this case, in this example, it's bullish. In this example, okay? Next thing to do is we're going to look for a credit spread, right? Which is lower price and the key level. Right? So the stock price is, and we'll put numbers here to make it easier, right? So we'll say that key level is 100. Right? Then the key level we're looking for that we're going to sell the put would be somewhere below that would be $99. Right? And then we would buy the next lower put. In this case is the 98. So we sold the $99 put And we got, and again, I'm just going to use easy numbers to make it from a math standpoint is all I care about. $1 was our credit on this trade. On the 98, we had to pay 25 cents. That means my total credit, actually 75 cents, not 25, 75 cents. My total credit is 25 cents. So I took 25 cents into my pocket. Where is my risk? You guys, you don't have to be good at math. You don't have to know how to spell to do this. Thank goodness you don't have to know how to spell. My risk is if the stock goes below 99. Max risk in a spread is the difference between the two strike prices. $99 and $98. Right? In this case, it's $1. In this case, all right? My max risk is $1. In this case, the $1 minus my credit. So you have $1 minus 75 cents. I'm saying it right. I'm doing it on the fly here. The max risk is the spread is the difference between the two strike prices. That's $1. My maximum risk is the dollar minus the credit. And my credit was 25 cents. And my total credit was 25 cents. That gives me 75 cents is my maximum risk in this trade. The worst thing that can happen to me is that the stock drops a lot and it's exercised and they say, you have to buy the stock at 99. I'm going to make somebody else buy it at 98. So there's $1 of cost there, but I took in 25 cents. So my only risk in the trade is 25 cents, the 75 cents. And this is for a bull put credit spread. A bull put credit spread. Appreciate the help there, Jonathan. So Jonathan said, what about the triple ETFs like SQQQ and TQQQ? You know, you can do these on there. Your risk still remains the same way, but your risk is increased if the position moves against you, and your profit is increased if it moves in your direction. I think the directional, the 2X to 3X positions are caution. It's not for everybody. I trade primarily just the primaries. I'll trade Qs. I don't trade SQQQ or TQQQ. But you could do it, but you are taking on a greater risk. MD said, now Rob is my style. Appreciate that. This is juicy info. Excellent. Thanks, Easy Mike. I appreciate that. Let's see. Srinvasa, I think it is asking if we take a look at NVIDIA. Sure, we'll take a look. NVIDIA, one of my favorite companies to trade. Absolutely love them to death at this point. They move almost $8 a day at $160 stock. I have got great opportunity in there. If we can get a small move down tomorrow, if we closed here and we get a small move down tomorrow on a bounce, I'm going to look at that 159.74 level as a potential directional trade if we bounce off of it. But if we're looking for spreads here today, let's see what NVIDIA will do for us. All right, let me get rid of these. Okay, so we're looking at a bullish move. So we're going to be on the put side, bull put spread. We're going to be looking for something lower than 159.74. So we've got 157.5. Wowzer. So we could sell the 157 halves and we could buy the 155s. We're looking at an 80, we'll call it 80 cents of credit in there. 83 cents is what's in there right now. Okay. Is the total credit there. So, and my maximum risk is $2.50, right? Take the two strikes, 157 half, 155, subtract them, 250. I'm taking in 80 cents. That gives me $1.70. Gives me $1.70 of risk in this trade. If I'm right, I make $80 per contract. One contract, $80, 10 contracts, $800. That's for this Friday. And as long as the stock stays above 157.5, I keep all the money. If it breaks down below that level, is where I tend to get in trouble. And if it does go down a lot, I have an insurance policy. But I want you to think of this insurance policy this way. You did not buy the insurance policy on your car in case a kid walked down the street, and I'm going to date myself, and they snapped the antenna off of your car, right? It's not for that, right? You got the insurance on your car that you were driving and someone hit you that was not insured, and there was injuries and property damage and all that stuff. You're insured for catastrophe, right? This is not, if it goes down to 156, that's not catastrophe. You're going to have a cost in there. It drops down to 140, that could be catastrophe. That could wipe a trader out if you did not have your protection leg in there. If you did not buy this option and the stock dropped $10, you're looking at this $5 option being worth about $10 by the time it drops, right? Not a place you want to be. That's why we put the insurance policy in there to protect ourselves on the other end. So Jay said, Rob, if you want to play a bullish spread into earnings, isn't it better to trade monthly out versus the weekly? You usually aren't paying much more and don't get the big vol crush. So I tend to wait until after the announcement. So what I do is every morning I do a recording that I put up on our YouTube channel that says, or a live show, it depends what we have time for. Hey, these are the ones we're looking at today, and they're all spreads. The only time that it is not a spread, well, it's always a spread. But the only time I'll give something other than a spread is either it's very low price stock and it's bullish where I could sell naked puts, or it's one of these 20 that are here. And I'll say, here's the spread. And you could also do this option with it as well, right? So I do it both ways. So by taking advantage of it, Jay, after the announcement, the market maker still got those vols jacked up. So what happens? I'm getting paid more. And now as the market moves by, whoosh, vol crush, they suck the premium out, and I'm just sitting there going, thank you very much, right? Because they pulled that premium out of the option. As long as I'm in the right direction, we're good to go. But I've traded them out monthlies. A month out, especially in this market, scares the daylights out of me. When I look at a monthly chart on the S&P, right? And I see, this is our monthly, guys. That's the monthly. For a year, we've been in this bearish moving pattern. When I look at a weekly chart, very weekly, right? We've got some more room to move up. But guys, by the time we get to about this 40.58 level or so, give or take, there's another resistance. Now, will it definitely go down? No, but the odds are in my favor that I'm not betting it bearish today. But the odds, and I won't until I see it roll over. I'm not the guy trying to get in early. I'm never that person. I want you to think of trading like eating a hamburger. I only want you to eat the meat in the middle. Forget about the bread. It's no good for you anyway. Just take a small piece out of the trade. Don't try to get in at the lowest price and out at the highest price. There's an expression. It's used elsewhere besides for what I'm using it for in the market here. But don't glean the fields, right? Leave some fruit on the vine for somebody else if they come through. Right? Don't try to take every penny. Leave it attractive enough that someone else is willing to take that trade. right? I want to make sure that I'm on the right side of this. And although from a daily standpoint, we may be looking okay, man, we're moving up. We're bullish. We're in a true bullish bias right now on the S&P. Yes. But look at the bigger time frame. We're not there. All right. So Arthur said, in the example of the bull put spread, you gave us your profit opportunity, not only greater than 25%, but also would include the increase in the option price if the stock goes up. So this is a put, right? Arthur, this is a put that we sold. So if the stock goes up, the option prices are going to decrease, which is what I want. As a credit, I want both of those options to go to zero, right? And the other way around it is a way to manage it, for those of you that are a little more advanced, is what if you put an order in on the option that you sold? If we sold the $99 put, what if we put an order in to buy that option back for a nickel, a penny, whatever price you feel comfortable with, whatever your system warrants? For me, it's never more than a nickel when I put my order in, right? It just depends on the option. Some options don't trade in pennies. You have to put in that a nickel, right? But somewhere in there, you put the order in, and now if it hits your price, it takes you out of that short leg, and I don't care about the long leg. I own it, right? Now I just pray the stock drops like a rock, but since I'm trading weekly options, the potential of that is pretty slim. Let's see. Good. Jay said, thanks. I'm usually a premium seller of premium into earnings. And there's nothing wrong with that. It's just, this is just another way of looking at it. Mexico said, going naked OPX, if the trade works against you, you lower your loss with a spread. Yes, you reduce your risk. You reduce your profit too. Because if I took $1 in on the spread and then I had to pay 75 cents to buy it, I mean, on the short leg, I took in $1, but I had to pay 75 cents to buy the other option for my insurance policy. I only got 25 cents, but I got a better chance of being right. It's not the return on your money. It is the return of your money. Take it from a trader who has blown up his account more than one time. I've had 2 different times where I've got hit by more than 50 grand on a trade, right? I did it once and I didn't believe it really happened, so I did it again, right? I know what it is to get those big hits, right? If I would have learned these types of strategies and traded these when I was much younger, I'd have another 0 in my trading account right now because it's consistent. It's over, it's over, it's over. I had always early on chased after the big profits, the stocks that move $40, $50 in a day, right? And I'm a little older now. I don't want to do any of that stuff. Let's see. So MNDO said, what can I trade if I only have $100 to trade? What's the best strategy? So, I mean, credit spreads can be traded, but you're talking about pulling in, 5 cents, 10 cents. There's not a lot of money there. Commissions will eat you up because you got 2 option legs that you're trading in there, right? I would look at directional trades using options on lower price stocks. Day trades, you're limited to 3 intraday trades in a 5-day period in the US, right? Don't make it a margin account, and now you're just limited to the cash that's in your account. In other words, if you spend $100, you could do it 5 days a week, right? You could do that trade instead of 3. But what I would be doing with $100 is I would leave it on the side. I would practice trade my strategy until I owned it and try to do something on the side to put some extra cash in. That's what I did, guys. I was working 12 to 16 hours a day, and I went ahead and did woodworking. I'm a carpenter by trade, right? When my first business was I did home repairs. So I went out on the side and I did some work on the side to build my account up a little bit, so I had some cash to be able to trade with. Let's see. Risk reward versus the probability. Yeah, there you go. That's exactly it, Jonathan. Hunt Scramble, I think you're asking for Boyle. Let's see. Let's see, I don't even know who is that. BOIL? Is it show? Yeah, I don't know why it didn't come up. Okay. All right, so pro share, ultra down. All right, let's see. So overall bearish pattern, I'd be looking only at a bearish trade on this. I would do nothing because of where the moving averages are. I would do nothing on this short term, trying to play the upside unless we got above these moving averages on a close. And to the downside, I've got that 31.53 in there. We hit it once. It's kind of vacillated in there. what I normally do with something like this, that was Hunt Scrambler, right? Yeah, what I normally do with something like this, Hunt Scrambler, is I put this box around it. I am very well known for the phrase, the dreaded box of neutrality. That's it. That blue zone has to be the breakout zone. And even that, I've got to break out to the downside below that horizontal line. I've got to break out of the top of the rectangle, retest and bounce to take a bullish entry. So I would be cautious on this. The chart for me, for my style, doesn't give me anything. Now, I don't know if they have earnings coming up and someone's trying to trade into an earnings play and they're getting in early and all that good stuff. And you can. Guys, I did the get in early earnings 25 years ago when it was a big deal. Today, there's just too much cost when it comes to options. There's too much cost and too much risk of a volatility crush from the market maker. So I tend to not, I pick up the pieces, right? The news is out, boom, I'm in there. I mean, today, what did we do? We did lows, right? We got 50 cents on a Lowe's spread, a $2.50 spread on Lowe's. Here, let's go see where it's at. I haven't checked it in a little bit. So 585 is where Lowe's is up right now. So we did the, here, let me load them in. The 212.5 is what I sold on the puts, right? And I bought the 210s. Okay. So right now, the natural is at 42 cents. Let's see. 210, 12.5. Yep, 210 to 12.5. Actually, my bad. Yep. So we sold the 212. We sold the, what did we sell? We sold the 212.5, right? Which was right here. And we bought the 210s. All right. I had the wrong option. No, I'm good. It's the right options. All right. So right now it's 42 cents. I took in 50 cents on it. So we haven't moved enough. We moved up on lows and we just kind of stayed there. We'll run it into tomorrow. That's okay, because what's going to happen tonight is you see this theta column. See that 51 and 57 cents? Basically, in a one-day period, that's how much time value each of these options is going to have go away. So they're going to drop about 50 cents in price overnight, roughly. All right? For nothing happening, that's if the stock opened exactly where it was. Theta is time value deterioration. Okay? All right. Last one, NF. Let's go look at Google. Google, soon to be the ruler of the world, right? So let's see. Google right now, nice move up. It's had some great recovery from back where it was, down at that $83 and change level. It's at 99 right now. We've got a high, lower high, and a lower high. We still are at a lower high. Same thing with the lows. We've got lower lows, right? I would like to see on Google, for me personally, and I own a bunch of Google shares. I own 80% of the allotment I wanted to buy after their split. I'm sorry, no, this is Google. Right now I own 40% of what I want on Google, right? So I have two different places that I bought into Google, all right? So what I'm looking for with Google is I want that move above that 102 level, retest and bounce, and that will give me another key entry in. Rob, you're buying it higher. Yes. Forget the buy high, buy low and sell high. How about buy high and sell higher? If you got to buy low and this was the low, now that means you can't get back in the trade anymore because you're done. Nope. I'll wait for a key entry point. I'll buy some there. I'll wait for a key entry point. It'll fail. It'll bounce. I'll buy some there. Right. And I'll average my price out just like I've done on Amazon. I'm at 80% and Google is 40%. Tesla's at 40%. Right. So it's just a matter of managing your position along the way. I love, Google is something we trade every day. Every day we look at Google. All right. Excellent. Guys, was this helpful? Did I lay the strategy out for you? Let me bring that back up again so you can see it. Screenshot.
It was helpful. It was helpful to me, Rob. I know that.
There you go. And I know you've always, we've talked about this a lot where you had an interest in this as well, but it is a great strategy. And listen, in an hour, folks, it's hard for me to do a lot of justice to it, right? But here, if you want to, let me just share this screen here, Aaron, real quick. Guys, if you go over, and Aaron will drop this in, tradinglikeaboss.com is one of our websites. This all our free content is up here. If you go here, how I trade news candidates, right? That'll take you to a free video training on exactly the strategy I taught you today. Every detail of it is inside of there. Check it out. If you don't like it, delete the video, call it a day. I won't be mad. That's okay. But you'll like it. Right? It's the exact strategy I just trained you on.
Yeah, guys, I'm sorry. I'm getting this link right now, tradinglikeaboss.com. Guys, smash the like for Rob. I mean, super helpful for me. We typically have Rob on Benzinga Live every Thursday, although tomorrow I'm sure we'll give you the day off after you went for, today. And unless you want to come back, I mean, up to you, man, either way. But going to drop that link in the chat. Rob Roy, you guys can learn more from him. Really my go-to friend. If I need to ask someone a question when it comes to spreads, Rob's my guy.
Appreciate that.
Mexico Viking asked, do you do covered calls against Google?
Yes. We still have any more time left, Aaron?
Yeah.
All right. Guys, my number one thing right now is what I call the Wheel of Fortune. Sell a naked put, right? You're going to get paid. So the first trade you take in this Wheel of Fortune, you're going to get paid, right? Someone's going to put you the stock eventually. I have to spend money. Once I buy that stock, I'm going to rent it out. I'm going to get paid. Once I rent it out, sooner or later, somebody's taking it away from me. I'm going to get paid money. This strategy, sell a put, buy the stock, sell a covered call, get the stock taken away from you. Wheel of Fortune goes round and round. This strategy gives me the greatest opportunity for cash flow of anything that I've ever done. I do this. This strategy is my retirement account strategy. But right now, Google, Amazon, Tesla, right? You can get phenomenal credit on all of those guys right now. And when we say phenomenal, you really have to identify what that means. Google, right? And I am in the money on my Google, so I'm good. It's moved up on price from where I bought it. So I'm really good. So here's what I look for, right? Stock is trading at 99.15. I am going to look at an option. Now, we only have 2 days left, but I'm going to look at an option that has a 40 delta. If I don't want to have the stock taken away from me, I'll go down just a little bit lower. I'll get a 28 delta here, okay? Now, this is only for 2 days. If I look at next week, go find that 40 delta, I've got a 37 delta. So this is $1.22. We're going to call it $1 for a full week. So you have a $100 stock that I'm going to rent it out and give somebody the right to take it away from me at 102, and they're going to pay me, at 101, they're going to pay me $1 for it, we'll call it, right? We're going to just make it $1. So if the stock moves up, it goes to 101, they take it away at 101, but they paid me $1 on top of that, so they really took it away at 102. If it doesn't hit 101, maybe it moves up next week to 100.5, right? Then I'm going to go ahead and I'm going to sell maybe the 102s or the 103s the next week for another $1. But 4 times a month, if I can do this every month, every week for $1 each on a $100 stock, I am generating 4% a month. If you can make 4% a month, it takes you 18 months to double your account. Rule of 72, look it up if you're not familiar with it. Do the exact same thing on Tesla. You don't own any Tesla. Awesome. So let's go look at Tesla. Let's go sell a naked put on Tesla. Uncovered, I want the stock. Give it to me. I'm going to find Tesla with about a 20 delta, 176.67. That's a weird strike. But they're going to, this is this week, right? Next week, that 20 delta is $2. Let's just call it $2 we're going to get for the week. They're going to pay me $2 to let somebody make me buy the stock at 172.5 while it's trading at 187, right? This is the uncovered part where you don't have that other leg in the credit spread, right? You do that trade, folks, and you're taking in $2 on that. If they make you buy it at 172.5, plus they paid you $2, so you're buying it at 170.5, and it's trading at 187 right now. $17 less than it is. If they make you buy it right now, based on today's numbers, right? We're going to go look at a delta of 40, a little bit less if you don't want to take it away. I can get about $3, $3.25 for the 195 strike that they made me buy it and now I can let someone else take it away from me at $1.95. They're going to pay me $3.25, 50 cents, just a little more in the week, which is why I'm lowering it. If they paid you $3 a week for 4 weeks is $12 on a $200 stock. That's 6%. 6% for the month. The S&P 500 does 8% on average for the last 100 years, 8 to 10%. You got 6%. So long answer, yes. These stocks, Amazon, Google, Tesla, are my 3 favorite right now for it.
All righty. Sorry about that. Let me just catch up on the chat real quick here.
I'm good.
Let's see. Do you mind looking at TJX real quick? I know this might not be a name that you typically look at.
Sure. Let's see. Not one I normally trade, correct? Unless there's news on it, then it's a different story. Guys, you can almost always tell if I look at it or not. If there's no Fibonacci's on it, it's not one that I look at. So, tough pattern. All right. So we're going to draw a fib. Not very big. Yeah, it's actually really tight. It's really tight. Yeah, $71 stock. Yeah, let me do it from here. So there's going to be times when you go to draw Fibonacci's and you don't have great places to draw them from. Right? There's not a great place here because of all this little stair step that's taking place here. Right? So you do the best you can with what you've got. Right? So right now we've got the blowout. Was today their earnings?
I'm not sure. Probably. I mean, let me check.
Yeah, just curious. Being that it bounced as much as it did.
Yeah, posted mixed earnings. Yep.
Okay, they're up $3.50 on that. So, yeah, it's had a nice move. But again, you've got to ask yourself the question: what compelling reason is there for this to still go up? The earnings may be great, right? Until now, someone comes out tomorrow and goes, "All right, it hit near our target, so we're downgrading it, or we're putting it at a hold, or something." So, if I'm looking at this, today would have been the day with looking for a credit spread somewhere down below this level right here. That blue line is what I would be looking at. I just don't have a great pattern on it. I don't have a lot of distance between the fib lines here. For me, it becomes a next from my trading, but that doesn't mean there aren't strategies that work for it. It's just not ones that I am great at. You know, I heard the last instructor was talking RSI, right? RSI is a great indicator. We have a coach that works for Wealth Builders. He's phenomenal. His CMT is an amazing trader. RSI is his indicator. I can't use it. It doesn't work well for me. I make the wrong decisions with it all the time, right? Doesn't mean it's a bad indicator. Doesn't mean it's a bad strategy or TJX is a bad company. It's just one that, for me, I pass on. So I'm not crazy on the pattern, just based on this, how small the Fibonacci levels are.
Got it. Well, Rob, thank you again for hopping on the boot camp. I know it was last minute. We obviously appreciate you, all your insight when it comes to options and spreads. You know, it's been a great conversation and great presentation by you. I'm going to drop that link in the chat one more time, tradinglikeaboss.com. Everybody smash the like for Rob. Woo! Rob, enjoy the rest of your Wednesday. We'll catch you next week again, unless again you want to hop back on tomorrow. We'll be around, but you can text me. We'll talk about it.
Yep, we'll talk. I appreciate it. All right, thanks everyone. Have a great one. Hope that
no problem. Oh, sorry about that. Didn't mean to cut you off.
Have a great one. I'll talk to you soon.
All right, talk to you soon. All right, guys, that was Rob Roy, tradinglikeaboss.com. All right, guys, it's 2:45 p.m. Eastern. Where has this day gone? It's flying by when you're having fun. That was Rob Roy, Chapter 6. Chapter 7, you see that little blank space? For any Swifties out there trying to get tickets, good luck. I've heard it's a, actually, you know what? We can talk about that for a second because this is a, well, actually, here, I gotta check my portfolio on this thing. I think I'm carrying way too much about my fictional money on this thing. But here, let's go to our our Benzinga Pro, because yesterday Alexandria, our AOC went out. I don't even know what her real name is. Octavio Cortez came out and said that Live Nation needs to be broken up. So this was a merger done in 2010 between Live Nation and Ticketmaster. And what we're seeing now is, so basically Ticketmaster is doing every single basically big event. I mean, StubHub, I don't really know. Like, I guess StubHub's a competitor. SeatGeek, I think, is owned by Ticketmaster. I'm not really sure, but it's kind of a monopoly. So let's I mean, here's the thing: is the stock's not doing well right now, Live Nation. Even though what I think this concert, this tour from Taylor Swift, is going to be historic in terms of revenue for the company. I was doing some math last night, and I think there are 52 listed stadiums on the tour. And she is so far, Taylor. So assuming she sells out every single stadium, which it looks like that's for sure going to happen. And from what I could tell, like the average ticket price on Ticketmaster was about, we'll say $250. And that's conservative because a lot of these packages were like $900. And this isn't resale. This is from Ticketmaster. So a lot of them were selling for like $900, $600, $700, whatever. So going to, I mean, I was doing the math, 52. If you assume 50,000 people on average, you know, let's do the math. Oh, wait, you guys won't be able to see my calculator. 52 times 50,000. That's how many people are going to buy tickets. That's would get you, let's see. So, okay, about 2.5 million tickets, 2.6 million tickets are going to be sold around. I'm just guesstimating here. 2.6 million tickets sold in this tour. And at the average price, again, this will be conservative. I'm going to say 250 is the average ticket price. Holy cow. Gets us to $650 million. So that's my prediction. I'm going to say somewhere in between the 650 to $1 billion range in ticket sales. I don't know percentage-wise how much of that is going to go back to Taylor Swift, for how much of it is going to stay at Ticketmaster, but you got to assume that's bullish for the stock, for Live Nation. Now, unless the flip side is that this whole Swift thing is kind of like the last thing where people are so fed up that they're like, all right, we're done with this. We need to, essentially like break this company up. So we'll figure it out. But I mean, I would actually assume that this is bullish for Live Nation, and I'm surprised. And the Ticketmaster's had problems on its website, so maybe that's why the stock's down a little bit. But I'd be surprised that if when people figure out kind of the magnitude of the money that's being sold through the platform for these shows, what it's going to end up being. And that's not even to mention, I mean, every single ticket purchase. So again, off Ticketmaster, every single ticket's going to be purchased. That's 2.6 million. Every single one of those has a service fee. And you got to assume at least a service fee, a majority of those fees go back to Ticketmaster. So if you say $5 a ticket on 2.5 million, I mean, this is going to be significant money for Live Nation. And again, this will probably be all stuff that's not even reflected in the upcoming earnings report, whenever that is, but not till the one after that. So actually, the company just reported earnings. So potentially in the next earnings report or the one after that. Just keep in mind, because I would not be shocked. That's my prediction, is that when it's all said and done, this would be, at least like per show, the highest grossing tour concert ever. I don't know what do you think it is in the chat? If there's a tour, if there's an artist that you think has passed it, then didn't someone just get out of jail on ticket? I don't know. What other stocks should we check out? Apple. Let's check out Nvidia. How's Nvidia doing? Probably selling off a little bit. Yep, selling off a little bit into earnings. I mean, chart-wise, this did look like it was trying to come up here and fill the gap. So, honestly, I wouldn't be shocked if Nvidia is to get we get a surprise beat here. We talked about this on the show a few weeks ago, that it's interesting from a technical standpoint when you're looking at charts. It always seems like the chart, it comes to a, important spot on the chart right around when there's an important, if you're looking at the S&P 500, it's like we're at an important spot in the chart and we're waiting for a really important CPI data, or for an individual stock. It's a very important part on the on the chart where you're right at a support and resistance, and we're right at earnings. So I always find that interesting when they kind of coincide, and I'm seeing that right now with NVIDIA, just based on how on this chart right now. You know, we've gone up a lot. The RSI is extended, but you still got kind of a gap fill to the upside potentially, or you know, this could act as overhead resistance and we could reject. So I think if you're looking at the chart, you could make an argument either bullish or bearish, just like if you were trying to trade off fundamentals in the earnings tonight, you could make a case bullish or bearish. Yeah, AB, Billy McFarland was just released. Oh, that's the Fire Festival. Was that, oh, so was he in jail on, I guess, just fraud in general? I mean, he's got the FTX Fire Fest. I mean, Billy McFarland, Martin Shkreli, SBF, like all these guys need to just like get together and come up with the one big scam, you know, the one big, they're going to get, I'm seeing a headline on CNN right now. It says Thanksgiving dinner will cost 20% more this year. How is that from last year? Really? That seems like a lot.
Appreciate it. Here to help.
Are there any, what are some good Thanksgiving stocks that we could talk about? BetZ, if a lot of people are going to be home over Thanksgiving betting on football games. That's probably a bad sign if that's the first. Oh, Janine, stay in line. That's your right. Stay in line. The polls don't close. Honestly, like you should, even if you were going to sell them, Janine, because you can probably buy like 6 of them and sell them for a quick little profit, little side hustle. All right, guys, how about some tickers or any trade ideas in the chat? Okay, I gave this trade idea yesterday, but now I'm starting to really like this one. I'm not fully in it yet, but I'm looking at Meta calls that expire the December, you know, next December, the December monthlies. And again, my hunch is that Black Friday sales, last year we didn't really see it until after Thanksgiving, or sorry, until after Christmas, when Oculus became the #1 app on the App Store. How popular the Oculus headset was in terms of as a Christmas gift. But the new Quest, I'm going to make a prediction that it is the number one holiday gift this year. And I am long Meta because of that. Well, here's the thing is I think just timing wise, like I think timing wise from an entry point, I think because of that, I think it makes sense to go long Meta here on a swing trade. And that's what I'm going to do. I'm not saying I'm going to buy and hold this stock for years and years and years. Is the growth still slowing? Probably. Is the company burning cash on the metaverse? Yes. But I think we could rally from here in terms of the stock. I mean, look at this. This is an incredible down draw from about 400 down to 113. You're down 65, 70% on Meta at this point. For good reason, by the way. But I'm going to look at go long there. Tesla down about 4% today. TSN, all right. We can look at TSN. Tyson Foods. I mean, this one's going to be just like more of a boring, stodgy stock. I think if you were buying it to hold on to the dividend, let's go over here. Dividend yield, 3%. Yeah. I don't hate that. I don't hate buying some Tyson Foods down here. Why not? You're down here to our, you know, I mean, well, here, let's go look at the fundamentals. Let's look at the fundies. Price to sales 0.4. Cheap. Fun. It is cheap. Yeah. No, I mean, if I again, like, I don't know what you're looking at Tyson for, Easy Mike. This would be one that I would like buy and hold for a while, not, you know, necessarily like as a swing trade. Because if you were just trying to swing trade, like make, say, 10% over a month or a couple months or something, like there are other stocks that are going to move more than Tyson Foods is. It's like gold to me, like gold and Walmart and all these stocks aren't going to move as much as. I don't disagree with that at all, Jay. I think I do think, you know, you got, was Meta really in the low 80s? No, I don't think so. Did it? Oh yeah, I guess it did. I 100% agree, Jay, and that's why like I wouldn't mind waiting if this obviously continues to pull back here, like wait to get long around 105 or 100. But I think just because we went from 90 to 120 doesn't mean there isn't still upside potential on Meta. Especially, again, my thesis here is that Black Friday and holiday sales specifically will be very strong for the Oculus headset. So I agree with you that this move right here that you're talking about, already done. I'm kind of trying to play a different move here. Honestly, I would actually prefer it. I would like it to see it come down a couple more bucks. Again, 105, kind of 110 here, a little Fibonacci retracement, and then you come back up a little bit higher, then you get another sell-off. So yeah, I think I'm in agreement with you there, Jay. Yeah, Tyson's cheap. And again, so I wouldn't mind buying and holding Tyson for a while and collecting that dividend, because here's the thing, is if you know you're going to get the dividend and then you're also essentially betting that the underlying stock is going to increase in value, it's a win-win. So, I wouldn't mind holding Tyson if if I had a choice of either holding, 50 grand in cash or putting that 50 grand in Tyson for 2 years or something, I would pick the stock in Tyson. Because again, you're getting a stock that's cheap, that has a chance of appreciating in value, the underlying stock, as well as that 3% dividend. I mean, it's not like that dividend, you're going to get rich off of it, but it is positive return, or potentially positive return, depending on what the stock price does in an increasingly tough environment. I'm on some Meta shorts to 105. See, that's fine. Honestly, you could talk me into buying some Meta shorts down to 105 and then going long, because again, I'm not saying that I think Meta's only going to go up from here, that it's or that it can't continue to kind of move a little bit lower, but just that that I'm willing to kind of play it on a month-long swing trade basis here long, if not from 113, then here pretty soon at around 105, I think. AB, we're looking for a trade that expires before December 16th, which is the debt ceiling deadline, and quad which. Easy Mike, you're looking at things that I don't know. I know that a lot of people look at that on the monthly expiration dates and seeing how much money is expiring, what's rolling over, all this stuff. But trades that expire before December 16th. So I don't know. You got to think what catalyst you have. I mean, you have some earnings still coming out, NVIDIA earnings. I don't know. I don't really have a hunch on NVIDIA's earnings today. I mean, anything you would do would be a complete gamble anyway. I do know the company's already kind of guided or already warned about its guidance, which could, you could argue, is not a bullish thing, but all right, now the bar is lower, so the company doesn't, it's already set the bar low essentially. So if it comes out with just a decent report, or at least it maintains its guidance, that could be construed as bullish. So I'm not sure kind of what catalysts we have coming up. We could take a look at the economic calendar, see. We are shorting energy, but the EU oil embargo in December. So maybe short financials. Yeah, I mean, man, Coinbase getting crushed again. You could always okay, so one thing I have been looking at is home builders. I think a lot of the home builders have been getting so beaten up. What is the one, Lennar? I mean, I don't know. As far as trade ideas that expire before December 6th, or December 16th, I don't know what catalysts we have. I guess, think about we got Thanksgiving coming up. Yeah, I don't know. Lennar is making 3D homes. What do you mean by that, Easy Mike? 3N? I don't know what that means. While we were talking about dividends, Rio Tinto. Rio Tinto is one of the largest, if not the largest, mining company in the world. Let's see. These mining companies are always cheap. The problem is, to me, is they kind of trade with the underlying, commodity. If, and I think Rio Tinto basically has exposure to all different metals. Global diversified miner, iron ore is the dominant commodity. Okay, so basically, what I'm saying is that I think Rio Tinto stock in general is correlated to the price of iron, and copper, aluminum, iron, all these commodities. they tend to go up when global economies are growing and things are humming. You know, we've seen like the price of copper go up a lot over the past couple weeks, and people usually see that as a pretty, you know, indicative thing. People say Dr. Copper, right? If you want to see how the economy is doing, look at how copper is doing. If it's going up, the economy is doing well. So if you're betting on Rio Tinto here, you know, you're kind of betting that the overall global economy and the commodities markets stay strong, because if there's a global recession, which a lot of people are scared about, then you would assume that a lot of these commodities would get hit a lot, which we have seen. We've seen that, which is actually a bullish sign in terms of inflation. So you have to weigh all these different factors and things going in. I would say that, again, if you're going long Rio Tinto here, you're kind of going long the global economy, betting against a wide recession, which I'm down for, right? You can talk me into that all day long. I'd much rather be on that side than the other side. So again, you know, it's cheap by traditional fundamentals. It pays a big dividend. But I don't honestly, like, we got to bring on like a mining stock expert, because I never really quite understand why from a fundamental standpoint these things are always so cheap and they always pay like a high dividend. Like, to me, maybe because growth is just hard in mining for mining companies. I really don't know. Yeah, metal pricing will play a big role in its price. But again, I mean, the global, I mean, the price of, we don't have commodity data on here on Benzinga Pro, but I mean, if we can just look at like Southern Copper, for example, go to a daily chart here, you can see like in the past, you know, like 3 weeks or so, really have come ramping up, and the price of that, you've seen that in different commodity prices across the board, and I've seen that as a bullish sign for the overall economy. However, the flip side to that is that as commodity prices come back up, you can assume that might not have a great effect on inflation, as you know, companies have to go buy their copper and iron and whatever, and if those prices continue to keep moving higher, then we might, you know, not be making as much progress as we'd hope on inflation. So all these different moving parts, really a interesting time from a macro standpoint. And yeah, I mean, at the end of the day, like, you got to weigh the risks and rewards, figure out where you're willing to take those risks and invest in. And yeah, we put a small on TLT and UDN. Yeah, and that's and by the way, with the dollar and the commodity mark, they're going to have an inverse correlation as well. If the commodity mark or commodity metals and whatnot are moving higher, the dollar should be moving lower, and that's kind of what we've seen over the past, literally the same exact time frame that we just looked at, how Southern Copper started going up around the beginning of November, the dollar started going down. So that's, again, probably a good sign for the overall global economy to see the dollar starting to come down a little bit. But now it's made a pretty significant move to the downside, the dollar has, in the past couple weeks. So I wouldn't be surprised to see it now come back up a little bit. Doesn't mean the overall trend isn't that it's going to continue to move lower, but just now that we've had such a drastic move over the past 3 weeks, a big move in a short time frame, you can expect a little pullback, a little reversal from there, but then the overall trend may continue. So just all things to consider. I know it's I don't know if any of that is honestly helpful or not, but that's kind of what I'm looking at right now, how I'm seeing things. I do see our next speaker backstage, Kevin Davitt from Nasdaq. So we'll give him a couple minutes. Whenever I get a thumbs up from him or that he's ready to go, we'll go ahead and bring him on the stream. And for our final presentation of the day, saving the best for last, Kevin Davitt from Nasdaq. Again, excited for that. So again, here in a couple minutes, we'll get to that. Any other final or any other stocks we want to look at? Oh, why don't more people love Zim with its huge dividend? So Janine, Zim is one of these shipping companies that you can just look at the chart and see kind of how crazy. I mean, here you can probably see it more on like a weekly chart, like just how crazy this thing got during you know, COVID. And so what's happened really since right here, March 20, you know, this is in March 22, and why this stock has gotten so beaten up is like the cost of shipping something maritime ship, shipping something across the sea or whatever, like got so expensive. And it was one of the, it was a driver of inflation or a byproduct of inflation, however you want to look at it. But since then, that's been one of the things that's actually come down the most in prices, has been the cost to ship something across the sea or even like domestically on trucks. The cost of transportation, the cost of shipping has absolutely gotten, here, let me find it. There's a MSCI World Transportation Index. Like, you can look at that and just see kind of the price of transportation has gotten absolutely clobbered. And it's just like we were talking about with the mining companies. The mining companies are going to trade based on what the commodities are doing. For the most part, they have earnings and they have fundamentals and they have cash flow, all that stuff too. But for the most part, with the commodity, if the underlying commodities are moving higher, then the mining companies will as well. Same thing here. If the price of shipping on a global scale is increasing, Zim stock should be going up. I'm not going to say it's a 1-to-1 correlation, but it's what we've seen. And since those prices have been getting crushed, we've seen that come down a lot. So I don't even know, like, honestly, Janine, how, like, they paid a dividend last quarter based on its stock price, but now the stock price isn't there. So the dividend's going to look all jacked up and weird and out of place. So I always say, don't buy a stock just because it has a dividend. We were talking about Tyson Foods earlier, and like the chart looks decent. It's already cheap. It's been beaten up, and I already wouldn't mind holding the stock. And then you throw in that it has a dividend, great. But I'm not going to go out there and look for stocks just because they have a dividend. The other point, and maybe our next guest, our next speaker would agree with me on this. If you're only looking for dividend stocks, or if that's kind of a litmus test for you that you only want to hold a stock that has a dividend, you would have missed out on, like, the Apples and the Amazons back in the day, because when companies are in growth mode, they typically don't really have high dividends, right? Dividends are reserved for companies that are more value-based, that have a strong cash flow. And me, myself, since I'm young and I'm building my portfolio for long term, I'm more growth oriented. So most of the names that I'm looking at that I'm, wanting to own don't have dividends, and I don't really care about that. But all right, guys, let's go ahead and bring Kevin on the stream. Welcome him on, see how Kevin is doing on this beautiful Wednesday. Kevin, how are you?
I am doing well. I appreciate that introduction. How are you doing?
Yeah, I'm doing well. We've been going live all day, so I'm trying to, we're trying to finish strong, keep the energy high. I don't know if you have any thoughts about, that dividend conversation before we get going to what we were going to talk about.
Well, I do think your point about growth companies is a relevant one, and I think the way you categorized it is totally fair. And if you look at total return performance, which should include dividend payments over time, granted, I am speaking for the home team. I work for Nasdaq, but over the past 15, 20 years, the Nasdaq 100 has outperformed all the other U.S. equity indices demonstrably. That has not been the case in 2022. Growth names are lagging, as I imagine you've probably talked about a couple of times during this full day stream. But if you have that kind of forest for the trees perspective, from my standpoint, I don't think that overall narrative is going to flip in favor of value for, like a generation or something like that.
Yeah, no, I think that's very well put. So I don't even know off the top of my head, because I'm pretty sure if you own like the SPY index or the VU, there is a small it's nothing crazy, obviously, but is that the case? Is there even a small dividend if you hold the Qs or
yes, that's a good point. So the ETF products and designed to track those broad-based indices do generally have quarterly dividends that vary. And a good, interesting thread between that and index options, which for the most part is what I support and talk about. You don't have the same risk with index options as you do with the ETF cousins, because indices settle in cash, do not pay out a dividend. And so from a number of people's perspective, that's just cleaner and easier. And then the last thing is that there are potential tax benefits associated with the index side thing that they do not share with the ETF side. That's a conversation for tax professionals and an entirely different sort of webinar, but it is worth pointing out.
Yeah, and so I appreciate that. I know I was just talking about what I was talking about before, and then asking your thoughts on the dividends, and we got on that kind of sidetrack. But I want to introduce the segment. So we are going to be talking about what's the deal with the U.S. dollar. Join Nasdaq's Kevin Davitt to explore what market participants can do to offset exposure. So that's a good segue too, because I don't know if you caught that, but we were talking about the dollar a little bit there too. I'm no Forex, expert, or really, to be quite honest with you, expert on anything, but I do like to watch how the dollar moves and all these things. And really more so than just how the dollar moves, but how that impacts what the equity markets are doing. So I don't know, Kevin, if you have a presentation or slides or something you want to pull up and we can share. Do you want to give us a quick preview of what we'll be talking about today?
Yeah, you hit it on the head. We are going to be talking about kind of that correlation that you alluded to a couple of minutes ago before I popped on. We're going to talk about how currency markets and their relationship to the interest rate environment has impacted equity markets, how you can gain exposure to that. A couple ways I see them as proxies for interest rate or equity exposure. So yeah, stick around and I'll try to keep the energy high too. I do want to ask, however, that you're seeing like a title slide that I have now.
Yes, sir. I just got to click a button and pop it up on the stream. Cool. There we go.
Awesome. So what is that? My cue to take it away?
Yeah, so here, I'll let you take it away. I'll hang out backstage, be listening in. If you need anything, just holler and I'll be right here.
Great, will do. Well, I appreciate the intro, the opportunity to be here. I'm excited to be back with the Benzinga crew for another boot camp. I'll mention briefly, I am part of Nasdaq's index options team, and so our kind of bellwether, our flagship is that Nasdaq 100 and the ecosystem around it, and the index options designed to track that product, like the NDX. NQX is based on 1/5 the value of the overall index, and XND, which we're seeing a whole lot of traction in, that's 1/100th. The value of the overall NASDAQ 100 index, much more approachable from kind of an individual retail trading standpoint with regard to notional exposure. I can also talk knowledgeably about forward volatility measures and implied volatility. And I spent years trading equity, index, commodity options, all sorts of stuff. And now I talk about these in events like these. And as I mentioned, I want to talk today about currency markets broadly. I most certainly welcome questions. I try to monitor that chat, but chances are I'll leave it to the end because I have a finite amount of time and a fair bit to cover. But me just getting through the material isn't the goal. It's you taking something meaningful, potentially actionable away. So get on with it, Kevin. Before I do, I got to show you our disclaimer slide and point out the obvious here, but I think it's important. There's risk in every market at all points in times. There is a unique risk associated with derivative markets, and I say this all the time. I think those that focus primarily on the risk in any given idea as opposed to the potential reward, and then they establish some kind of plan for that risk if things go well, if they don't. If-then statements behaving kind of like an algorithm tends to be helpful. And from an exchange standpoint, right, you might be like, Kevin, all you do is care about volume. Exchanges do benefit from volume, but again, forest for the trees perspective, we benefit from the informed use of things like tools like options, because the smart use of these tools typically expands over time. And our goal is for individuals, institutions to continue using these products because they can smooth out returns, protect portfolios, and offer you in, depending on your exposure, a way to get defined risk exposure to a market. So that is my big picture interest. And now we're going to talk about some specifics. So the strength in the US dollar has been a talking point for many months because of the visual I'm showing on this right-hand side. And just to cut through the noise, the black line plots the performance of the US dollar index between January and October of this year, and then it compares that to the 21 years previous. And it's by far and away the biggest up move for the dollar in more than 2 decades. And that strength will have knock-on effect, which we're going to discuss. Now, in brief, there are positives and negatives to this performance. Capital markets are not black and white. It's to a certain degree a matter of timing, exposure, and in this case, where you live. And so let's talk through left-hand side, some of the basic pros and cons implications of a stronger US dollar. Well, it makes imports relatively less expensive. To what extent do you care about that? I don't know. But let me give you just a real brief example using a car. And let's imagine that a Volkswagen Atlas is priced at 25,000 euros. They're a European-based company. A year ago, it took $1.15 to buy €1. So in dollar terms, let's say that cost of the car remains fixed at 25,000 euro. Last year, it would have worked out to 28,750 in dollar terms, right? Very recently, the exchange rate for the euro reached parity. In other words, you could buy €1 with $1. It was the weakest level for the euro since 2002. And in that situation, that Atlas costs only $25,000, which is like a 15% discount for the car. That's a big difference. The same goes for travel. If you are in a euro currency using country, your dollar is going further, or let's say you have a high class problem, you're looking to get some real estate in France, and that real estate has to be paid for, or any place using the euro currency, that has to be paid for using euros. Well, your dollar gets more of them now, and so the property is relatively cheaper. Again, high class problem. Another way to look at this, at the shift in monetary policy that's arguably been the catalyst for the stronger dollar, is one way that the US gets to export some degree of our inflation. Flip side. Let's say you're a US manufacturer. Their products have become more expensive overseas. Not black and white, right? Like, it's a matter of where you're at. So everybody talks about widgets and economic discussions. I'll run with it. Let's say that, let's imagine that I have primarily European buyers. I'm a US company that sells widgets. They're priced at $1. And a year ago, my European buyer would only need 0.87 euros to buy one widget. Well, now that same euro costs them a full euro, and that's a big difference. So the implications here are that you see multinational corporations that sell a lot of their goods or services overseas, but recognize revenues in US dollars, seeing their bottom lines hit because they are reporting in dollars. And then when they repatriate those euros or yen or what have you, Swiss francs, they are worth less in dollar terms, okay? That's been cited in a number of earnings calls, and I would expect that to continue. And then lastly, this isn't all encompassing, but the last big one is that a strong dollar can put a lot of pressure on smaller emerging market economies. I'll give a couple examples of that in a bit, but you had like Lebanon, Sri Lanka, Zambia all defaulted this year. That can become contagious. You saw that at a couple points in history. A while ago, depending on how old you are, well, you'll see some of them pointed out on a chart. And that too can lead to political and further economic instability, which is difficult to contain. And the world is more interconnected. So this arguably matters more than it ever did previously. I'm to a certain extent a student of history. And so back in the 70s, when the US was fighting inflation from like the oil shock, Nixon's Treasury Secretary told European finance ministers explicitly the dollar is our currency, but it's your problem. And that's pretty much the case again in 2022. But it's bigger because there's so much more international trade. And we're going to talk more about that when we look at how much trade is dollar denominated. So that's what you see here on the right-hand side. Again, it goes back to 2000, but the key takeaway here is that the US dollar has been dominant for decades, arguably since the end of World War II and the Bretton Woods Agreement. So for the past 20 years, the proportion of global trade that's dollar denominated ranged between like 75% on the high end, which you can see here, to like 65% on the low end, but it is dominant. So the other are significantly less, like the euro, the pound, the yen, or the renminbi or yuan in China. Keep in mind that most dollars, like was being addressed a couple minutes ago, are dollar denominated. So like despite the ascension of China onto the global stage over the past few decades, very little international trade is yuan denominated. The dollar remains ascendant. So here is somewhat similar or certainly related data. What about global debt markets? So when companies or governments all over the world tap into the capital markets using debt instruments as opposed to equity, they issue bonds and they raise money to hopefully grow or fund infrastructure. The global bond market is humongous. You see some big numbers here that I'll talk through. So the sovereign bond market, so countries tapping debt markets, is valued around 89 trillion in USD. And the international corporate bond market is valued at 41 trillion. Those are both with T's. So when that debt is issued, the vast preponderance of it is dollar denominated. Those funds have to be paid back in dollars. All the interest payments, all the principal payments have to be repaid in dollars. And that whole, whatever, $130 trillion market, somewhere around the ballpark of 70% is dollar denominated. And so in USD situations, that makes servicing the interest and principal payments significantly more expensive this year. And then it can become more difficult to roll over maturing debt because the spread between US interest rates and higher risk interest rates globally tends to widen in these environments. So you can see defaults. I referenced a couple of them a couple minutes ago, and we could see more. Okay, currency markets. I'm trying to keep the energy up, right? I didn't know I was the encore today, so I want to close out strong. Okay, currency markets and interest rates inextricably connected. Earlier, I showed you the US dollar performance annually since 2000. This is a related visual that plots the yield on the 2-year US Treasury over the same time horizon. So all the gray lines in this one show the movement in the 2-year rate over the past 21 years. And generally speaking, that yield moved up or down about 100 basis points over this relevant time frame in every one of those years, but not this year, not that black line. As you're likely aware, short-term borrowing costs have skyrocketed. So yields on the 2-year have moved up by more than 350 basis points through October. Now, to be fair, referenced before I popped on, they have come off a bit recently, specifically since the last CPI data point, but it remains by far and away the biggest move in the 2-year over this time horizon in what I'll categorize as roughly forever. And I say that roughly for compliance purposes. Okay. So we have inversions in the yield curve. I won't go super into that, but generally speaking, shorter term interest rates above longer term interest rates, that's generally not a good sign. Typically, it's been a signal of a recession. In reality, we may likely already be one, but the question becomes to what degree, how long, how widespread. And I can't answer that. But interest rates, what I know, interest rate changes in monetary policy behave like time-released medicine. You do not feel the impact straight away. It can take months and months and months to work its way through the plumbing. Now, if you want to look at it glass half full, perhaps you're earning a bit more on your savings account. And it's been a long time since savers were rewarded with decent interest rates. So from that perspective, it's not all bad. Okay. Now, we're going to shift gears here slightly, and I alluded to this at the beginning. Visual on the right-hand side shows you 60-day rolling correlation between the S&P 500 and the US dollar index. As you can probably see, there are periods where equity markets and the US dollar are positively correlated above that x-axis. And in those situations, they tend to move in the same direction. We are not in that environment right now. There is a strong and growing negative correlation between the dollar and equities, US equities in 2022. It's the strongest inverse correlation in about a decade. So what does that mean, Kevin? Well, generally speaking, dollar has been going up, US equities moving lower. That's a negative correlation. But there's a variety of ways you could potentially view that from an actionable standpoint. So in hindsight, long exposure to the dollar earlier this year could have served as a hedge for what we subsequently saw in equity markets. But growing up, my mom would tell me, Kevin, you can't should have. And she was absolutely right. She remains correct about that. You can't should have. Short exposure to the euro or the pound or nearly any other global currency could have served the same purpose. But it's also possible that the tide is turning, like the big tide is turning on the US dollar. I don't know. There has been a fairly significant decline in the dollar following last week's CPI number. So to give that a little color, on the 11th, last Friday, the dollar index fell to its lowest level since mid-August, pretty much 3-month lows. Year to date, it's up about 11% as of yesterday, but it was up 20% in September. Now, if I look forward, if the negative correlation that I'm showing here continues, someone could consider long exposure to currencies other than the dollar as a long equity alternative. I'm going to talk a bit about some option products that would allow you to express that forecast. I am not saying that makes sense, but I'll explain a little bit more about why that, if that's what you're looking to express, it could work out. Typically, that type of exposure would come with a lower volatility relative to US equity indices. I'll elaborate on that and ask questions if you have them. Now, before I get into some of those specifics, I wanted to look at a couple related things. So the visual on the right-hand side here shows the median cycle for rate tightening periods for the countries that are listed on that x-axis, and the y-axis shows your months for our duration, so it's reflected in months. That dark blue line above the US indicates that on average, US hiking cycles take just over 2 years to complete. Now that's based on historical data from the first hike to the first cut. Globally, that average is closer to 1.5 years, and thus far the Fed has been hiking for nearly a year. But it is different this time in the sense that the magnitude of the hikes that the Fed has embarked on is very, very different. This year has been the picture book for front-loading rate hikes. If you look back historically, a 75 basis point move by the Fed at a single meeting was nearly unprecedented, but this year it's already happened 4 times. And there has been a lot of chatter potentially on Benzinga's channel here today about when the Fed might pivot from we're fighting inflation with everything we got to maybe we're going to become a little bit more data dependent and see if it's working its way through the plumbing. I don't know if that's going to be the case, but it seems like currency market moves of late are trying to kind of sniff that out. Related here, the visual shifted, but it shows that shifts in currency market trends typically take a while and continue for a while. The US dollar, whether it's moving up or down, typically trends for years, somewhere in the ballpark of 9 years. And we are currently beyond that, like 11, 12 years of relative dollar strength. Okay. And you can look at whatever it is, 5 other examples. So there's the 2002, 95, 85, 78, 1970 situations. I would point out that in 1985, for those of you younger, is when the Plaza Accord took place. It was a really big deal. We don't have the time to cover that properly here, but it was a coordinated effort to weaken the dollar, and it worked. There is another G20 meeting that just started, and dollar strength will almost certainly be a topic because it matters. Now, on the other side of the screen, you see the impact in percentage terms of those moves. How much over that time frame did the dollar move up or down in percentage terms? So this time we're looking at somewhere in the ballpark of 42, 43%. That's a big, big move. All right. Now, anybody use, you could chat or whatever you want. Does anybody use the CME FedWatch tool? If you do, you're going to probably recognize the visual on the right where it plots the expected target rate for Fed funds based on the Fed fund futures curve at discrete points in time. And they're broken down across the top left by FOMC meeting dates. So the current, as of the last FOMC meeting, target for the Fed funds is between 375 and 400 basis points. And then you see like December 14th, the next Fed meeting. Somebody was talking about December 16th catalyst. The Fed meeting on the 14th matters. Then you have early February of 2023. Anyway, what I'm going to do is point out that like a year ago, the end of 2021, based on the Fed fund futures markets and this tool, the market expected rates to be between 75 basis points and 100 basis points in late 2022. The market was wrong. They moved a whole lot more than that. So this isn't written in stone. This can and will change. And the red and green boxes on the bottom show you statistically how those odds have changed over different time frames. So a month prior, a week prior, a day prior. And just picking one example, the probability when I took this snapshot of in December of 2023, Fed funds between 5% and 5.25% had shifted from 1.8% a month prior to 26%. That's a huge move. All right. Now they've come off since the CPI data, but if you Google whatever or search for CME FedWatch, you can follow this data, and it's stuff that I find fairly useful. Now, what we're looking at here is how kind of wrong the Fed was about that 1% outlook in late 2021 expectations, as opposed to where we ended up and how that happened. So it continued to increase that forecast throughout the year. You had Russia invading Ukraine, energy prices pushing inflation expectations, and then actual inflation data higher. No signs of transitory early in the year until recently. We'll see. My primary point in this is to make it clear that rates rate expectations, rate markets can move dramatically. And that really wasn't the case for the better part of the past almost 15, more than 10 years. So the question becomes, what do you think the Fed will be doing a year from now? Are they going to continue to be hiking? Are they going to be more data dependent? Are the front loading hikes going to ripple through the global system at that point in time? I would imagine so. And is there anything you could do to potentially capitalize on that outlook? Right? I like thinking about that sort of stuff. So I've mentioned that the dollar has generally been appreciating for about 11 years, and here's visually how that's taken place. If I look back at 2014, that green rectangle highlighting, we had this big run up in the dollar, and there was a Chinese currency devaluation and real issue in emerging markets back then that had a knock-on effect in equities in September of 2015. It was a big deal. You had a bit of quantitative tightening in 2018 and 2019, but not huge appreciation in the dollar back then. More recently, there has been legitimate tightening. I'll show some of the data on that in a bit. And we've seen about a 30% move higher in the dollar over the past year and a half. And I would argue that the full implications of this move have yet to be completely realized. So I wonder, will there be a big currency event or potentially a default because of rates in the future? I don't know, but I'm a fan of history, and just to use something that's often attributed to Mark Twain, history doesn't necessarily repeat, but it often rhymes. And so I'm, to a certain extent, concerned, or at least aware of the potential implications of this strengthening. So a couple things to note. This is showing you dollar index annualized volatility going back 30 plus years. Couple takeaways. Generally, currency vol is quite a bit lower than even equity index vol. Low end for annualized vol measure here about 3%. The low end for annualized equity index vol is like 6 or 7% on a relative basis. That's much higher. Now, generally speaking, US dollar realized vol runs around 7.5% on an annualized basis. Now, over the past decade, the annualized Nasdaq 100 volatility is closer to 17%. So again, a big difference. And as you can see, when dollar volatility pops, there are a history of crises. And I'm not trying to mix up causation and correlation, but there is some tie here. You go way back to the Mexican default in '94, the Southeast Asian currency crisis later on in the 90s, and then the Russian currency crisis that led to the downfall of long-term capital management. Here's a plug for a super readable kind of econ trading type book called When Genius Failed, about long-term capital management's implosion. It's very good. You look at the global financial crisis. So back then, dollar vol got up to like 15%. In the equity world at that same point in time, vol measures were like 75%. Big difference. Now, I don't know if we're going to see some big implications associated with this rate move in the US and the dollar strength, but I do think it's possible. All right. Now, I'm going to talk about inflation measures, kind of two different ways here really quickly before we then talk about product or leave some time for questions. But focusing on the right-hand side visual, the white line plots CPI data going back 20 years. The scale there is on the right, okay? So right around 8%. Before that October reading. And what's interesting to see, or at least interesting for me to see here, is how it diverged from this manufacturing ISM prices paid data, which historically these two measures have tracked one another pretty well on a relative basis. Now, I would point out that the scales are different. So this is the ISM prices paid one. That's the CPI. Pardon me. But you can see that they have tracked one another until more recently. So you had supply chain issues, which influenced that prices paid component to a greater degree than you have that supply chain concern now. And what we've seen is inflation has moved from primarily on the goods side of things to the service side. And so you have that CPI sticky. You also have the component of housing, which is slow to adjust, but it seems like that's starting to. That's not yet reflected in CPI data. Okay, so big picture, the kind of takeaway here, or what I think about is, do I believe that the CPI data will catch down and be more reflective in ISM, or is ISM going to come back and meet CPI in the middle? I don't know, but I do know that it takes months and months and sometimes up to a year for interest rate hikes to funnel their way through the whole economy. Like I referenced slow release medication. You're seeing that trickle through and have those ripple effects now, okay? We're arguably just starting to feel the effects in our day-to-day. Pardon me. Now, related, you have your CPI data here over that same time frame, and then you have it relative to money supply. All right. So how do we potentially interpret this? The correlation is not nearly as pronounced as it was in our ISM prices paid situation, but what I think is clear is that money supply and CPI both increased really quickly following the Fed's asset purchase program early on in pandemic times. The Fed's balance sheet ballooned to like 9 trillion at its zenith as a result of these asset purchases, which is quantitative easing. Now they are shrinking that balance sheet. They are removing money supply from the system, and they are doing it quickly. You see the quantitative tightening schedule where they embarked on it in June of this year at removing 30 billion a month from the U.S. Treasury market and 17.5 billion in mortgage-backed security markets, and they doubled it in September. It's like if you had a fire hose turned on full blast, you can't just straight turn it off super easily. It takes some time, but it is happening. Okay. Went one too far. All right. So this one plots, we're shifting directions a little bit here. As anybody that's traded this year knows, the equity markets and pretty much every market has been sensitive to Federal Reserve dates and decisions. This plots S&P performance in the last 90 minutes of Fed days on every Fed decision, and it goes back to 94. Now, I know you're shocked, but I wasn't even in college then, almost though. Back when Alan Greenspan was running the Fed. Now, green bars show S&P 500 advances, red ones are declines. Big picture, reactions are becoming more magnified in the current environment. You see that kind of dispersion around 0% in 2022, both upside and downside. And then you look at the move on that last Fed meeting in November. It was the worst sell-off on a Fed day in more than 2 decades. And making matters potentially worse, markets were initially higher on the decision, and then they reversed really hard on the press conference. When else did we see situations like that? Well, I see this 2011 timeframe, which was European sovereign debt market issues, high vol markets. And back in here during global financial crisis and implosion of the .com markets. And I don't know how young our audience is skewed, but those were all a very, very big deal. Now, typically, the Federal Reserve is influential, but they are arguably exhibiting greater influence in the market this year than in many of the past few years, and I doubt that that changes anytime soon. I've pointed out in previous presentations that on average this year, average daily high to low move in the Nasdaq 100 has been 2.5%. And it's been even higher on Fed days. Those are big ranges. You have to go back to 2009 to see daily ranges that average higher. There's also been tremendous growth in the use of short-dated options, so options that expire in, let's say, less than a week, or in many cases, less than a day. And that's great in the sense that you can really target your exposure or your hedges over a specific time frame. In my opinion, more options, more expiries, more products is better than less on balance, but you need to understand the risk associated with this type of exposure, and specifically the gamma exposure embedded in short-dated options. So if you have an option that could move from like a 5 or 10 delta to a 90 or 100 delta in the zero data expiration situation, you need to understand what that can look like. And I'm going to plug some friends and some people I've done some work with in the past at Spot Gamma that cover that quite well. And you can seek out their information, their data, particularly if you focus on short-dated options. Now, in the last handful of minutes before questions, I'm going to focus on a couple of option-based products and sort of weave this all together to a certain extent. Now, to this point, we've talked primarily about the dollar, the potential implications, but currencies don't move in isolation. They're interconnected, and correlations will ebb and flow, but like global capital markets, there are knock-on effects elsewhere, and we've addressed that to a certain extent. So now I'm going to think about product and hopefully make you aware that there are options on 7 major global currencies. They are all US dollar denominated. That matters. So I took a screen grab here. I went one too far. First one was a euro, where in this situation, the euro was weaker than it is now. So it was like 2 weeks ago. It took 97 and a half, call it, euros to buy, $97.50 to buy 100 euros. And by comparison, yesterday, it took $103.25 to buy 100 euros. So just by way of example, these options, I looked at this point in time, your 97.5 was the at the money. And the calls, hopefully you can see where my mouse is over here, they were offered at 109. And if I bought those, these operate just like standard equity protocol in that our multiplier is 100. I would pay $109 for that one option. That would be my risk, the most I could lose. Now, as it turns out, as of earlier today, they were worth like $650, okay, or $650 each. You could sell out of that at any point ahead of expiration. If you take it until expiration, all of these currency options are European styled. I don't mean to be confusing with the European here. That just means they cannot be exercised or assigned early, but they are cash settled. So Let's say I bought that for $109, not including any frictional costs. And at expiration Friday, which is this Friday, they're worth $650. If I hold that to expiration, it settles to cash and I make the difference. It's just credited in my account, and there's no residual position after expiration. Hopefully that makes some sense. Now, thinking more macro, I mentioned how I viewed currency exposure as a potential equity replacement or proxy in this environment. And that is tethered to the strong negative correlation we've seen between the dollar and the broad market in this year. So then I look back at like the past 3 months, how XDE, this Euro tracker, has performed. It had a shallower drawdown over the past 4 months at 4% at its bottom compared to all the US equity indices. And it was higher by about 2.25% again over that 3-month time horizon when all the equities remained near unchanged or slightly lower. So my point here is that there's generally lower volatility in currency markets, but not always, okay? And when I think about this data, how volatile the equity markets can be on Fed days, and then I consider the correlation to currencies, right? The equities have moved up over the past week, and what has the euro done? Moved up, right? Perhaps you could use that exposure, a foreign currency denominated in dollars, though, as an equity proxy that might be lower volatility. That is not a recommendation. It is something that if that resonates and makes sense, you know, it serves as food for thought. There are dollar denominated currency products on 7. One is the euro, one is the British, one is the yen, and I highlight one key difference here on this that ultimately is adjusted out by the price at 68.71. Your contract point value across these is $100 each. So like if an option moves from 175 in the case of this 68 call up to 275, you're making $100 or losing $100 if you're short of it. The yen multiplier is bigger, but it's adjusted for in the index. If there's questions about that, I'll clear it up like with an email afterward. My bigger picture interest here is like when you hear the British pound reach 30 plus year lows relative to the dollar late last month. You had this Truss budget disaster in the UK. The pound fell to 108 relative to the greenback. Since then, it's moved to 119, right? That's a big move in a currency. Are there ways that I could use options, which are products I happen to be comfortable with, to craft exposure and to express an outlook? The answer is yes. And being able to do so in a way that remains dollar denominated matters to me. If you don't worry about potentially being left with an FX position where you have overseas currency risk, so be it, right? But what you need to understand is that there aren't like earnings issues in this situation. The yen doesn't report earnings, but there are Bank of Japan meetings and there are Fed meetings, as you know, that will have impacts on these currencies. And then there's inflation data, which does the same. So those are kind of your monthly or twice monthly in the case of inflation data in the US. Every 6 weeks, a Fed meeting that you need to be aware of, right? You can analyze realized volatility versus implied volatility for all of these things. British pound vol got very, very high on a relative basis and has since come off quite a bit, right? You can get filled mid-market in any of these. You don't have to sell bids and pay offers. So they are They should have a familiar feel for anyone that's used to and any history of trading equity options. Now, a lot of lead into like, all right, what's covered? What's the tickers? Right hand side, you can see the Aussie dollar, British pound, Canadian dollar, euro, yen, kiwi, and Swiss franc. You have the symbols. They're pretty easy in that your kind of base is X, like X-ray, D in all of them, and A is Aussie, B is British, C is Canadian, E is euro. N is the only tricky one for yen, and then New Zealand and Swiss franc. They, as I write here, could be potential tools for diversification, for exposure to currency markets, which remain kind of front of mind in the current environment, as proxies for equity or interest rate exposure. You need to keep in mind that settlement prices are determined based on the spot market price for each of those respective currencies at noon Eastern time on expiration Friday. So like this Friday, noon Eastern time, that's pretty standard in FX and foreign currency, what's called foreign currency fixing periods. Historically, that went off like a London market, 6 p.m. London, 12 p.m. New York or something like that, right? So if there's a Friday holiday, that settlement value would be established on Thursday at noon, okay? Key points, all dollar denominated. You would not have risk in another currency after expiration, which can be the case with some futures crosses, like a euro yen or a pound euro cross settles into that like denominator, right? All of these are dollar denominated, and that's something that many US based market participants appreciate. These options have existed for decades. And at certain points in time, they have been some of the most actively traded issues on the PhilX exchange, which is someplace I traded for years, many moons ago. But you saw a shift where interest rates kind of remained right around that zero level and currencies didn't move a whole lot, but things have changed, and we have seen a lot greater interest in these on the part of individuals, institutions, and interestingly, a whole lot of wealth advisors where their clients are saying, I'm concerned about this. What could I do? So if there's questions here, absolutely ask. I'm wrapping up with a little recap here. And then there's some reminders of key dates from a currency interest rate standpoint on the right-hand side. But like I said at the jump, there are both positives and negatives to the relative strength that we've seen in the dollar over the past year. Generally speaking, a stronger dollar slows global growth because like 70% of all trade is dollar denominated. And so it makes that trade relatively more expensive everywhere else in the world. Understanding that currencies and domestic interest rate policies and economic outlooks are interconnected. I've highlighted how FOMC decisions and CPI data releases can impact these markets. I've highlighted that currency vol has been elevated relative to recent history, which presents both opportunity and risk. But on a relative basis, if you look at it relative to equity vol or something like that, it tends to be lower vol. Perhaps that's a good thing. These products are easily accessible in nearly any brokerage account in that you probably don't need futures permissioning, but you'd have to ask your brokerage firms as far as that goes. And that was really all I had to say on this. There is specific, more tear sheet type information here in that foreign currency options. I could talk. I pretty much am bumping up against time about Nasdaq 100 currency stuff, interest rate stuff, but I left a couple of minutes and I said I would answer questions. So if anybody wants to lob them at me, or I don't know how, I wish I had like some sort of banging music behind me to close this out. But otherwise, I will hand it back to the Benzinga crew.
Fine. Hey, Kevin, sorry about that. I lost my tab and I couldn't find it.
That's okay.
Yeah, that was a great presentation. We'll wait a few seconds here to see if we get any comments flying through the chat. Great show today, MD says. Thank you, MD. Easy Mike, thanks for everyone that tuned in. Again, obviously, NASDAQ. Where should folks just go to the NASDAQ website if they want to learn more? Or Kevin, you got a Twitter or something I can direct them to?
So we can be contacted at this top one, indexoptions@nasdaq.com. And then, yeah, like NASDAQ is your starting point for any of this, like whatever your search engine is. Do I have a Twitter? I do. Do I put out a whole lot about market stuff? I do not. I work in a highly compliant world, and generally speaking, the risks outweigh the potential rewards there. And
so what's your Twitter feed? Is it
music and stuff?
Okay, music. I was gonna say, is it cat pictures? Is it grilling? It's got to be something if it's not market related.
I would describe it as some market stuff interspersed with some music stuff and periodically some sports stuff. I'm a Chicago guy.
Okay, you're Chicago.
Yeah.
Okay, so hopefully you're not a Cubs fan. I'm a big Cardinals fan.
Well, I mean, you guys put us to shame. You travel well to Wrigley. I don't dislike. I respect the Cardinals as an organization. They do it well.
Ooh, love to hear it. We're up in Detroit, but I love Chicago. A lot of my friends from St. Louis now live there. A lot of my friends from college now live there. So I was down there last weekend. I'm down there quite frequently. Chicago is an amazing place. What kind of music do you tweet about? You strike I could see you being into like jam bands, maybe like a Pink Floyd.
Are you seeing that behind me because you see a fish?
No, there's fish right there. There's fish right there. I was right on the money. I don't know. I just had a hunch and I was right.
So I have eclectic music tastes. I see live music regularly, and it's not just limited to jam bands. Like I will go see Tom York and Johnny Greenwood from Radiohead are playing as The Smile. I'll go to that in a couple weeks. I see a lot. Mm-hmm.
Awesome. Well, I love that. All right, Kevin. Well, I'll let you go. Enjoy the rest of your Wednesday. Great presentation. Thank you for joining us on our boot camp. Take care and thank you again.
Thank you for having me. It was fun. I appreciate everybody listening.
Woo. All right, guys. Kevin Davitt from NASDAQ. Again, you can reach them at that index options at nasdaq.com or find Kevin on Twitter if you want his takes on some music or whatnot. But don't expect too much market stuff, like he said. All right, guys. As you can see, it's getting dark behind me in downtown Detroit, Michigan, which must mean we're wrapping up the end of the day. We're getting toward our end here. So without further ado, let's go ahead and run through all we covered today. So we started with some live trading. Seasonax came on to talk about seasonal trading, what to expect from the market during different times in the year. And then we talked about leveraged and inverse ETFs with Dave Mazza from Direxion and Gianni DePoci. After that, Ophir Gottlieb joined us from Capital Markets Laboratory. Chapter 5 was just hanging out with Mitch and I. Then Rob Roy came on and we talked about option spreads with Rob's. Chapter 7, we were chatting a little bit. And then Chapter 8 was the last but not least, Kevin Davitt from NASDAQ. Woo! Shout out, Kevin. And now, again, we are running to the end here. So I want to thank everyone one final time for who joined us today. Smash the like if you have not already. Subscribe to the channel if you have not already. And with that, I bid you adieu. I bid you well. We will be back tomorrow, 8 a.m. for pre-market prep. As always, till then, stay green and take care, Zinger Nation.